Namaste, good evening. Welcome to the R2C sessions of CA Final. Three major subjects of CA Final will be conducting R2C this time. Of financial reporting, I'll be handling today, and SCMP on Thursday, and next week, Monday, Tuesday, if required, Wednesday. The big subject, DT and international taxation, the seventh subject. Welcome to each one of you, including our YouTube viewers. Now, the first subject, the most important subject, the beautiful subject of CA Final is financial reporting. Why important, beautiful, I don't have to mention, because all of you are going to be chartered accountants. And for chartered accountants, if accounts is not important, what else is important? I think that itself answers the question. Now, thanks to the new scheme, because now when I'm sitting and talking, I cannot talk about old versus new. It's only new. Everything is new. And new scheme FR, first point, is 100% easier than old scheme. Because I taught FR from the first, stage of my teaching career. CA Final, CA Institute, I started with FR only, that is accounts at that time. And till date, okay, by comparison, if I say FR new scheme is at least, I can say, if I compare old scheme as 100, okay, this is a 70% standard, okay, so much easy. So point number one. Point number two, 1 plus 4 questions to be answered. That is enough for everything, okay. So 1 plus 4 questions to be answered. Some of our friends would have discontinued earlier because you are not able to complete the paper. Now at least you should be able to complete the paper in a better way. Third point, FR and SFM. I want you to aim at 100, work for 100. One paper, if you get above 80, one group is done. Two paper, that is FR and SFM. If you get above 80 two papers, you are a CA. Because second group also you're done. 80 into 2, 160. Then 40, minimum 40. Okay, into other 6, 240, you are a CA. That's it. Okay. That's why these two subjects, put your extra effort and ensure that you are always aiming at 100, end up even at 80, 95. Maybe if you end up with the even IDT, costing, and other paper also above 80s, and other paper regional 60s, you may be top rank holder. That is what you called idealistic dream. You can always chase it. But first target is FR, the 100-mark paper. Ready? And it is easy. And probably next 3 hours, I'll be taking you to the how to go through the FR paper. Then what are the important aspect of each topic what we are going to have, and I'm also going to tell you what kind of questions are going to be asked. Probably if time permits, we'll go through July 21 suggest the answer, and if time permits, then December 21. In the material which I'm going to give you, December 21 suggest the answer is given. My suggestion to all my friends who are writing the exam, go 1 year back. So like Bhumika is writing in May 22, she should go to May 21, rather it is called July 21 exam. Whereas Ashish is writing in November 22, he has to take the December 21 suggest answer as the base for every subject. Okay, do not take immediately preceding paper. Immediately preceding paper for format you can see, because if there is any format changes, etc. But the base for preparation should be exactly 1 year. So with this, are you ready? All of you with Josh?
Yes, sir.
Full
Yes,
Josh.
sir.
Yes,
Okay.
sir.
Yeah, I know. How is the Josh anta kade ಏನು ಹೇಳ್ಬೇಕು ಸ್ವಪ್ನ?
Hi, sir.
ಹಂಗೆ ನೋಡಿ, ಐ ಲೈಕ್ ಇಟ್. ನೋಡಿ, ನಿಮ್ಮಂತವರು ಒಂದ್ 2 ಜನ ಇದ್ರು ನಮ್ಗೆ ಫುಲ್ ಜೋಶ್ ಇರುತ್ತೆ. ವೆರಿ ನೈಸ್. ಥ್ಯಾಂಕ್ ಯು ಮಾ. So nice of you. Yeah. Asked height iದ್ರೆ I was thinking 8:30 because 9 o'clock ಅಂತ. It all depends on you. You decide. So if you have to leave at 9 o'clock, that means you have done a good job anta. Okay? Fair enough. FR revision material. Keep a notes book ready, that a book which you are supposed to keep it for the revision just before your examination. FR in your first paper, 2 days before that, and every other paper, 1.5 days. That 1.5 days revision matters a lot. That's why prepare and keep it. Keep that book. That one book is like a Bible, Gita, Quran. Okay, so 1.5 days before the exam. So like that kind of book you are supposed to write. What I'm going to discuss here. Whatever extra point you want to write, this material anyway I'll be sharing. You can take the print and keep it. Probably costing I'll try to share it today or tomorrow. You can take the print before the costing revision itself. Okay, and keep writing wherever required. And your office people who are the in charge, make a note of every topic. I'll be giving important areas and what is the kind of question that will box a lot. Okay. So this is a beautiful, colorful material. Okay. Thanks to Aditi, Grishma, and Santosh. One of them have done this. Okay. And also Srinija was done it, I think SCMP and DT. Thanks to them. Okay. And thanks to the persons who have reviewed it. So FR paper is mainly India's CA final level. Okay. Only new scheme. Okay. And 5 marks here and there, integrated reporting and CSR. Entire syllabus is company accounts. Entire syllabus. Because India's is only for companies. Integrated reporting and CSR also for company. Entire syllabus of CFL is company accounts. So this is a subject index with the skeleton. Definition of accounting, just to understand, it is RCSI. You go to the 10th floor, but foundation you don't forget. Recording, classifying, summarizing. From there, the title of the subject, financial reporting emanates. So initially it was recording and classifying and summarizing. Now it is more of a reporting and obviously interpreting the financial results. Financial statements of a company, somewhere you may have to make a reference, maybe in auditing, maybe in law, maybe in accounts, I don't know. And this discussion will also help you out in auditing and law. 2 within bracket 40, read with section 129, deals with the financial statements of a company. Balance sheet, here they use the word P&L account. In the format, they use the word statement of P&L. Illi, they use the word P&L account or IND account for NPOs. Cash flow statement, SOC, statement of changes in equity, then explanatory notes forming part of financials. OPC, small company, domestic company, need not prepare cash flow statement. So cash flow statement need not be prepared. Now, the statutory reference, section 129 says, at every AGM, financial statements which should give a true and fair view, the auditing word, true and fair view, okay, has to be laid down, which has to be approved by the shareholders. ADAA, for ordinary businesses, which has to be passed in the AGM. Adoption, approval of the financial statement, dividend declaration, approval of the financial, appointment of the auditors and fixing their remuneration, then appointment of directors, fixing their remuneration, they will only fix it. Then financial statement format is given in Schedule 3 of the Companies Act. So it is applicable to all the normal companies and electricity companies. So there may be a possibility of saying Karnataka Power Corporation Limited financial statements present. Electricity company cut by electricity companies, you don't have to go by Electricity Act, you have to go by Companies Act of 2013, Schedule 3 only you have to follow. Section 133 says that every company must follow applicable accounting standard notified. Now it is India for the big companies. Banking, insurance company, there is a separate format because they are the special companies. Right. So the same thing I had given in a format again, just for a clarity purpose. In auditing, you have got banking audit, insurance audit, etc. That's why I have a reference check. So general companies and electricity companies, Schedule 3. Banking companies, you have to go by BREA 1949. Insurance company, you have to go by IRDA 1999. Non-corporate may not be relevant for us. Consolidation as well as normal standalone financials both have a same format. Same, there is no separate format prescribed. Only thing is one or two extra words you may have. Non-controlling interest, if you are Division 2. Division 1 only, they would have used the word minority interest. That's it. Now, Division 3, Schedule 3 has got 3 divisions. So 3. Roman number 3 talks about schedule number, and it has got a division. Division numbers are also in Roman numbers. Right. So, right. Division 3. Schedule 3 has 3 divisions. Division for chota mota companies. Everything what I'm talking today is only company account, nothing other than that. For non-India's companies, Division 2, what is your syllabus? Division 2, your syllabus is for India's companies, and Division 3 is for NBFC, which we may not have to touch it. Part 1 and Part 2, in all the 3 for that matter, all the 3 accommodate, all the 3, okay. Part 1 talks about balance sheet. Additionally, we may have a SOC if it's a Division 2. Whereas what you are discussing, and Part 2 is statement of P&L. Here the word is this statement of P&L. OCI, other comprehensive income, is also shown at the end of the division 2 P&L. And India's applicability, 1617 is the phase 1. From 1718, every listed company has to follow, and every unlisted company whose net worth is greater than 250 crores, net worth greater than 250 crores must follow. Fine. So that will not bother. Division 1, I'm not very sure that they will ask question on division 1, but nevertheless study and go, because CA is always unexpected. Okay, glance and go. That's why we'll just touch it, Ashok. We'll not go in detail. Okay, so we'll just touch it, because there is a possibility that they might give a practical division 1, because what we are doing, most of us in our office, and there are some mistakes, rectify the same. So there's a possibility of they asking questions on it. That's why we'll go through it. Division 1, part 1 is balance sheet. Part 2 is statement of payment. Part 1, balance sheet starts with the equity and liabilities. On the top, wife, husband, down, division 1. Okay, equity and liabilities. And down we have assets. So on the top, Sri Rama and Sita necessary for capital. A simple format what Citizen has coined. Shareholders funds, share application money pending allotment, non-current liability, current liability. That's it. Same thing on the asset side, non-current asset, current asset. First point. So then under each subheading, okay, we have the items to remember. Okay, we'll just go through it and then we'll come back to that. So shareholders funds, share application money, non-current and current. Then Sri Rama and Sita necessary for capital. So Rama used monkeys. Share capital, reserves surplus, money received against shareholder. Long and deferred operation with the help of Lakshman shortly triumph over Sri Lanka. This is the format. Long-term borrowing, short-term borrowing. Other non-current, long-term liability, other current liabilities. Then long-term provisions, short-term provisions. Special item. Special item.
DTF.
Deferred tax.
I'm done. I'm just trying to color it. Yeah. So deferred tax liability is always non-current. Then the trade payable is always current. Trade payable, both division 1 and division 2, there is some extra disclosure. CA course is not about tallying the balance sheet. It is about how well you tally the balance sheet. That matters a lot. So trade payable, creditors and bills payable together. Outstanding dues of micro enterprise and small enterprise. Medium barodila, micro and small. Note it. Micro and MS only. MED barodila. So, and total dues other than that. So MS has to be shown separately and other than MS has to be shown separately. So this one, I give a simple format here. Sri Rama and Sita necessary for that much only you learn. Only this much. Don't go too much into that because it may not be asked. But if they ask, you should be ready. So Rama used monkeys, long and deferred operation with the help of Lakshman, shortly triumph over Sri Lanka. This is the liability side. Asset side, when they came back with a big celebration, new life in capital, non-current asset and current asset. Peers, near and dear ones, loved one and all. Citizen insisted test, came out Sita with the originality. So PPE, so unfortunately they are presenting tangible and intangible under PPE. Tangible should be PPE. Then intangible, capital work in progress, intangible asset. Then, so PPE as well as deferred tax asset, they are always non-current. Whereas when it comes to ITC, ITC is always current. ITC's inventories, trade receivable, cash and cash credit. As far as division 1 is concerned. Division 2, I'm going to change. So new life in capital. So PPE, non-current investment, current investment. The long-term loans and advances, short-term loans and advances. Other non-current, other current asset. Special items, PP and deferred tax is always non-current. ITC is always current. This is the format of the balance sheet. Reasonably comfortable. Sri Rama and Sita necessary for capital, new life in capital. Next comes your P&L. So division 1 and division 2 P&L, 90% same. Only at the end we add something extra. 90% same. So particulars, note number, current year, previous year, revenue from operation, ROTE, revenue from operation, other income total, then expenses. Now visualize your traditional trading account of the PUC. Trading account only used to write opening stock, purchases, direct expenses, sales, closing stock. This one only is written at the beginning. Revenue ho gaya, First, raw material consumed. So inventory is concerned, raw material opening and closing stock has to be adjusted here only. Whereas purchase of stock in trade is a separate item. Changes in inventory of the finished goods, opening and closing, it is nothing but opening minus closing. Plus agato, plus lico, minus agato, within the bracket, right? I was telling repeatedly in the recent past, in entire CA course, wherever there is a negative figure, Sharanya, you write within the bracket. Which is anything, whether the FSFM account, whatever, within the bracket. Even if you write less, it's okay for me. I don't have problem. Okay. But Shilpa, so wherever there's a negative figure, what you write? Write within the bracket. I hope everybody is understanding. Right. So when you talk about inventory, so those who want to scribble down, you can scribble down. There are 4 major categories of inventory now. Raw material, WIP, finished goods. Now, stock in trade is different from finished goods. I'm a manufacturer of caps t-shirt. This is a finished good. I'm a manufacturer of a pant. So then finished good. Whereas if I'm manufacturing t-shirt and purchasing and selling pant, then it is called stock in trade. I am buying and selling. That's why it's called stock in trade. So raw material ka vidya should be coming as a first item. Opening stock of raw material plus purchase minus closing stock of raw material. Whereas WIP finished goods, you should not write that. Third item, opening minus closing of WIP finished goods stock in trade. Plus item, plus lico, minus item, which is the brackets. Understood? Fine. So wherever there's a negative figure, Bhumika, you should write within the bracket. Purchase of stock in trade is second item, ABC. So first 3 items are inventory related. So in the order, because the same thing will come in the division 2. I'm not going to waste my time on that. Raw material, purchase of stock in trade, pant. Then what you wrote in a trading account? Then you wrote direct material ke baad direct labor you wrote, cost sheet, whatever. Same way you have direct expenses of the employee benefit expenses. So now salary irbodu, PF irbodu, staff welfare, all those you write. Then comes finance cost. Finance cost go by Ind AS 23. Okay, same definition. Okay, so Ind AS 23 nalli borrowing cost means IFE. So almost similar. Interest cost, then finance lease related cost, then exchange related cost, almost same word. Then depreciation and amortization for tangible and intangible, other expenses. So this should be in the order. This is the total expenses. Remove the same, you get PBET. Remove exceptional item, you get PBET. Only in division 1, we have extraordinary item. Division 2, we don't have extraordinary item. It is prohibited in IFRS and Ind AS. Extraordinary item, PBT, then adjust the tax, including the MAT credit, etc. This is a profit from continuing operation. Then discontinuing operations ka profit less karo, total operation. Then just to show the EPS, basic and diluted. This is the P&L. So rotate, keep on removing one by one item. That will give you PBET, remove exceptional item, remove extraordinary item, remove tax, PAT, continuing operation, then add up, divided by number of shares. That's called basic EPS or diluted EPS. For P&L also, I think there's something given on the top. Yeah, I think it's not printed. It should be printed, Vishma. Okay. So this one is P&L, rotate, revenue from operation, other income, total, expenses, then PBET, then keep redoing it. Okay. That has to be adjusted. Fine. Now the most important, our syllabus. What is that our syllabus? Sorry, our syllabus is division 2. Division 1 can still be asked. Glance it and go. Okay. So division 2. ನೋಡಿ ಅವರ್ ಸಿಲೆಬಸ್ ಶಿರೀಷಾ ಬಂದ್ಬಿಟ್ರು ಅಲ್ವೇನೆ ಆಗಲಿಂದ ಬಡ್ಕೋತಾ ಇರಿ ಶಿರೀಷಾ ಅಂತ ಎಲ್ಲೇ ಹೋಗಿದ್ದೀರಿ ಫ್ರೆಂಡ್ ಸರ್ಕಲ್ ಸಿಕ್ಕಿದ್ರು ಅನ್ಸುತ್ತೆ ನಮ್ಮವರು ಕೆಲವರೆಲ್ಲ ಅಲ್ವಾ ಅದಕ್ಕೆ ಕಂಟಿನ್ಯೂ ನಾವು ಡಿವಿಷನ್ 2 ಓಕೆ ಸೊ ಟ್ರೆಡಿಷನಲ್ ಫಾರ್ಮ್ಯಾಟ್ ಅಲ್ಲಿ ಓಲ್ಡ್ ಫಾರ್ಮ್ಯಾಟ್ assets husband on the right, wife left, then wife fought. I want on the top, wife on the top, husband down. Now again husband on the top, assets. So division 2 nalli husband is on the top. It may be stupid, funny, marks baratalva, accept it. That's it. Okay. So at this time we are not going for concepts etc. We are not going for a understand. Now it is pure marks oriented. Till all the days I was always telling concept knowledge. Now next whatever the months you have, okay, exam oriented, pure, because once you get a qualification, but again we'll get back after becoming CA. We got CQ bantide, captured community, where we discuss some of the things which no one has an answer. Atara points illi. So now who is on the top? assets. Bhumika, assets. So assets on the top. Ashok, yes, I am on the top. Yes, sir. So Hasna band ho gaya, husband ka. So assets on the top. Because all these things today you will not find importance. Exam all alli sudden doubt balte. Oh, liability top assets. Two reasons you can remember. One is I told you now, assets, husband is on the top. Next one is, see one of the questions there. At least then one question where the format would have been given. For your bad luck, if they would have given division 1 format and asked division 2, labo. I can't help it. Okay. Otherwise, if you're smart enough, one of the questions there will be a format, maybe consolidation irbodu, amalgamation irbodu. But totally don't bank upon it. Remember, husband on the top. Husband on the top. Your husband, you be happy. Girls, where are you gurasing? I'm talking about your husband. You don't want your husband to be on the top? Shilpa? Yes, see, I know. Namdu kebeku, bear out the bed. Vidya, don't worry. Out of syllabus. Now, first we have assets, same format. And then we have equity and liabilities. Assets, we have non-current on the top. Current, same. Non-current, there are 10 items. So, India's, from the financial statement point of view, the striking factor is more and more disclosure, more and more presentation. Understand, India's is borrowed from IFRS. Across the globe, people may not be what you called as intelligent as Indians. Like in Pakistan, they will ask a question: who is the Prime Minister of our country? A student will write, while I am writing the answer, this is Imran Khan. So while valuing, there's one more. I was shocked. Today I got some message because I don't watch the news sets and almost stop. But it'll pop up on the Prime Minister change Pakistan. They change IPL it change so film actors hero girlfriend change okay, it's okay, no problem. We are happy for that, isn't it? Okay, oh, happy for the downfall. Really, we are not bothered. So when you talk about the balance sheet, more disclosure. Only if you see non-current, hardly 5 items. You're huge, Ashish. How many items, sir? 6 items. Is to Shashank? 6 plus 4. Sorry, here it's 10 items. I'm sorry, 10 items. 6 items for fixed asset only. 6 items for fixed asset only. Other 4 items, other Kanji items. So elaborative discussion. Okay. Now every standard which I'm going to discuss little later, you have to connect it to these financials. Every standard. My regular students who attend the regular class, in the original balance sheet, we have written the standard number side by side. Okay. So this is how every standard you have to connect it to the financial statement. Maybe we can draft extract of the balance sheet for India 23, extract of the P&L for this. Keep writing. Trust me. See, valuer may feel like giving 124 out of 124, but anyway, you'll control and give 124 marks. You may carry forward and give it in auditing and law. Okay. That's the way you present. Okay, Sirisha, happy? Vidya, be happy, ma. So first 3 items are tangible. Next 3 items are intangible. PPE, capital work in progress, means capital expenditure work in progress. Building under construction. So easy. Work in progress is what? Work in process. So now capital work in progress. Vidya, Deepa, capital expenditure work in progress. Capital expenditure, building under construction, machinery under construction. Investment property, India's 40. India's property, India's 40. Okay. It is mainly a PPE, land, building, or both, but classified as investment property for a different reason. So that's why first 3 are intangible. Next, most important, permanent, non-depreciable, intangible assets. I covered so many points. Goodwill now no more depreciable. Whether it's accounts, whether it's a income tax, no more depreciable, no amortization, no depreciation. So goodwill. Then any other intangible asset, KPTCL-F. Any of my new friends listening? So intangible asset, best examples are KPTCL-F. Goodwill, admele know-how, technical know-how. ये bike कैसे manufacture करना है? Then patent. So trademark. I can save some energy. You can respond. I'm very happy.
Copyright.
Copyright.
License. Franchise.
Other assets of the similar nature. Okay. So all of them are intangible, real assets, which are subject to amortization. Goodwill, except goodwill. Goodwill cannot be amortized. Indias. We are purely in Indias now. Okay. Don't get confused. So other intangible asset, then intangible asset under development. So we are developing some patent irbodu, technical know-how irbodu. Then even if you ask me, seventh item is also emanating from India's 16. Yaudu biological assets alle barutte, PP nalle barutte. Biological asset other than wherever plants. Biological assets means which has a life, living animal and plant. Yes. Living plant, everybody, plant is always living because if it is cut, it's called wood or timber, whatever you call. So then comes the most beautiful classification. India's 109, Asha madam. Financial instruments are going to guide your FR syllabus at least 30%. So it will be a little more also. Easy there, okay, but important. SFM and financial instrument go hand in hand, go through it in detail, okay. So every major head, there is a financial item. Sir, I have forgotten, I have blackout on. Some people say, sir, example blackout are there. At least on the white in marco, yen white in prati head alli financial ide. Non-current alli financial asset ide. Current alli financial ide. Non-current liability financial liability ಇದೆ, current liability 4 ಐಟಮ್ ಬೈ ಆಟ್ ಮಾಡಬಹುದಾ? ಎಂತ ಬ್ಲಾಕ್ಔಟ್ ಅದು ಸುಮ್ಮನೆ ಬ್ಲಾಕ್ಔಟ್ ಅಂದ್ರೆ ಓದಿರಲ್ಲ, ಏನೋ ಟೆನ್ಷನ್ ಆಗಿರುತ್ತೆ, ಅನ್ವಾಂಟೆಡ್. ಓಕೆ, ದೇರ್ ಇಸ್ ನೋ ಕ್ವಶನ್ ಆಫ್ ಬ್ಲಾಕ್. ಐ ಡೋಂಟ್ ಅಂಡರ್ಸ್ಟ್ಯಾಂಡ್ ದಟ್. ಆಕ್ಚುಲಿ ಇಟ್ ಡಸಂಟ್ ಹ್ಯಾಪನ್ ಟು ಎನಿವನ್ ಆಲ್ಸೋ. ಸೊ ಆತರ ಆದ್ರೂ ರಿಲ್ಯಾಕ್ಸ್, breathe in, breathe out for 2 minutes, ಎಲ್ಲ ವಾಪಸ್ ಬರುತ್ತೆ. Nothing called blackout. Okay, only thing is you think about black, then blackout only may happen. I don't know. Okay, so which are the minimum 4 items which you know now in the balance sheet? Financial, asset and liability, non-current and current. I hope that much at least everybody can understand. Yeah, so that means as important, no other item appears in the balance sheet. Like every subheading financial is there. No other item. So extremely crucial. Financial reporting, financial instrument, financial assets and liabilities. How you present, extremely important. So under non-current asset, we have ITL. Investments is a financial asset. One person's asset is one person liability. That's what the definition of financial instrument. Okay, fine. Trade receivable in our syllabus. Who are we now?
Division 2.
It can be non-current or current. Whereas under division 1, I said ITC is always current. Whereas inventory, I never said it can be non-current. Inventory is always current. Whereas trade receivable can be, you know, current or non-current. Current or non-current. Are you understanding, Baba? So financial asset ITL, investments, trade receivable, loans, then deferred tax asset, always non-current. Okay, and last item, other non-current asset. Sorry, what HIJ? J is what? Other non-current asset. So first 3 tangible, next 3 intangible, special item biological asset, then FDO. So first 3 tangible, next 3 intangible, then BFDO ಅಂತ ಬಾಯ್ ಫ್ರೆಂಡ್ ದೂರದಿಂದ ಓಡೋದು ಅಂತ ನೆನಪಿಟ್ಕೋಬೇಕಾದ್ರೆ ನಿಮ್ಗೆ. ಇಲ್ಲಿ 4 ಐಟಮ್, ಲಾಸ್ಟ್ 4 ಐಟಮ್ ಏನು? ಫಸ್ಟ್ 3 ಟ್ಯಾಂಜಿಬಲ್, ನೆಕ್ಸ್ಟ್ 3 ಏನು? ಇಂಟ್ಯಾಂಜಿಬಲ್, ನೆಕ್ಸ್ಟ್ ಬಾಯ್ ಫ್ರೆಂಡ್ ದೂರದಿಂದ ಓಡೋದು ಅಂತ ನೆನಪಿಟ್ಕೋಬೋದಾ? BFDO ಅಂತ ಗೊತ್ತಾಗಿಲ್ಲ ಸ್ವಪ್ನ? ಟೆನ್ಷನ್ ತಗೋಬೇಡಿ ನಿಮ್ಗೆ. ನೆಕ್ಸ್ಟ್ ಕರೆಂಟ್ ಅಸೆಟ್ಸ್, ಇಫ್ಕೋ ಅಲ್ಲ, ಇಫ್ಕೋ. ಏನ್ ಇಫ್ಕೋ ಅಂದ್ರೆ ಇನ್ವೆಂಟ್ರಿ, ಅಲ್ಲಿ ಡೆಫರ್ಡ್ ಟ್ಯಾಕ್ಸ್ ಇಸ್ ಆಲ್ವೇಸ್ ನಾನ್ ಕರೆಂಟ್. ಕರೆಂಟ್ ಟ್ಯಾಕ್ಸ್ ನೇಮ್ ಓನ್ಲಿ ಸೇಸ್ ಇಸ್ ಆಲ್ವೇಸ್ ಕರೆಂಟ್. ಮನಸ್ಸ ವೆರಿ ಗುಡ್, ಆಲ್ವೇಸ್ ಕರೆಂಟ್ ಅಷ್ಟೇ. ಬಟ್ ನೀವೇನ್ ಹೇಳ್ತೀರಿ? ಕರೆಂಟ್ ಅಸೆಟ್ ಹೇಳಿದ್ರೆ ಯಾರೊಬ್ರು ಕರೆಂಟ್ ಅಸೆಟ್ ಹೇಳಿದ್ದಲ್ಲ, ಅದು ಕರೆಂಟ್ ಟ್ಯಾಕ್ಸ್ ಅಸೆಟ್ ಹೇಳಿದ್ರು. ಏನೋ ಸೆಕೆಂಡ್ ಗ್ರೂಪ್ ಶುರು ಆಗಿದೆಲ್ಲ ಟ್ಯಾಕ್ಸ್, ಕರೆಂಟ್ ಟ್ಯಾಕ್ಸ್ ಹೇಳ್ಬೇಕು. ಯಾರೋ ಕರೆಂಟ್ ಅಸೆಟ್ ಹೇಳಿದ್ರು ಬಿಡ್ಲಲ್ಲ, ಹಂಗೆ ಇಟ್ ಸರಿ ಕೇಳಿಸ್ಕೊಂಡಿಲ್ಲ ಅಂತ. ಅವ್ರದ್ದು ಎಲ್ಲ ಸಾಧಾರಣ ಹಂಗಿದ್ರೆ ಸಖತ್ತಾಗಿ ವರ್ಕ್ ಆಗ್ತಾ ಇದೆ. ಸೊ ಇಫ್ಕೋ ಅಂದ್ರೆ ಏನು? ಇನ್ವೆಂಟ್ರಿ, ಫಿನಾನ್ಷಿಯಲ್ ಅಸೆಟ್, ಕರೆಂಟ್ ಅಸೆಟ್ಸ್ and other financial assets. Same ITL is there. Here if you interchange also it's okay. ITC BLO ಅಂತ. ITC ಗೊತ್ತಲ್ವಾ ಯತೀಶ್ವರ್? ಏನೋ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ಸ್, ಟ್ರೇಡ್ ರಿಸೀವಬಲ್, ಕ್ಯಾಶ್ bank balance other than this, because cash equivalent include bank balance also. BLO. So remember the format. So asset side, shall we just visualize? First 3 tangible, PPE, capital, then
investment property.
And other 3 intangible, goodwill, other intangible and intangible. ಅಲ್ಲೇನೆ ಬಾಯ್ ಫ್ರೆಂಡ್ ದೂರದಿಂದ ಓಡೋದಂತೆ. ಯಾಕೆ? ಸೊ ಬಯಾಲಜಿಕಲ್ ಅಸೆಟ್, financial
Other
ಸೊ ಅದೊಂಥರ ಅದರ್ ಎಲ್ಲ ಕಡೆ ಅದರ್ ಇದ್ದೇ ಇರುತ್ತೆ. ಇದು ಲಾಸ್ಟ್ ಟೈಮ್ ಇದಾಗಿತ್ತಲ್ಲ, when Sharanya was in third standard, okay, now she is reading well. ಅದಾಗ she was not reading well, so teacher called, ಏನ್ರಿ ನಿಮ್ ಮಗಳು she has got all single digit ಅಂತ. ಸೊ ಪೇರೆಂಟ್ಸ್ ಹೇಳ್ತಾರೆ ಪರವಾಗಿಲ್ಲ, ಟೋಟಲ್ ಅಲ್ಲಿ ಡಬಲ್ ಡಿಜಿಟ್ ಬಂದಿದೆ ಸರ್, ಏನೋ. ಸೊ ಆತರ. ಸೊ ಇರ್ಲಿ, ಎಲ್ಲಾ ಕಡೆ ಅದರ ಒಂದು ಇದ್ದೇ ಇರುತ್ತೆ, ರೈಟ್. ಸೊ ಸೊ ಟ್ಯಾಂಜಿಬಲ್ 3, ಇಂಟ್ಯಾಂಜಿಬಲ್ 3, ಬಾಯ್ ಫ್ರೆಂಡ್ ದೂರದಿಂದ ಓಡದ. ನೆಕ್ಸ್ಟ್ ಕರೆಂಟ್ ಅಸೆಟ್ ಅಲ್ಲಿ ಇಫ್ಕೋ. ಏನ್ ಇಫ್ಕೋ ಅಂದ್ರೆ ಇನ್ವೆಂಟ್ರಿ,
financial assets, other current assets,
very excellent. Financial asset and current
tax assets, and other
tax asset.
Current
tax asset.
Current asset. Other current asset. So under so next one is, what is that? Sorry.
other current assets.
ನಮ್ಮ ಕಾಲರಿಗೆ ಸ್ಟೂಲ್ ಇಟ್ಕೊಂಡಿದ್ದು ಅದು ತೆಗೆದ್ಬಿಟ್ಟವ್ರೆ. ನೋಡಿದ್ರೆ ಮಾಸ್ಕಿಟೋ ಹುಡುಕ್ತಾವ್ರೆ ಅಲ್ಲಿ ಇಟ್ಕೊಂಡು. ಯಾ, ಕಮಿಂಗ್ ಬ್ಯಾಕ್. ಇಲ್ಲಿ ಕಮಿಂಗ್ ಬ್ಯಾಕ್. ಎಲ್ಲಿದೀವಿ? ಎಲ್ಲ ಒಂದ್ ಕಡೆ ಇದೀವಿ. ಶಿರೀಶಾ ಜಿ ಕೇಳಿಸ್ತಾ ಇದ್ದೀನಿ ಮತ್ತೆ ಕೇಳಿಸಿ. ಏನೋ. ಸೊ ಏನೋ ಕಮಿಂಗ್ ಬ್ಯಾಕ್. ಸೊ ಅಂಡರ್ ದಿ ಫಿನಾನ್ಷಿಯಲ್ ಅಸೆಟ್ ಯು ಹ್ಯಾವ್ ಟು ಗೋ ಬೈ 6 classification again, because extremely important. ಏನದು? ITC, BLO. Okay na? Right. Then comes equity and liabilities. Under that equity share capital should be given a special treatment. Equity share capital is the first item. Then other equity. Other equity you have to give the SOCI and the format. Here only if it is a consolidated, extra the non-controlling interest. Just below this you write non-controlling interest. Then comes again liabilities. So liabilities can be non-current and current. Right. Non-current and current. Non-current only FPDO, financial liabilities, provisions, deferred tax liability, other non-current liabilities. Same item here, FOPC. They interchange this item, FOPC. Now to remember easily, deferred tax asset liability is always non-current. Then current tax liability is always current. Everything can be current and non-current. Financial liability, other current liability, other non-current liability. Then provisions. Can you remember, Baba? So everything else is same. This is about the balance sheet format. Again, trade payable. I don't want to waste my time. MS Matra, micro and small. Microsoft ಮಾಡ್ತಾ ಇದೀವಿ ಅಂತ ಅನ್ಕೊಳ್ಳಿ. Medium ಹಾಕಂಗಿಲ್ಲ, medium ಇಲ್ಲ, mini ಇಲ್ಲ. ಕೇಳಿಸ್ಕೊಂಡ್ರಾ? Yeah. So disclosure is very, very important. Then P&L. We don't have to write on the top continuing operations, unlike division 1. Start straight away or rotate. Revenue from operation, other income, total income. Earlier total revenue anta barita idvi, ಈಗ total income. Expenses absolutely shame. PBET, exceptional item. There is no extraordinary item, I told you. So tax expenses, current tax, deferred tax. Sir, math bande illa. You can use the brain. Ashish ಎಲ್ಲೋ ಇದೆ. So math ಏನಕ್ಕೆ ಬಂದಿಲ್ಲ? Because it is an IFRS copy paste here. MAT may not be there in every country in the world. Common sense. MAT may not be there. We may have CHAPE. They may have MAT. We don't know. That's why MAT cannot. Deferred tax is there everywhere. Okay, Vidya. Deferred tax is there even in Nepal. That's why we write deferred tax, but there is no necessity to write etc. Then profit from continuing operation, they said. Then they talk about discontinued operation without any heading. Profit from discontinued operation, tax expense, discontinued operation. Then comes the total profit. This is the first link. There are two approaches when they initially wanted to introduce the financial statements. There are two approaches they wanted to follow. Balance sheet as well as P&L. Single statement approach or double statement approach. Single statement means what you are following, okay, in the P&L. Now I'm going to discuss everything in the P&L. Double statement means, like in the balance sheet, I said there is a separate statement called SOCI. SOCI is nothing but reserves and surplus with the columnar presentation. Opening balance, addition, deletion, closing balance, dividend, appropriation also, right? There's a columnar presentation. Now, P&L, we are going by single statement approach. Main P&L as well as OCI, other comprehensive income, is a part of the P&L. Balance sheet only, we are going to have, that is your single statement, double statement, where other equity, other components of equity is shown separately as a schedule to the balance sheet. I was not clear. Balance sheet, we have assets, equity and liabilities. Other equity, you have to give a schedule separately, compulsory. That's called SOC. That means there are two statements. P&L only, main P&L, other part of the P&L, both are given in one statement. That means we are following mixed approach. Balance sheet, we are following double statement approach. P&L, we are following single statement approach. Understood? So in the P&L, main P&L we have, then we have OCI, other comprehensive incomes. The income which may not be the part of the P&L directly, actuarial gain irbodu, revaluation surplus irbodu, which should not be a part of the P&L straight away, show separately at the end. Important even for MAT. Okay, MAT allo barutte 115 JP nalli 2A, 2B, 2C as an amendment. Items that will not be reclassified, corresponding tax. Items that will be reclassified. So OCI, pakka OCI item which will never be reclassified to P&L, show it here. But then there are some items temporarily I show it here, then I may reclassify to the P&L account. Foreign exchange gain, initially you may not show it to P&L. Once the foreign operation is disposed of, you may transfer to the P&L account. If you remember, India's 20, which is the foreign currency? India's 21. So foreign operation,
21.
Operation, that whatever exchange difference, is a very good exchange difference, we'll keep it in a FCTR, some foreign currency translation reserve. Once operations are disposed of, as and when they disposed of, proportionate profit will be transferred to P&L account. So initially it will be in the OCI, Okita, then it will be transferred to the P&L account. So, and corresponding tax impact also you should. Then comes the total comprehensive income, normal P&L plus OCI, then EPS 3 into 2. EPS for earning per share, equity share for I think there's something missing here. Okay, it should be continuing operation. Something should be there. So EPS for
Continued and continuing operations.
Continuing operation, discontinued operation.
Continued operation.
Continuing. So there's one para is missing here. Okay. So continuing operation you should show, discontinued operation you should show, then discontinued and continuing operation. All the three under basic and diluted separately. So special point for the heroine. Ranya.
Division 2 and Ind-AS. No extraordinary item. Show OCI separately. EPS basic and diluted including negative. Continuing discontinued total. Consolidated financials.
Illi continuing discontinued. Unlike yes, they say don't say discontinuing. Discontinued. Total actually we are saying it should be used. We should use the word discontinuing and continuing operation.
Consolidated financial statement. Minority interest in Division 1. NCI in Division 2. Schedule 3 special point. Previous year figures unless first year of operation.
Compulsory. Fine. Then accounting standards. So for all the big companies, we are going to follow India's. I'm going to discuss. For others, if the company law stand, like ICS stand. Income tax ICDS 1 to 10 has to be followed. Everyone who is following accrual method of accounting. Then ICS stand, etc. You can go through it. Applicability of India's.
Applicability of Ind-AS phase 1 with effect from 1/4/2016. All companies listed or not having net worth greater than or equal to 500 crore. Phase 2 with effect from 1.
Net worth, what we are talking about. Net worth you are talking about. Net worth you are talking about. At the end of today's discussion, I am going to touch CSR. There I am going to talk about net profit also, turnover also, net worth also. So here, India's is based on the net worth. First time applicability based on net worth as on 31st March 2014, 2 years gap. Logical explanation I given. 2014 ka finalization will happen September 2014. So that means 14-15 you cannot take it. And 15-16 you can, if you want voluntarily you can adopt. That's the first phase is starting from 16, 17. Kab se? 16, 17. Hi. Hi, bro. Wait, क्या? पढ़ा सुनो सुनो. हाँ, अभी इंडियस करेंगे. Hi, hi बोलो. नहीं बोल रही है. Oh, she's not in the mood. हाँ, क्या जी?
She's troubling me. She's not allowing me to sit in the class.
It's okay. Enjoy. Children, no? Must मजा मारी. Okay. So, वो दे, वो share screen off ಮಾಡ್ಕೊಂಡು ಕೂತ್ಕೊಂಡವಳೆ.
Phase 2 with effect from 1/4/2017, where net worth is less than 500 crore to Aramark. All listed, unlisted companies net worth greater than or equal to 250 crores. Phase 3, all other companies date yet to be notified.
Yeah, so if you are a listed company, compulsorily you are covered now, whether your net worth is 200 crore, 300 crore. Only phase 1 only they said above 500 crore, 500 crore above. But phase 2 only every listed company is covered. Other unlisted companies are covered only when the net worth is more than equal to 250 crores. And when I say listed, it can be already listed in India, outside India, already listed or in the process of listing. Same thing again, and it covers JASH also, meaning JASH also. So, okay. So, phase 1, base date is 31st March 2014. Second point, after 1718, so from 1718, every listed company is covered. Every listed company is covered. Sorry. So the Indies, fine. And also you have to copy that IFRS series and India series 101, what I said in the regular class. Okay, relax. International Accounting Standard Committee. ಅವ್ರು ತಗೊಂಡಿಡುವಾಗ ಸಪ್ಪಾಗ್ಬಿಡುತ್ತೆ. ನಾನು ಕುಡಿಯುವಾಗ ಕ್ಲಾಸ್ಗೆ ಹೋಗ್ಬೇಕು. ಹಿಂಗೊಂದು ಮ್ಯಾನೇಜ್ ಮಾಡಬೇಕು. IASC was renamed from 2001 as IASB, International Accounting Standard Board. On a hyper, what you call excitement, they said from 2011 we'll enter into the IFRS across the globe. As usual, like all of us. So first 6 months only we start preparing for the exam after 2.5 years. Then after 2 years, we realize that we have not done even 10% of what we should have done. Then we will repent. That's okay. Can't help it, isn't it? So now when you talk about the Indies, so as of now, we have 16 plus 1 IFRS. So 17.1, we are not at the syllabus, that's why I'm not going to touch it. So those IFRS 1 to 16, we added 100. IFRS 1 is equal to Indies 101. IFRS 2 is equal to Sanjay, Indies 102. IFRS 3 is equal to Sanjay, Indies 103. So you add 100 to the 1 series. All other IAS, which are not yet converted into IFRS, continued as it is as IAS. We call it as Indies with the same number. For example, IAS 16 is equal to Indies 16. IAS 40 is equal to Indies 40. So IFRS series, you have to call it as 100 series, and IAS series has called it as a normal number 1 to 41 series. Understanding? So almost everything is there except 2 standard, probably 104, 10, then 117 or 106. Okay, so they are not in the syllabus. So let us glance through the number. Okay, one more point you should write is what? Once any one of them are covered here out of the JASH, okay, joint venture, associate, subsidiary, and holding company. So automatically they will all be covered. For example, holding company's net worth is 600 crore. Moment it is 600 crore, it's joint venture, associate, subsidiary. Everybody is considered as a India's company. They must follow India's. And once it is applied forever. That's it. So you can, sir, this year my net worth came down to 300 crore, 20 crore. Once it is applied, once you are married, That's it. Okay. There's no question of saying that, no, sir, I was married, but second day only my husband went to Dubai. It doesn't matter. Okay. It is still called, what you call it, married. So this is the title, which you can look into it later. ICDS I have given. the list just to glance it, which is similar to ICS standards. So Ind AS is almost like 95% of IFRS plus carve in minus carve out. Carve out andre deviation from what is given in IFRS. Some of them are mandatory. For example, under Ind AS 103, so IFRS 3 doesn't talk about common control transaction. There is no concept of pooling of interest method. Whereas Ind AS 103 says we have a concept called a common control transaction for which you can follow pooling of interest method. Next, optional means IFRS would have given you some options. For example, IAS 27. If that would have given you 3 options, but Ind AS says I will give you only 2 options. Elimination of policy choice. You have been given 3 options there, but here you have been given only 2 options, cost and fair value. Where IAS gives you 3 options, here we give only 2 options. That is called optional carve out. Carve in andre nande lidli anta. We wanted to give something extra from our angle. That is what is called a carve in. Additional point what we give is called carve in. As and when we discuss, we'll come across that. Goodwill and valuation of shares not in the syllabus, but go through it because it comes in Ind AS again and again, like 103, 110, etc. Some general part, just glance it. Don't go too much. Valuation of shares, all of you go through it. Very important. Syllabus में नहीं है, लेकिन we refer it again and again in the Ind AS. Okay, so before we get inside the specific standard, Sharanya has an expertise. What are the special points to be noted, which is common to almost all the standards?
Ind AS special points, guiding principles of IFRS or Ind AS, 2 remarks, fair value and substance over form.
Wherever you go, whether Vodafone network follows or not, I don't know, but these 2 network will follow. Wherever you go, fair value, substance over form. Fair value, measurement is as per 113, okay, Ind AS 113, but applicability as stated by respective standard. As respective, substance over form, don't go by mere formality, go by the true spirit of the transaction. Ashok, that is called substance over form. Continue.
The Ind AS question, make reference to Schedule 3.
Extremely important. Every Ind AS question, whatever asked, you give, just tell me what's Ind AS. Any Ind AS, just randomly, quick.
Ind AS 103. 103.
103. So 103 is a business combination. So in the first year of the financial statement, what we prepare as per division 3, okay, prepare just like a, what you call normal. However, you have to disclose following matters: 1, 2, 3, 4, 5, 6. Next, one more. Number 8.
Ind AS 33.
111.
33. EPS. So P&L extract. The bottom portion of the P&L, okay, EPS for continuing operation, basic and diluted. EPS for discontinued operation, basic and diluted. EPS for continuing, discontinued, then discontinued and continuing. Just show that extract. Every time you have to collect it. Every time you have to correct it. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? ಏನು ಅವಳು ಶರಣ್ಯ ಗುರುಸ್ತಾಳೆ, ಯಾವುದೆಲ್ಲ ಬೇಡದೆಲ್ಲ ರೆಫರೆನ್ಸ್ ಕೊಡ್ತಾಳೆ. ಥ್ಯಾಂಕ್ಸ್ ಆಶೀಶ್. ಅವಳು ಯಾವುದೆಲ್ಲ ಕೊಡಕ್ಕಾಗಲ್ಲ ಅಂತ ಟ್ರೈ ಮಾಡಿ. ನೀನು ಏನೇ ಕಣ್ಣ ಕೊಡ್ತೀನಿ, ನೀನು ಎಲ್ಲಿ ಯು ಸ್ಟಾಪ್ ಥಿಂಕಿಂಗ್ ಅಲ್ಲಿ ನಾನು ಸ್ಟಾರ್ಟ್ ಥಿಂಕಿಂಗ್, ಅದು ಗ್ಯಾರಂಟಿ. ಬಟ್ ಆದ್ರೂ ನೋಡ ಅವ್ರು ಎಷ್ಟು ಈಸಿ ಬ್ಯೂಟಿಫುಲ್ ಕ್ವಶನ್ ಕೇಳಿದೆ. ಇವಳು 103 ಆಡಲ್ಲಿ ಬ್ಯಾಗ್ ಬಂದು ಮಾಡ್ಕೊತಾಳೆ ಬೇಕಂತಲೇ. ಇರ್ಲಿ, ನಮ್ಮ ಹತ್ರ ಕೆಪಾಸಿಟಿ ಇಲ್ಲ ಅಂತಲ್ಲ, ಬಟ್ ಎಲ್ರಿಗೂ ಅರ್ಥ ಆಗ್ಬೇಕಲ್ಲ. ನೆಕ್ಸ್ಟ್, so these are the standards which are relating to measurement. So RMPD is the 4 important words. ಬರ್ಕೊಂಬಿಡಿ, ಅದನ್ನ ಇನ್ನೊಂದು ಪಾಠ ಬರ್ಕೊಂಬಿಡಮ್ಮ. Ind AS mainly covers RMPD. ನೋಟ್ ಮಾಡ್ತಾ ಇದೀನಿ ಅಂತ ಅನ್ಕೊಂಡಿದೀನಿ. RMPD. What is RMPD? Recognition, measurement, disclosure. Recognition. One standard is ready.
Inventories.
Inventory, okay. I thought better is 115. Revenue recognition. One revenue with the customer. Beautiful one is 115. Contract recognition standard. Beautiful. Then measurement, inventory. Measurement. Next, presentation. Almost all the standards. On the face of the P&L, EPS has to be presented. That is called presentation. Disclosure, inventory ka split. how much is the raw material, how much is the work in progress, how much is the finished goods. I hope you are appreciating and understanding. FR is as interesting as DT. Who has to make it? Me. Me andre nanalla. Me, nanu. ಎರಡು ನಿಮಿಷಕ್ಕೆ ಕೇಸ್ ಆಫ್ ಮಾಡ್ತೀಯಾ? ಅದೇ ಮತ್ತೆ ಇದೆ
India 16 TTE or India 38 intangible assets cost normally, fair value for class of assets at regular frequency.
So now India 16 ಮತ್ತೆ 38 it ditto same sir. Only thing is that without physical substance it is with physical substance. ಅಷ್ಟೇ difference. ಈಗ ಶರಣ್ಯ is tangible. Her boyfriend for the time being is intangible. ಅಲ್ವೇನೆ ಇರ್ಬೋದು ಬಾಯ್ಫ್ರೆಂಡ್ ದೂರ
ನಿಮ್ಗೆ ಗೊತ್ತಾ ಸರ್?
ಅವಾಗ್ಲೇ ಓಡೋದ್ನಲ್ಲ.
ನಿಮ್ಗೆ ಹೆಂಗ್ ಗೊತ್ತು ಸರ್ ಇಂಟ್ಯಾಂಜಿಬಲ್ ಅಂತ?
Interesting question. Do you want
ಮನೇಲಿ ಇದೀನಿ ಪಕ್ಕದಲ್ಲಂತೂ ಇರಲ್ಲ.
You want me to answer this question in the YouTube live program?
Not required.
Not required. Thank you. Otherwise, like I am ready. I am ready anytime. Even though I'm Shetty, I'm ready. No problem. At the end of the session, you remind me. After YouTube recording stop, madi 100% perfect answer. Also, how his boyfriend, our boyfriend was closely connected to you. Anta ninu connection kortini Sirisha. Okay na? Interconnection of the standard. Rest kushet nodolige. Right. Continue. Now, YouTube viewers, if you want to stay back and come back. Next. Yeah. So now PP and intangible asset. You normally measure at cost, but fair value once in 3 to 5 years. Okay, for each class of asset. Office building on the all office building. Residential building on the all building is not one class. Office building a better, residential building a better. Use the common sense. Office building a depreciation is income tax only.
10%.
Better bidding. Many of the chances is there. Bhumika.
10%.
Yara batade. 10%. So office building is 10%. Residential building is 5%. Why? In a residential building, you take extra care. Mera baap ka house anta. But office building, kiska baap pan bidatinda thu anta ugitira bere bitre. Alva. So that's why depreciation is high. The car, what is used for the normal purpose, that is taxi. The rate of depreciation different. There are two different classes. So building andre all girls are same anta helakagata. Then responsible illa Sharanya Sirisha. Yendro. Continue. Moving on.
India's 40 investment property always at cost. However, disclose
how these standards will tell you to measure. You confusion agutte. Sir, omme cost. Idana correct register ಮಾಡ್ಕೊಳ್ಳಿ. ಇದರಲ್ಲಿ ಇಷ್ಟು 4-5 ಐಟಮ್ಸ್ are there. Trust me, minimum 3 ಬಂದಿಲ್ಲ ನಾನು ಮೀಸ ತೆಗೆದು 100%. ಅಷ್ಟು ಕಾನ್ಫಿಡೆನ್ಸ್ ಎಕ್ಸಾಮ್ ಅಲ್ಲಿ ಫುಲ್ ರಿಜಿಸ್ಟರ್ ಮಾಡ್ಕೊಳ್ಳಿ. So PP ಮತ್ತು intangible asset normally cost model, fair value at a regular interval 3 to 5. Investment property always cost.
However, disclose fair value, no option of revaluation.
Revaluation ಮಾಡಂಗಿಲ್ಲ. LBB ನ LBMs revaluation ಮಾಡಂಗಿಲ್ಲ. Sirisha ಗೊತ್ತಾ ಇದೆನೆ. Next.
India's 2 inventory cost or NRV, whichever is less.
Okay, ಅಲ್ಲಿ Sirisha ಇಂದ ಮಾಡ್ತಾಳೆ. Investment property ಅಂದ್ರೆ LBM land building or LBB ಗೊತ್ತಿಲ್ವ ನಿನಗೆ?
LBB ಗೊತ್ತು, ನೀವಿನ್ನ LBM ಹೇಳಿಲ್ಲ ಅದಕ್ಕೆ.
ಬಂದ್ಬಿಟ್ಟು ನಾಳೆ ಬೆಳಿಗ್ಗೆ ಹೇಳ್ತೀನಿ ಕ್ಲಾಸ್ ಅಲ್ಲಿ ನಿನ್ನ ಹೆಸರು ಹೇಳ್ಬಿಟ್ಟೆ ಹೇಳ್ತೀನಿ. ನೀನ್ ಮತ್ತೆ ಯೂಟ್ಯೂಬ್ ಅಲ್ಲಿ ನೋಡ್ಕೊ. ಸೊ ಎಸ್ ಐ ಲೈಕ್ ಇಟ್. ಥ್ಯಾಂಕ್ ಯು. ರಿಮೈಂಡ್ ಮಿ ಆಶೀಶ್ ಟುಮಾರೋ. Sirisha LBB ಅಂತ. ಓಕೆನಾ? LBM. ಸೊ ಲ್ಯಾಂಡ್ ಬಿಲ್ಡಿಂಗ್ ಆರ್ ಬೋತ್ is always valued cost model. ರಿವಲ್ಯೂಷನ್ ಮಾಡಂಗಿಲ್ಲ. ಬಟ್ ಫೇರ್ ವ್ಯಾಲ್ಯೂ ಹ್ಯಾಸ್ ಟು ಬಿ ಡಿಸ್ಕ್ಲೋಸ್ಡ್ ವಿದಿನ್ ದ ಬ್ರಾಕೆಟ್. ಅದು ಕ್ವಶನ್ ರೆಗ್ಯುಲರ್ಲಿ ಬರ್ತಾ ಇದೆ ಆಫ್ ಲೇಟ್. ನೆಕ್ಸ್ಟ್.
India is 41 agriculture biological assets only at
inventory
fair value less cost to sell.
Yeah, biological assets only at fair value less cost to sell. Look at this. Fair value is there, but fair value less cost to sell. Next. 105.
India is 105 non-current assets held for sale like inventory, 2 remarks, carrying amount, fair value less cost of disposal, whichever is less.
So inventory is cost or NR whichever less. ಇಲ್ಲಿ cost ಬದಲು carrying amount or fair value less cost of disposal, whichever is less. ಅರ್ಥ ಆಗ್ತದೆ ಎಲ್ರಿಗೂ? These are the measurement principle standards. Okay. Now, entire syllabus is India's. So how do we answer India's questions? CA final is very rarely they ask pure theory question. Very rare. Maybe on 5 marks they might ask. Okay. Explain biological asset as per India 16. most of the questions are analytical questions, analytical theory or analytical problem. Both are there. Analytical theory is also there. Some of the standards you would have seen. So, call theory. India's 34. What is India's 34?
Interim financial reporting.
Financial reporting.
Excellent. Bad debts has not been shown in the first quarter, second quarter. You would have seen that question continuously. Analytical theory. Next, problems. How do we answer? Sharanya want to read. She is not willing.
Theory.
Forcing.
Theory, short notes, materiality, etc. Make reference to concerned Ind AS with title. Write the definition as it is on meaning. Give an example, say materiality. Very
Correction.
important.
Write the definition as it is or meaning. On Allah, no, or meaning. Yeah.
Very important. Accounting treatment, say material departures to be disclosed. Disclosure requirement in financials. If possible, give connection to SA or Companies Act 2013.
So if it is a pure theory, this is the way you should answer. What is it? First, so now I talk about biological asset. Ready? Write short note on biological asset. 5 marks. Very rarely they might ask. Okay, how do you answer? Quick. Pandya, Chapandi. Ashish, go ahead.
We begin answering by giving the meaning of biological asset defined under Ind AS 41. Biological asset means a living animal and plant.
Okay. So you have to refer to Ind AS 16 as well as 41. And I was waiting. You should not just write Ind AS 41. Be careful. Ind AS 41, inverted commas.
Ind AS 6.
Title of the Ind AS you write. Many people are missing it. Write down. You will write in the exam as per Ind AS 41. Ind AS 41 what? What is Ind AS 41?
Agriculture.
Right. Okay, very. Mention Ind AS number as well as title at least once in such answer. Or if it is continuously coming, somewhere at the bottom or the top of the Ind AS 103 business combination, entire answer. It is enough. They'll give the marks. You will be shocked actually, and some of you may not accept all. That doesn't matter. Single entry system. How I used to see it, how I used to teach in intermediate, capital comparison method. Hing ಮಾಡ್ತಾ ನಾನು capital account ಮಾಡಿಬಿಟ್ಟು ಫಾರ್ಮ್ಯಾಟ್ ಆಗ್ತಾ ಇದ್ದೆ. Last 20 years teach ಮಾಡ್ತಾ ಇದ್ದೆ. But recent study method of ICI I saw, they are started capital account. So earlier, CS never used to use the chart approach. Now chart, every book is with the charts. You go and see that earlier. I don't know whether they are copying us or whatever, but I'm happy that whatever we're doing is 100% correct. Capital account format they given, they said alternatively, ICI material, instead of statement form, you can give capital account. So just to follow what we are teaching, more than enough for 100. Trust and follow. That's important. So, reference with the title. India 41,
Agriculture.
shaky idira. 3 months ಆದ್ಮೇಲೆ ಕೆಲವರಿಗೆ. If it is analytical theory, ಹೇಳಮ್ಮ.
Analytical theory, say loss by insolvency on 28/3, made known on 10/4, Supra.
One left. Make reference. Which standard? Quick. Loss by insolvency. Got to know on 10th.
Ind AS 10, sir. 10.
Ind AS 10. Very good. What is title? Kodaya.
Subsequent events.
No. 560. SCA 560.
Events after the reporting period.
Reporting period. So voice. Melodious voice.
Reporting period.
Very good. Continue, ma. Next. Silpana. Continue.
If required.
Point write the definition if required. Right. Every practical question also start with what? The definition. Nothing wrong. Next.
Analyze a question in contest. Say post balance sheet.
Context. Spelling XT. In the context. Say.
In context. Say post balance sheet event of condition on 31st March. 4th point same. 5th point same. 6th point optional.
4th is what? Accounting treatment has to be given. 5th point disclosure and optional. If there is a connection to this. Problems first same. Make reference. If required, write the definition. Solve the question. Accounting treatment and disclosure are the same. This is how you are supposed to answer in this. Are you comfortable? Yeah. Ready for the next question? Or Shatabdi? Okay. Let us quickly go through the standard. Okay. It is a revision class, my dear friends. Don't complain, sir, you are fast. 90% if you are able to understand, you are understanding 100%. Balance 10% tomorrow, cover up. Okay. Fair enough. I'll try to give it 100% only, but 10% here and there. First time adoption of India's. Phase 1 company 16-17, phase 2 company 17-18, or any other company which has crossed 250 crores net worth. Okay. It may happen in 21-22. When you're applying India's for the first time, what should I do? In the first annual financial statement, mainly you have to bring adjustment to the reserves and surplus, concerned item of the reserve surplus. If it is an impact on security PM को adjust करना है. If it is general is retained earnings mainly. If the revaluation surplus में adjustment करना है. So every standard, okay, wherever you are applying for the first time, okay, you need to do the adjustment in the opening financials. Okay, so this is like a transition standard. That is when it's applied for the first time. Indies is made applicable for the first time. Athava, a specific Indies is made applicable for the first time. So understand carefully. So either Indies itself is made first time. One of the standard was not applicable till date. Now that standard was made applicable to you for the first time. Indies 116, for example, is lease accounting. It was not applicable. It was something else. But it made applicable for the first time. What you had followed earlier, you would have what you call it, continuing balance in the reserve surplus, or retained earning. So how do you adjust the same? That's the discussion. You have to make a reference to India's, which is more relevant. Okay. So there are some exemptions which are given by the standard. Okay, you can just glance it for theory purpose. Some mandatory exemption. They say if you are applying for the first time, some estimate, etc., it may not be possible, bit tacky. So hedge accounting compulsorily given exemption. You don't have to restate, etc. But there are some cases like optional. So business combination only. If you want to do this India's representation, you do it. Otherwise, chalta hai. So there are some pure theoretical answer. You just go through it once. Okay. Share-based payment and India's 102 and 119. So India's 102 and India's 19 are closely connected. What is share-based payment? So basically, when mainly the employees are given the shares, okay, the ESOP, employee stock option plan, we account for the same. At the same time, employee benefit India's 19, okay, so they are more closely connected. Mainly share-based payments, okay, can be either cash settled or equity settled. Okay, when I say cash settled, you give the option of equity share. Maybe after 3 years or 4 years of being in a company, that shares compulsorily has to be given back, for which the company will give you the cash. Athava, they will give you the equity shares, and after the lock-in period or the vesting period, you can sell the share. How do you account for the same? That is what is called share-based payment. Connecting it to the employee benefit expenses, where, take a simple example, we are all employees of Infosys, top-level employees. And Infosys want to retain us for next 3 years, because today labor turnover is substantially high. So what they say, if you are there in a company for 3 years, minimum 3 years, vesting period, okay, we will give you 1,000 Infosys shares. So do you want or not? Right now you decide. So 90% of the students say, yes, I want it. 10% say, I don't want, I want to quit. Quit people, leave it. 90% who ask for it, from that date, next 3 years, if you stay there in the company, at the end of 3rd year, you will be vested with the shares. And those shares, again, maybe you can sell it immediately. Athava, they say there's a 1 year or 2 years lock-in period. Employment, you should be there for 3 years. That's called vesting period. After 3 years, the shares will be given to you, 2 RMRs. If there is no lock-in period, next day only you can sell it in the market. If there is a lock-in period, maybe employment you can quit, but shares cannot be sold for further 6 months, 1 year, etc. This is the concept of option accounting. How do I account for it? Very simple. 17(2) of the Income Tax Act, read with Rule 38 and 39. Same thing in accounts. Perquisite in the hands of employees, fair market value minus Z. Today, Infosys shares, let us say for easy sake, 1,000 rupees for easy sake. And they give it to you free of cost. For you, perquisite is 1,000. For employer, expenditure is 1,000. One man's expense is another woman's income. So I show 1,000 rupees as a deferred employee compensation expense. Assuming the vesting period is 3 years, 1,000 rupees will be shown as a deferred expenses and one third amortized to P&L account each year. Understanding? Right. Whereas 1,000 rupees ka market value and you are assuming I am collecting 100 rupees from you. 1,000 minus 100, benefit given to you is only 900 divided by 3, 300 should be charged to the P&L. This is the basic gist of share-based payment. Okay. So it is also important from the angle of employee benefits. So it can be equity settled, as I said, cash settled, share-based with the cash alternative. And then we'll give you shares. If you want, you can take the cash also. That's the optional accounting. ಅಲ್ಲಿ 101 ಅಲ್ಲಿ ಬರ್ಕೊಳ್ಳಿ ಏನು analytical theory question will be asked. Question ಸುಮ್ಮನೆ ಒಂದು ಬಾಕ್ಸ್ ಹಾಕೊಂಬಿಡಿ ಎಲ್ಲರೂ. ಸೊ ವಿಶ್ವ ಬಾಕ್ಸ್ ಹಾಕೊಂಡು ಇದನ್ನು ಟೈಪ್ ಮಾಡಬೇಕಾಗುತ್ತೆ ನೆಕ್ಸ್ಟ್ ಬ್ಯಾಚ್ಗೆ. ಸೊ ಕ್ವಶನ್ಸ್ ಅಂತ ಬಾಕ್ಸ್ ಅಲ್ಲಿ ಹಾಕ್ಬೇಕು. Analytical theory or reference to a particular standard, say India's 34 IFR, when made applicable for the first time. Share based ಅಲ್ಲಿ share by 102 ಗೆ ಬೇಕಾದ್ರೆ all of you those who are writing now, you can write serial number, sorry, India's number, type of question ಅಲ್ಲಿ ಒಂದು ಬಾಕ್ಸ್ ಹಾಕೊಂಡಿ ಎಕ್ಸೆಲ್ ತರ ಅಲ್ವಾ. type of question, then India's, then type of question ಅಲ್ಲಿ type of question ಬರ್ಕೊಂಡು ಹೋಗ್ಬೋದು. ಇದನ್ನು ಬೇಕಾದ್ರೆ ಮಾಡ್ಬೋದು ವಿಶ್ವ. ಅದು ನಮ್ದು ಎಂಡ್ ಅಲ್ಲಿ ಇದೆ, ಬೇಕಾದ್ರೆ ಅಲ್ಲೇ ಬೇಕಾದ್ರೆ ಇನ್ನೊಂದು ಕಾಲಮ್ ಬೇಕಾದ್ರೆ ಹಾಕ್ಬೋದು. ಸದ್ಯಕ್ಕೆ ಅಲ್ಲೇ ಇರ್ಲಿ, ಇಲ್ಲಿ ಹಾಕೊಂಡು ಹೋಗಿ ಮತ್ತೆ ಅಲ್ಲೂ ಕಾಪಿ ಮಾಡೋಣ. share based payment, option accounting. Next, connect with the India's 19. But there are two closely connected questions. Okay. To every standard, other question if I miss it also. 2 standards which can be asked straight away for 16 to 20 marks. Either 103 or 110. So alternatively, they are doing that. So December only amalgamation was asked. July, I expect consolidation again for 16 marks to 20 marks. Okay. Right. 103 business combination. Sorry, IFRS 3, India's 103. IFRS 3 refers only acquisition method of accounting and no question of what you call other alternative. But India's 103, Appendix C has been added. Common control transaction like Infosys, 100% subsidiary Infosys BPO. They want to merge. They are the boss here. Both owned by them. Why do you bother about what method they follow? That's why for 100% subsidiaries or any subsidiary where common control is there, they can go for pooling of interest method. So major point of 103 with 110 is the goodwill valuation. There are 2 methods of goodwill valuation: full goodwill method or partial goodwill. Full goodwill method, very good, Deepa. Full goodwill method, consideration paid, say 80% if I acquired, plus non-controlling interest 20% ka valuation to RMRs, either at a fair value or of the identifiable net asset. Total up less total net worth, total equity of that company. Very important. Total net worth is equal to total net asset. Somewhere note ಮಾಡ್ಕೊಳ್ಳಿ. Total net asset is equal to total equity is equal to total net assets. All are same. So partial goodwill alli whatever you paid minus what you got back. For that, what is the stake in the paid up equity capital, then capital profit, revaluation profit, fair value change. Okay, so this is called partial goodwill approach. Whenever the NCI valuation is given, note it, NCI valuation is given the question, is always full goodwill. Showed good effort. Very good. NCA, excellent, Deepa. Excellent. Ma. Whenever there is a NCA evaluation is given, you have to compulsorily go by full goodwill approach. Yeah. Applies to all kinds of business combination. Then what is business? Business consists of input, process, output. The general theory. It applies to not only acquiring net asset, but also acquiring significant equity interest, like acquiring subsidy stake. Okay. 103 gives rise to 110 and not vice versa. They are closely connected. The definition of control, PLR, power link between these two, and what? Variable return. Computation of NCI. Control is a decisive factor. I will go through my pure theory. I don't want to waste much time. Okay, important but theoretical. Again, there's a beautiful table I discussed in the regular class. Okay, so 103 is applicable for merger, absorption, external reconstruction, demerger also it applies. Demerger is one of the classic example of common control transaction, and which always lead to capital reserve. Okay, positive or negative, both are considered. Okay, investment in subsidy also covered. Internal reconstruction not covered. Reverse acquisition. Okay, where legal acquirer becomes the accounting subsidiary. One commonly asked question. Sun Limited and Moon Limited, December 21 question paper. They merge. The Sun Moon Limited and Honeymoon Limited, they start. So now that is amalgamation. Then you have to verify and go, and who has got a substantial stake. All the questions till date, one company will be having 44%, one company will be having 56%. I come across. I don't know if there is something special with that 56. So 56% stake company will become an accounting acquirer. Legal acquirer may be someone else. Sun Moon Limited is the name of the company. But if for all practical purposes, so that Moon Limited, which is holding 56%, will be regarded as a accounting acquirer. That means, look at me. Building fair value of Sun Limited. Wait. Book values of buildings of both the company 100. Fair value, this is 300, this is 500. This is Moon Limited. So when you decide that actually Moon Limited is going to be an accounting acquirer, book values of accounting acquirer should not change. I repeat this. Extremely important. I stress this in regular class. So, December 21 question I am visualizing and telling you. When you go through the question paper, you'll understand it. Sun Limited, Moon Limited started a company called Sun Moon Limited. When they checked up the stake percentage, Sun Limited has got 44%, Moon has got 56%. So, normal amalgamation, Sun Limited book value 100 lakh, Moon Limited book value 100 lakh. So, fair value respectively, let's say 300. They say in India's Moon Limited balance sheet, you keep it as it is 100 plus Sun Limited fair value 300. You should change only the values of a transferor company, which is called Sun Limited here. Moon Limited, which is decided to be an accounting acquirer, you should not change the value. Did you understand?
Yes.
Yes.
We'll go through that. Very, very important point. Okay. Right. This is a special point of India's 103. Yeah. Joint venture. Internal reconciliation. I just given internal reconciliation glance body. May not be asked. Capital reduction approach. All profits will be routed through a capital reduction account. Then the following items will be written off in the order. Yaudo P&L account debit. Regular class but the two conditions will add two conditions. The name has to be prefixed with the word and reduced in the course order. Fixed asset written off has to be shown compulsory for next 5 years. Share surrender approach. All transactions related to the shares are routed through shares. Then the balance is transferred to the capital reduction account and transactions are continued as it is. Reverse acquisition, that is what I told you. Methods of acquisition. IFRS only acquisition method. India's 103. It also recognizes acquisition method.
India's 103, normally it also recognizes acquisition method. Carve out from IFRS as per Appendix C to India's 103.
I was looking at introduction. Carve out, I didn't go in detail. Every now and then carve out. That's an note. That's an example. Example. समझ में आ रहा है? कुछ हो रहा है?
Yes.
Next.
Carve out from IFRS as per Appendix C to Ind AS 103. Pooling of interest (POI) method is suggested for common control transaction (CCT). Methods of accounting and treatment of difference. Acquisition method.
Extremely important. Extremely important. Next.
Acquisition method. All assets and liabilities acquired are recorded at fair value. Difference between purchase consideration and net assets is 2 RMRs. Goodwill when there is excess payment. Such goodwill is tested only for impairment under Ind AS 36. No amortization of such goodwill. Please note, other intangibles, say patent, etc., shall be amortized as per Ind AS 38. Right side, deficit paid is gain on bargain purchase, which is ultimately transferred to capital reserve.
Acquisition method. Consideration minus total net asset. You get positive figure, it's called goodwill. Full stop. Tested for impairment. Goodwill amount 300 lakh aa gaya. At the end, recoverable amount is 280 lakh. 20 lakh debit to P&L. Recoverable amount is 320 lakh. Full stop. No question of testing. Where goodwill amortization concept illa. Entire Ind AS alli goodwill amortization illa. One more point is goodwill once written off. At the end, someone note padkodilro, which was 38 lakh. Goodwill once written off, it cannot be reversed. It cannot be. Goodwill is a merciless law. Fine. Next, when it comes to negative figure, consideration is 300, whereas net asset is 400. You must write it as a gain on bargain purchase, which is ultimately transferred to direct capital reserve. Direct capital reserve. Gain on bargain purchase. You should say, this is what I gained by bargaining with the person, which ultimately, because there are some other transactions which may come to capital reserve. This is a capital reserve which is coming, Ashish, because of the gain on bargain purchase. Samajh mein aa gaya, sir? Yeah. Next.
Pooling of interest method, positive or negative, shall be recognized as capital reserve only.
Very, very important. Make a note of it again. Okay. Positive or negative. This is the only reserve probably. Or maybe FCTR barbodo. Where within the bracket also you write Bhumika. Positive barley, negative barley. It's always a capital reserve. And it's always a common control transaction. Pooling of interest method is an example for what? Common control transaction is an example. Okay, for a common control transaction. Demerger, for example. Yeah, this also is important. Regular roads are the point. I didn't want to have consistency.
Under Ind AS 103, difference between purchase consideration 360 lakh and net assets 300 lakh. Difference is equal to 60 lakh and is analyzed into 2 RMRs. Left side, unrecognized intangible, say in Ola, Uber, etc. Self-generated software, say 40 lakh. Amortization Ind AS 38. Right side, only balance 20 lakh shall be recognized as goodwill tested for impairment Ind AS 36.
Goodwill is like a marriage. Girlfriends you can have any, I don't care. Okay. So once you deciding to get married, think twice. Shadi karane. Once you marry, neither you can reverse the decision, neither you can come out of the decision. Goodwill is like that. So find out the maximum possible other intangible assets, Shashank. Other intangible asset nahi hai to balancing figure will be goodwill. The other intangible asset out of 60 lakh, assuming 40 lakh is for patent, give it. 20 lakh is for something else, give it. Goodwill 0. Because those items can be amortized, they can be depreciated. Whereas this goodwill, you cannot do anything. That's a dangerous point. Samajh mein aa raha hai? Yeah. Then from the years I copied methods of computation of PC, net asset method, payment method, share exchange method, all of you can glance it. Okay. 103 also talks about a consideration being extremely important. Odama.
Deferred consideration for liquidity issue, it is deferred. Example, 300 lakh to be paid after 3 years. If present value factor is 10%, consideration is to be increased by, say, 300 lakh into 1 divided by 1.01 to the power of 3, which is equal to 225.39 lakh. That is, it is recognized that its present value.
300 lakh can increase now. Normal consideration plus deferred consideration 225. So deferred consideration should be always at a present value. Tomorrow I'm going to give the correct clarity. Deferred consideration go contingent consideration difference. Deferred andre 100% I'm going to give you, but I'm going to give you after 2 years or 3 years. That's a present value, Srisha. Whereas contingent consideration, I may or may not. Very good. That's why I consider fair value be depending upon equity or not. This is an important point again. 4 marks, 5 marks theory question also can be asked.
Contingent consideration, consideration payable subject to satisfaction of existence of business related conditions. Say transferee company wishes to confirm that sales figure of transferor company reported for last 3 years is reasonably correct. Initially measured at fair value, subsequently equity
So contingent consideration initially measured at fair value. Subsequently, if it is equity, you decided to give equity, no question of remeasurement. If it is other items like debt, etc., you should be remeasured at each value, and whatever the difference arising should be transferred to P&L account. Whereas one more very commonly asked adjustment, almost every example, same adjustment. Any other consideration, say options. When the options are given, part of the option, very, very important, part of the thing should be taken as a PC, other part should be taken as the employee compensation expense to be taken to P&L account. So original award into service period till date, whole divided by total vesting period of transfer or transferring company, whichever is higher. 500 was the amount initially agreed, into service period till date is 2. That means today I am going to acquire you. You have to buy this Bhumika. So 500 is what I initially agreed. 2 years is out, and I am acquiring you. Divided by X or Y companies, whichever is higher. That will go to the PC. Out of the total 400 amount what we agreed, 200 goes here. 200, so out of 600, I'm sorry. Yeah, same mistake, correction. Balance payable by A Limited, 400 here, 600 minus 200. Okay, 400 should be considered as the India's share-based payment taken to India's 19. 400 divided by 2, 200 per annum should be debited to P&L account. Consideration, it can be a question for 5 marks or 10 marks straight away. Normal consideration, equity share, preference share, all at a fair value. All at a fair value. Plus deferred consideration recognized at the present value. Contingent consideration recognized at fair value. Any other consideration like option accounting, if initially you agreed to pay 500 as a 600 as the employee option, 2 RMRs. Part of the same, depending upon the period what you served till date, should go to the PC. Balance should go to the employee compensation expense, which should be amortized over the vesting period. Artha idana go through madi. Ide question twice already. New scheme twice, 2018. Then okay, accounting entries go through madi. Full goodwill and further is relevant for 110 also. NCI is measured at fair value. Consideration paid say 80%. NCI value they given 30 lakh 180 less total net identifiable asset. Difference is called goodwill. Whereas NCI is at a proportionate net asset, everything is same. Only this figure is different. Accordingly, goodwill different. Whereas partial goodwill, consideration paid less whatever the net asset what you have taken over, 80% taken over, plus that is called goodwill. Positive or negative as the case. Control. Glance for a definition important, theory. Demerger. What is demerger? Existing company, one of the units is separate. Assets account, credit, liabilities account, debit. Differential amount must go to capital reserve. Must go to capital. Generally, this is the entries what I said. Yeah? If you a capital reserve, capital reserve. Any difference must go to capital reserve because India says it is a capital reserve because it is one of the classic example for common control transaction. Existing company can separate agoda. That is demerger. Okay. Common control transactions. These are the examples of common control. What am I heroine?
Examples of CCP: merger of fellow subsidiary, merger of subsidiary with parent, demerger of division held up company, acquisition of equity from entity within same group, bringing together entities under common control under separate legal structure.
Nim syllabus alli ella kada odallu appendix C is important. Any standard appendix C ನೆನಪಿಟ್ಕೊಳ್ಳಿ ಸಾಕು. C for cap, C for CH, A for appendix C. ಗೊತ್ತಾಯ್ತಾ? Next. These are some additional points I just copied and pasted. Okay, that's one. Statute reserve ಬಗ್ಗೆ there is no mention, but I could see in one of the suggested answer they reinstated the same. So because ICAI requires you to do amalgamation adjustment reserve account debit to concern statute reserve, like investment allowance reserve, export profit reserve, you can do that. So in the balance sheet under reserves and surplus, export profit reserve you write plus, amalgamation adjustment reserve you write within the bracket. Plus and minus it gets netted off. So when disclosure requirement extremely important. First year of balance sheet. First balance sheet immediately after amalgamation. What is the nature of business combination? So what is the consideration paid, goodwill, etc. It has to be discussed in detail. Difference between the two will not be relevant. Yeah, this is there in your material also. Categories of questions in Indias. Okay, it is already there. Quickly glance ಮಾಡಿ ಎಲ್ಲರೂ. Anything can be asked because I given in detail. I didn't copy, didn't change even a single part by as well overview is concerned. Yes, left. So it can be theory question, it can be analytical theory question, computational consideration, amalgamation question, demerger question, etc. Reverse expedition note important. Small standard. Title ಎಲ್ಲರೂ ಕರೆಕ್ಟ್ ಆಗಿ ಬಯಟ್ ಮಾಡಿ. ಟೈಟಲ್ ಕರೆಕ್ಟ್ ಬಯಟ್ ಮಾಡಿ. ಟೈಟಲ್ ಅಲ್ಲಿ 50% ಸ್ಟ್ಯಾಂಡರ್ಡ್ ಇದೆ. ಟೈಟಲ್ ಕರೆಕ್ಟ್ ಆಗಿ ಬಯಟ್ ಮಾಡಿ. 105 ನಾನ್ ಕರೆಂಟ್ ಅಸೆಟ್ ಹೆಲ್ಡ್ ಫಾರ್ ಸೇಲ್. ನಾನ್ ಕರೆಂಟ್ ಅಸೆಟ್ ಎಲ್ಲಿ ಬರುತ್ತಪ್ಪ? ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ ಐಟಮ್. ದೆನ್ ವಾಟ್ ಸೆಕೆಂಡ್ ಪಾರ್ಟ್ ಇದೆ ಡಿಸ್ಕಂಟಿನ್ಯೂಡ್ ಆಪರೇಷನ್. ಕಂಟಿನ್ಯೂಯಿಂಗ್ ಅಲ್ಲ, ಅನ್ಲೈಕ್ AS24. AS24 says discontinuing operation. Here we are using the word. So first one is the balance sheet item. Next one is the P&L item. Balance sheet non-current asset held for sale. Common sense is assets are classified into current and non-current. Current will not come here. Under non-current asset, if they are continued, what you call LDB, if it is not intended to be continued, they are called held for sale. And if they are held for sale, they should be valued at a fair value less cost to sell or carrying amount, whichever is less. Introduction measurement ಓದಿದ್ರಾ? And once it is held for sale, depreciation ceases. Very important. This standard also excludes these one. You have to by heart this. For example, they will give you apply India's 105 for this anta. Suddenly, if they give a deferred tax asset, India's 12 review martivi. Why should I bother? All is by heart part elro. So NCA 105 is not applicable to this standard. You have to by heart this 5 standard. Compulsorily by heart. Next. So NCA to be classified as held for sale, it must be available for sale in the present condition, and carrying amount should be recoverable principally punctured through a sale rather than continuous use. And sale must be highly probable. Very important. And highly probable 5 important conditions. MBPOC. Management is committed to the sale. There should be active buyer. Selling price is reasonably able to recover the current fair value. Then it should be completed within 1 year because it's almost like a becoming current asset. No significant changes. Significant changes are unlikely. Akka and Anna. Significant changes will stop profit. Unlikely and the Akbar. So only then it will be called a NCA held for sale. Disposal group is ditto NCA. Group of assets which has been set aside to be sold like a CG. Almost same point. Next. Disclosure requirement of NCAs. What do you call the part 1, division 2, discontinuing operation. So part 1. So ಅಲ್ಲಿ non-current asset separate ಆಗಿ ಮಾಡಬೇಕು. Part 2 ನಲ್ಲೂ ಬರಬೇಕು. Everywhere show the facts and disclose the same. Discontinued operations. SSS. What is discontinued operation definition? It is a component of entity which will be either disposed of, classified as held for sale. SSS. Separate major line, single coordinated plan, subsidiary acquired is expected to be sold either way of a separate major line of business, single coordinated way, or subsidiary acquired. This ಮೂರನ್ನ SSS ಅಂತ by heart ಮಾಡಬೇಕು. ಕೇಳಿಸ್ಕೊತಾ ಇದ್ದೀರಾ? Discontinued operation. Okay. So when there is a discontinued operation, part 2 ನಲ್ಲಿ ಬರುತ್ತೆ. NCA comes in part 1, discontinued operation comes in part 2, and on the face of the P&L with the tax you have to disclose. This is extremely important.
General note, NCA held for sale, a balance sheet related, talks only about NCA. Example, factory building, Coimbatore, CGU. Discontinued operations, P&L related, it deals with component of entity either already disposed of or classified as held for sale. Example 1, Wipro demerging its non-software division. Example 2, entity planning to stop export to China.
105. What is 106?
Exploration and environment.
104 and 106 are not there. 104 is insurance. 106 is exploration related out of syllabus. 107 and 109 will touch together in the financial instrument. 108 operating segment. Efficiency evaluation of every entity is important. How good you are doing, it has to be reported in now because of OS. Operating segment mainly talks about reportable segment. 3 criteria. Any segment which constitutes 10% or more of the total revenue, internal and external milake, or results, total of profits Sapna, or total of losses, whichever is higher in absolute term, or total of assets, excluding fictitious and income tax asset. Once they come under the 10%, one of them, so when I go by the revenue, if suppose out of 10, A1 to A10, A1 to A6 are covered, next I don't have to bother about A1 to A6 in the second and third condition. Additionally, you have to check up whether A7 to A10 are also become an operating segment, reportable segment, because 10% criteria. Now take an example, 10% criteria, you have covered 6 products which are constituting 60% of the external revenue. First check 100% of the revenue, external internal. So 60% cover it. But the second condition says at least 75% of the external revenue should have been covered by the reportable segment. So identify any such segment which constitute at least
25%.
10%. 1% of total.
75% of complete
75%.
external revenue. 75% is the wrong answer. 75% of Bajji Bonda Tigalakata, what you talking? 75% of what?
External revenue.
External revenue. Then management choice. Niche, some new business you started. You want, even though it's constituting 2%, later it may be Wipro, Western India products, Western India vegetable product in the Shuru Madidavru, Azim Premji sir. Whereas today, their main business is other than vegetable. Yaudo, software. When they started a software, it would have been a big business to think about it. That today it's become a magnanimous, isn't it? Okay. So that's about a reportable segment. So I given the story there. Chief Operating Officer is a pure management-oriented function. It is a function which is the highest level of management responsible for resource allocation and performance assessment. So reportable segment, extremely important. 10% or more, greater than or equal to the node code A, internal external revenue together, profits or losses, atava assets. Okay. Then and illi or ide, illi and ide. More than equal to 75% of external revenue cover agಬೇಕು. Management choice, if you want, you can cover it. A beautiful example sameta ide. External internal revenue ಮಾಡಾಗ ಈ ಕಾಲಮ್ ನೋಡ್ಕೋಬೇಕು. ನೋಡ್ಕೊಳ್ಳಿ ಎಲ್ಲರೂ ರೆಗ್ಯುಲರ್ ಕ್ಲಾಸ್ ಅಲ್ಲಿ ಮಾಡಿದ್ವಿ. ಇದು ಕ್ವೆಶ್ಚನ್ ಎಕ್ಸಾಮ್ ಅಲ್ಲಿ ಕಂಟಿನ್ಯೂಸ್ ಬರ್ತಾ ಇದೆ ಆಪರೇಟಿವ್ ಸೆಗ್ಮೆಂಟ್ ಕಂಟಿನ್ಯೂಸ್ ಆಗಿ. ಸೊ 180 into 10% 18. ಎಲ್ಲೆಲ್ಲಿ 18 ಇದೆಯೋ ಅದನ್ನ ಐಡೆಂಟಿಫೈ ಮಾಡಿ. ನೆಕ್ಸ್ಟ್ ವಾಟ್ I try to give some example, same example return ಮಾಡಿ ನಾನು ಚೇಂಜ್ ಮಾಡಕ್ ಹೋಗಿಲ್ಲ. ಯಾಕಂದ್ರೆ ನ್ಯೂ ಸ್ಕೀಮ್ ಅಲ್ಲಿ ಕ್ವೆಶ್ಚನ್ಸ್ ರಿಪೀಟ್ ಆಗ್ತದೆ. ಸೊ ಚೇಂಜ್ ಮಾಡಿದ್ರಿ ಟೈಮ್ ಕೆಲಸ ಇಲ್ಲ. Total of the profits or total of losses, whichever is higher, 1 or 2 other 10%. Same way, assets in total. ಅರ್ಥ ಆಗ್ತಾ ಇದೆ ದೇವರಿಗೆ? Yeah. Any reportable segment you have to find out. Okay. Now, can I merge these two segments? Aggregating. Odama. Theoretical answer.
When 2 or more segments consist with core principles and having similar economic characteristics and similar nature of products, types of customers, distribution channel, etc., aggregating into one.
Yeah, you can aggregate only when there are 3 conditions which are satisfied. CSS ಅಂತ ಬರ್ಕೊಳ್ಳಿ. ಯಾವುದು? Consistent with the core principle, similar economic characters, and similar nature of products. CSS ಅಂದ್ರೆ ಚಂದ್ರಶೇಖರ್ ಶೆಟ್ಟಿ ಅಂತನಾ? ಅದು ಈಗ ಕ್ಲಾಸ್ ಆದ್ಮೇಲೆ ಬರ್ತೋದ್ರೆ ಆಯ್ತು. ಯಾವನಂತ ನಿಮ್ಗೆ ಅಲ್ವಾ? ನೆಕ್ಸ್ಟ್ classification, that's all fine. Then reconciliation has to be done if there is some segment. Assuming 92% you covered the segment, whereas 8% which are not covered. So normal P&L account irutte. Reportable segment andreno adanne column nar hakodu, multiple column hakodu. So total profit here is 100 crore, but reportable operating segment alli you got only 90 crores. 10 crore difference ಏನು? ಅದಕ್ಕೆ you have to give a reconciliation. Vishmali 107, 109 ಎರಡು ಹಾಕ್ಬೇಕಮ್ಮ. Financial instruments. The beautiful chart, ಅದಕ್ಕಿಂತ ಮೊದಲು ಡೆಫಿನಿಷನ್ ಓದಿ. Financial instrument is a quantity, ಸರಿ ಮಾಡಿ ಪ್ರಿಂಟ್ ಆದ್ರೆ ಇದನ್ನು ಟೈಪ್ ಮಾಡಬೇಕಾದ್ರೆ, that gives rise to both a financial asset of one entity will become a liability or equity instrument other entity. That's the most important retype money. It is a contract which gives rise to both. One man's asset is another woman's liability or equity. For example, I am Infosys Limited. I am a debt-free company. As of now, everybody may be knowing Infosys is a debt-free company. Assuming I issued debentures to Sapna, for me, it is a liability. For her, it is an asset, financial instrument. I issue equity shares to Sanjay. For me, it is an equity instrument. For him, investment. One man's asset is another woman's Shirisha? Liability. Woman's liability. Alva. Fine. So, standard SFM connection. I will not go too detailed because Asha madam would have done in one way. I don't want to. But this table, balance sheet, this table actually one of our students did. Okay, one of our top rank holder. ಅದನ್ನ ಹಂಗೆ ಕಂಟಿನ್ಯೂ ಮಾಡಿದ್ರು. ಯಾರು ನಿಮ್ಮಂತವ್ರು ಇನ್ನು ಇಂಪ್ರೂವ್ ಮಾಡಿದ್ರೆ ಕೊಡಿ, ನಾವು ಚೇಂಜ್ ಮಾಡಿ ಕೊಡ್ತೀವಿ. ಒಂದು ಸ್ಟೂಡೆಂಟ್ಸ್ ಮಾಡಿದ್ರೆ ಬ್ಯೂಟಿಫುಲ್ ಆಗಿ. ನನ್ ಆಫ್ ದ PPR
Financial.
ಮೈ ಲಯಬಿಲಿಟಿ ಅಂತ ಬರುತ್ತೆ ಅಲ್ವಾ? ನಾನ್ ಸೆನ್ಸ್. ಸೊ ಫಿಕ್ಸ್ಡ್ ಅಸೆಟ್, ಟ್ಯಾಂಜಿಬಿಲಿಟಿ ಯಾವುದು? Whereas investment ಅಲ್ಲಿ investment property ಬರಲ್ಲ because it's again a PPE. It is mainly PPE. All other items can be what you called financial assets. Next, current stock asset ಅಲ್ಲಿ inventory, you would have observed DT and inventory. Inventory is always a current asset. One point you have noted. Inventory is always a non-financial instrument asset. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? ಅದು inventory has to why is it so? Inventory has to change the what you call nature, then only it become an asset. Inventory as such is not an asset from this angle. Inventory stock of goods I have, I sell it to someone, then only I can have a receivable coming into picture. Inventory lying with me, how is it giving a financial asset? 2 points today we learned. Don't make a note of it somewhere. Under India's inventory is always current. Next. Inventory is not a financial instrument asset. Almost every other item of the balance sheet is a financial asset, except prepaid expenses, missing expenditure, all these things. No item bad money. Liability suddenly, equity, preference share capital, equity share capital, yes, subject to certain extra conditions there. Reserve is not, because your reserve is your reserve. Most of the debt instruments are yes, sir. Deferred tax liability is a special item. It's always a non-current, always a non-percolating. Deferred tax asset and liability, always non-current, always non-financial instruments. Trade receivable, trade payable, ಏನು draw?
Financial.
Sorry, beautiful. ಒಂದು ನೋಟ್ ಇದೆ, ಇದು ಬ್ಯೂಟಿಫುಲ್ ನೋಟ್ ಇದೆ, ಹೈಲೈಟ್ ಮಾಡ್ಕೊಳ್ಳಿ ಮತ್ತೆ. These are not 109. ಸಾಕು. Derivatives ಸ್ವಲ್ಪ SFM ನೋಡ್ಕೊಂಡು ಮಾಡಿ. I'll not go into the details. I kept it very short. ಅಲ್ಲಿ ಫಿನಾನ್ಷಿಯಲ್ ಇನ್ಸ್ಟ್ರೂಮೆಂಟ್ ಅಲ್ಲಿ some more point you remind me, Grishma will add later. Embedded derivatives, converting what you called equity and the debt component, segregating the same. Okay, ಅದನ್ನ go through ಮಾಡಿ. I'll just give a brief. Debentures are issued today, and after 5 years, they are going to be partly convertible debentures. 500 lakh is the debentures, 300 lakh is going to be converted into equity component, 200 lakh is going to continue to be a debenture only. So in that case, a 200 lakh related portion, you have to account it as a debenture, debt component, and balance portion has to be equity. Depending upon the cash flow, what you pay, interest, that's a mathematical calculation, go through it, which is a normally asked question. Next, financial instrument, the disclosure requirement is also extremely crucial. There will be pure theory question also about how do you segregate the financial component, how do you segregate the debt component, and how do you disclose the same. Adra ಬಗ್ಗೆ go through ಮಾಡಿ. Breathe in, breathe out. ಮಾಡಬೇಕಲ್ಲ ನೀವು. ಇದು ನಿಮ್ ತರ ಆಡ್ತಾವ ಒಂದ್ಸಲ. This also realizes Shetty needs a break answer. ಕೊಡ್ತೀನಿ 10 minutes ಬ್ರೇಕ್ ಕೊಡ್ತೀನಿ. ರೀಸನಬಲ್ ಸ್ಟ್ಯಾಂಡ್ ಮುಗಿಸೋಣ, ಬೇಜಾರಾಗ್ಬಿಡುತ್ತೆ ನೆಕ್ಸ್ಟ್ ಸೆಕೆಂಡ್ ಸೆಷನ್. ಲಾಗಿಂಗ್ ಔಟ್, ಡು ನಾಟ್ ಕ್ಲೋಸ್ ದಿಸ್ ವಿಂಡೋ ಅಂತ ಬರ್ತದೆ. ನೀವು ಇನ್ನಷ್ಟಕ್ಕೆ ಮಾಡ್ಕೊಂಡು ನಾವು ಕಂಟಿನ್ಯೂ ಮಾಡ್ತೀವಿ. ಶರಣ್ಯ ಇಂಡಿಯಾಸ್ 110 is about statement of cash flows.
Consolidation.
ಆ CFS ಬೇರೆ, ಈ CFS ಬೇರೆ. ದೀಪ, ಆ CFS ಯಾವುದು? ಇಂಡಿಯಾಸ್ 7. Okay, cash flow statement. Now what we are talking about is Sapna consolidated financial statement. Holding company 2 within bracket 46, subsidiary company 287. So when there is an associate, when there is a joint venture, JASH, there can be consolidation. Consolidation is a must. So subsidiary includes associate and joint venture, but for the purpose of chain holding, you can have only 2 layers. Our layers do not include associate and joint venture. It talks only about the subsidiary. Theory part, corporate law go through. Consolidation, India's 110. Okay, how do you do? 6+2, beautiful steps. Step 1, determination of the shareholding pattern. Visualize. So traditional balance sheet visualize ಮಾಡ್ಕೊಳ್ಳಿ. Holding company balance sheet, asset side. Subsidiary company balance sheet, liability side. Asset side, I hold you. So step 1, determination of shareholding pattern. I should be holding more than half of the board of directors or more than half of the total voting power. Half. Equity share capital mainly considered. So step 1 ali subsidiary company share capital say 100 lakh, 2 RMRs held by H Limited 60 lakh, held by NCI 40 lakh. So 60-40, 3:2, ... So you write 60 lakh is X1, 40 lakh is X2, face value. Artha aita? Step 2, analysis of other equity of subsidiary companies. Share capital agoytu, reserves and surplus. Deepa, very good, excellent. You are answering super. Other equity, okay, ನೀವು 2-3 ಕ್ಲಾಸ್ ಮಿಸ್ ಮಾಡಲ್ಲ, ಅದೆಲ್ಲ ಜೀರೋ ಮಾಡ್ಬಿಟ್ರಿ ಇವತ್ತು ಬೈ ಆನ್ಸರಿಂಗ್. ಸೋ ಹ್ಯಾಪಿ ಫಾರ್ ಯು. ಓಕೆ, ರೈಟ್. ಸ್ವಲ್ಪ ಮೇಲೆ ಮಾಡ್ಕೊಳ್ಳಿ, ನಿಮ್ ತಲೆಗೊಂದು ಮಾತ್ರ ಕಾಣ್ತದೆ ನಮ್ಗೆ ಹಂಗೆ. ರೈಟ್ ರೈಟ್, ಓಕೆ ರೈಟ್. ಮಲ್ಕೊಂಡ್ರೆ ಗೊತ್ತು, ಬಟ್ ಆನ್ಸರಿಂಗ್ ಸೋ ವೆಲ್. ಐ ಆಮ್ ಸೋ ಹ್ಯಾಪಿ ಅಂಡ್ ಪ್ರೌಡ್ ಆಫ್ ಯು. ಸೊ when it comes to others ಟೆನ್ಷನ್ ಆಗ್ಬೇಡಿ, ನಿಮ್ಗೆ ಗೊತ್ತಿರ್ಬೋದು, ಯು ಆರ್ ನಾಟ್ ಏಬಲ್ ಟು ಕಮ್ಯುನಿಕೇಟ್, ಇಟ್ಸ್ ಓಕೆ, ರೈಟ್. ಸೊ step 2 is other equity of S Limited as on date of reporting 31st March 2022. Other equity, general reserve, P&L account, preliminary expense, P&L account, debit balance, everything, total amount 2 RMRs. Pre-acquisition, till the date of acquisition, what was the amount lying? Say I acquired it on 1st October 2021. Opening balance of reserves, other reserves and surplus, current year profit till the date of acquisition. You have to prepare a P&L appropriation account, find out what is the current year profit, half year profit is pre-acquisition, other half goes to post-acquisition. So that whatever amount you get, 2 RMRs, H Limited and NCI, A1, A2. I hope you recall the presentation. Yes. Right side, post-acquisition profit. From 1st October till balance sheet date. How many months it can be?
6 months.
Number of years. Any number of years. In our example, 6 months, you are right. 1st October 21, consolidated balance sheet, Bhumika, I'll be teaching to Sincharika, in Magalu, 20 years later. ಅವಳಿಗೂ ಸೇಮ್ ಇರುತ್ತೆ, ಯಾಕಂದ್ರೆ ಆಗ ಕನ್ಸಲ್ಟೇಷನ್ ಸೇಮ್ ಇರುತ್ತಲ್ವೇ. ಏನೋ ಒಂದು ಸಿಂಚಲಿಕ ಒಂದು ಸಮ್ ನ್ಯೂ ಯುನಿಕ್ ನೇಮ್ ಏನೋ ಐಡಿಗೆ ಬಂತು. ಸೊ ಫ್ರಮ್ ಡೇಟ್ ಆಫ್ ಎಕ್ವಿಸಿಷನ್, ಶ್ರೀಶಾ ಟೆನ್ಷನ್ ತಗೋಬೇಡ, ಅವ್ನು ಚೀಪಿಟ್ ನನ್ನ ಬರುತ್ತವಳೆ, ಏನು ಕಿಸಕ್ಕಾಗಿಲ್ಲ ಅವಳಿಗೆ, ಬಿಟ್ಟಾಕು. ಸೊ 1st October ಇಂದ ವಾಟ್ ಎವರ್ ಡೇಟ್ 31st March 22 ಆದರೆ 6 months, 31st March 42 ಅಂದ್ರೆ 20 years 6 months. Post acquisition, foreign subsidiary company 4 years if you remember that. Okay, fine. So post acquisition profit less depreciation on fair value change, plus minus ಎರಡು ಆಗಬಹುದು. ಎನಿ ಡಿಪ್ರಿಸಿಯೇಷನ್ ಅಪ್ವರ್ಡ್ ಆದ್ರೆ ಮೈನಸ್ ಆಗುತ್ತೆ, ಡೌನ್ವರ್ಡ್ ಆದ್ರೆ ಪ್ಲಸ್ ಆಗುತ್ತೆ. ಅಪ್ವರ್ಡ್ ರಿವ್ಯಾಲ್ಯೂಯೇಷನ್ ಆಗಿದ್ರೆ ರಿವ್ಯಾಲ್ಯೂಯೇಷನ್ ಅಸೆಟ್ ವ್ಯಾಲ್ಯೂ ಜಾಸ್ತಿ ಆಗುತ್ತೆ, ಡಿಪ್ರಿಸಿಯೇಷನ್ ಜಾಸ್ತಿ ಆಗುತ್ತೆ, ಒಂದು ಪ್ರಾಫಿಟ್ ಕಮ್ಮಿ ಮಾಡಿ ಶರಣ್ಯ. whereas downward revaluation ಆದ್ರೆ ಡಿಪ್ರಿಸಿಯೇಷನ್ ಓವರ್ ಚಾರ್ಜ್ ಅದನ್ನ ರಿವರ್ಸ್ ಮಾಡೋದು. Depreciation calculation, be careful. There's one question where they have done a working back and done a beautiful question. Now, I have done it in the class. Then keep the step open for one more adjustment of step number 6. If there is an unrealized profit, upstream approach,
Upstream.
Upstream.
Upstream approach.
Upstream approach.
ಅವಳು ಚಾನ್ಸ್ ಹೋಗ್ಬಿಟ್ಟು ಅಮ್ಮ ಕತ್ಸರಿ ಮಾಡ್ಕೊಂಡ್ಬಿಟ್ಟು ಅಪ್ಸ್ಟ್ರೀಮ್ ಅಪ್ರೋಚ್ ಅಂತ. ಓಕೆ, ಇದು ಐ ರಿಮೆಂಬರ್ ಒನ್ ಆಫ್ ಅವರ್ ರಿಲೇಟಿವ್ಸ್ ಕಮ್ ಫ್ರಮ್ ಮುಂಬೈ. ದೇರ್ ಆಲ್ ರಿಚ್ ಪಾರ್ಟೀಸ್ ಅಟ್ ದಟ್ ಟೈಮ್ ಅಂಡ್ ಡ್ರೈವರ್ ಸಮೇತ ಬಂದಿದ್ರು. ಸೊ ಅವ್ರ ಚಿಕ್ಕ ಮಗು ಏನೋ ತರಲೆ ಮಾಡ್ತಾ ಇದ್ದು, ಅವ್ನ ಡ್ರೈವರ್ ಹೊಡೆದ ಜೋರಾಗಿ. ಸೊ ಓನರಿಗೆ ಗೊತ್ತಾಯ್ತು ಚಾನ್ಸ್ ಲೇರ ಯಾಕೆ ಅಂತ. ಅಂದ್ರೆ ಬಾಸ್ಗೆ ವಾಪಸ್ ಉಗಿಯಕ್ಕಾಗಲ್ಲ, ಅವ್ರ ಮಗು ಹೊಡಿಬೋದಲ್ಲ ಆ ತರ. ಇರ್ಲಿ, ಔಟ್ ಆಫ್ ಸಿಲೆಬಸ್ ಬಿಟ್ಬಿಡಿ. ಸೊ ನಾವು ವೆನ್ ಇಟ್ ಕಮ್ಸ್ ಟು ದಿ ಕನ್ಸಾಲಿಡೇಷನ್, ಸ್ವಪ್ನ ಕೆಲಸ ತಿಂತಾ ಇದ್ದೀರಾ? ತಿನ್ನಿ ಬರಾಗಿಲ್ಲ. ಕನ್ಸಾಲಿಡೇಷನ್ ಅವ್ರ ಹೊಟ್ಟೆ ಒಳಗೆ ಎಲ್ಲ ಕನ್ಸಾಲಿಡೇಷನ್ ಮಾಡ್ತಾರೆ ಈಗ. ಇರ್ಲಿ, ನೋಪರ್ ತಿನ್ನಮ್ಮ, ಯು ಆರ್ ಆಲ್ಸೋ ವೆರಿ ರೆಗ್ಯುಲರ್ ಅಂಡ್ ಕಮಿಟೆಡ್, ಹ್ಯಾಪಿ. ಸೊ ಕಮಿಂಗ್ ಬ್ಯಾಕ್, ವೇರ್ ಆರ್ ವಿ? ಸೊ ಪೋಸ್ಟ್ ಅಕ್ವಿಸಿಷನ್ ಪ್ರಾಫಿಟ್, ಸೊ ಲೆಸ್ ಡಿಪ್ರಿಸಿಯೇಷನ್ ಚೇಂಜ್ ಆನ್ ಫೇರ್ ವ್ಯಾಲ್ಯೂ. ನೆಕ್ಸ್ಟ್ ಅಪ್ಸ್ಟ್ರೀಮ್ ಅಪ್ರೋಚ್ ಅಂದ್ರೆ ಅಪ್ಸ್ಟ್ರೀಮ್ ಸಬ್ಸಿಡರಿ ಕಂಪನಿ ಸೆಲ್ಲಿಂಗ್ ಟು ಹೂಮ್? ಹೋಲ್ಡಿಂಗ್ ಕಂಪನಿ. ಪ್ರಾಫಿಟ್ ಅಲ್ಲಿ ಹೋಲ್ಡಿಂಗ್ ಕಂಪನಿ and NCA both have a stake. That's why you have to minus it and differential amount 2 RMRs. Left side B1 in green ink double box. Green ink
Double.
right side B2. Next step 2A, bonus shares if any, 2 RMR C1 C2. Step 2B, fair value change D1 D2. Step number 3 is computation of
Goodwill.
Goodwill.
capital. Refer 103. Total goodwill approach or partial goodwill approach. Total goodwill approach is when the NCA valuation is given, whereas partial goodwill is investment made less X1, A1, C1, D1. Don't touch D1. Differential about plus and goodwill, negative andre
Gain on bargain purchase.
Gain on
bargain purchase, which is ultimately
transferred to capitalism.
Excellent. ಅದು ಹೇಳ್ತಾ ಇರಬೇಕು, ಬರ್ತಾ ಇರಬೇಕು. ಇಲ್ಲಾಂದ್ರೆ ವಿ ಆರ್ ನಾಳೆ ಚೇಂಜ್ ಆಗ್ತಾ ಇರ್ತೀವಿ ಕ್ಯಾಪಿಟಲ್ ಅಂತ ಹೇಳಂಗಿಲ್ಲ. ನೆಕ್ಸ್ಟ್ ಸ್ಟೆಪ್ ನಂಬರ್ 5, ಇಂಟರ್ ಕಂಪನಿ ವೈಸ್ BRBP ಡೆಟರ್ಸ್ ಪೇಟರ್ ಎಷ್ಟು ಮೈನಸ್ ಮಾಡಬೇಕು. ಸ್ಟೆಪ್ ನಂಬರ್ 6 ಇಸ್ ಅಂಡರ್ ಪ್ರಾಫಿಟ್. ಇಫ್ ಇಟ್ ಇಸ್ ಡೌನ್ ಸ್ಟ್ರೀಮ್, ಡೂ ಇಟ್ ಇನ್ ಸ್ಟೆಪ್ 6. ಅಪ್ಸ್ಟ್ರೀಮ್ ಆದ್ರೆ ಯು ಹ್ಯಾವ್ ಟು ಡೂ ಇಟ್ ಇನ್ ದ ಸ್ಟೆಪ್ 2 ಇಟ್ ಸೆಲ್ಫ್. ಯು ಹ್ಯಾವ್ ಟು ಮೈನಸ್. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? then prepare the consolidated balance sheet. Line by line you add all assets, line by line you add all liabilities. Share capital only of H Limited. However, again, if there's intercompany holding, subsidiary company is also holding in a holding company, minus that also, reserves holding company as it is, plus B1 has been added here for the retained earnings. If there is any unrealized profit, etc., related asset, etc., that also need to be adjusted. Agreed? Important standard.
NCI special.
Yeah, NCI has to be shown. Excellent. Both of you, NCI. Yeah, NCI has to be shown under other equity on the face of the balance sheet itself.
Balance sheet.
Here the balance sheet is a story code. Go through money. 0 to 20% is normal. ನೋಡೋ ಮಚ್ಚ ಗರ್ಲ್ ನೋಡ್ತಾವಳೆ ಅಂತ, ಅದು ನಾರ್ಮಲ್. ಓಕೆ, ಅಲ್ಲಿಂದ ನಮ್ಮ ಹುಡುಗ ಲೈಫ್ ಅಲ್ಲಿ ಹಾಳಾಗಬಹುದು. ಅವಳ ಪಾಪ ಅವಳಿಗೆ ಇದು ಏನು ಗೊತ್ತಿಲ್ಲ ಏನಂದ್ರೆ, ಶಿರೀಷಾ, ಈ ಬಾಯ್ಸ್ ಲೈಫ್ ಹಾಳಾಗೋದು ಹೆಂಗ್ ಗೊತ್ತಾ? ಅವ್ನ ಇನ್ನೊಬ್ಬ ಫ್ರೆಂಡ್, ಈಗ ಆಶೀಶ್ ಅವ್ರ ಫ್ರೆಂಡ್ ಶಶಾಂಕ್ ಇದ್ದಾನೆ. ಶಶಾಂಕ್ ಹೇಳ್ತಾನೆ, ನೋಡೋ ಮಚ್ಚ ದಟ್ ಗರ್ಲ್ ಇಸ್ ಲುಕಿಂಗ್ ಎಟ್ ಯು ಅಂತ. ಇವನು ಅವಳಿಂದ ಬಿಡ್ತಾನೆ ಮತ್ತೆ ಅದಕ್ಕೆ ಕೇಳ್ಬಿಟ್ಟು. ಬಟ್ ದಟ್ ಗರ್ಲ್ ಆಸ್ ಎ ಸ್ಕ್ವಿನ್ ಟೈಸ್, ಅವಳು ಎಲ್ಲೋ ನೋಡ್ತಾ ಇದ್ದಿದ್ದು, ಇವನ್ ಬಿಟ್ಬಿಟ್ಟವ್ರೆ. ಗೊತ್ತಾಯ್ತಲ್ವಾ? LLTT, ಲುಕ್ ಲಂಡನ್, ಟಾಕ್ ಟೋಕಿಯೋ ಅಂತ. ಓಕೆ, ಇಲ್ಲಿ ಸೊ 0 to 20% ಚಾಕ್ಲೇಟ್ ಗೀಕ್ಲೇಟ್ ಅದು ನಾರ್ಮಲ್ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್. 20 to 50% ಈಗ ಶರಣ್ಯ ಮತ್ತೆ ಗುಂಡಪ್ಪ, ಓಕೆ, ಬಾಯ್ ಫ್ರೆಂಡ್ ಗರ್ಲ್ ಫ್ರೆಂಡ್, ಅಸೋಸಿಯೇಟ್, ಸಿಗ್ನಿಫಿಕೆಂಟ್ ಇನ್ಫ್ಲುಯೆನ್ಸ್. ನಾವೆಲ್ಲ ಹೇಳಿದ್ರೆ ಕೇಳೋದು, ಅವಳು ಹೇಳಿದ್ರೆ ಕೇಳ್ತಾಳೆ ಅವಳು. ಸೊ ಸಿಗ್ನಿಫಿಕೆಂಟ್ ಇನ್ಫ್ಲುಯೆನ್ಸ್ ಅಬೌವ್ 50% ಅಂದ್ರೆ ಅಷ್ಟೇ. ಅವನೇನೋ ಗ್ರಾಚಾರಕ್ಕೆ ಮದುವೆ ಆಗ್ಬಿಟ್ರೆ ಶಿ ವಿಲ್ ಬಿಕಮ್ ಎ ಹೋಲ್ಡಿಂಗ್ ಪೇರೆಂಟ್ ಕಂಪನಿ ಅಂಡ್ ಈ ವಿಲ್ ಬಿಕಮ್ ಎ ಸಬ್ಸಿಡರಿ. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? ಕರೆಕ್ಟಾಗಿ ಕೇಳ್ಕೊ, ನಿನ್ ಪಾಸ್ ಕೊಡ್ಬೇಡ. ನೆಕ್ಸ್ಟ್ ಫಿನಾನ್ಷಿಯಲ್ ಇನ್ಸ್ಟ್ರೂಮೆಂಟ್ ವಾಟ್ ಎವರ್. 129.3 talks about consolidated finance statement. 129.1 is a normal finance statement. 129.3 is a consolidated finance statement. Along with the finance statement, there is one more important point. Everyone note ಮಾಡ್ಕೊಳ್ಳಿ. ಅಲ್ಲಿ AOC ಫಾರ್ಮ್ಯಾಟ್ ಹಾಕೋಬೇಕು. ಭೀಷ್ಮ, AOC 1 ಅಂತ ಒಂದು ಫಾರ್ಮ್ಯಾಟ್ ಇದೆ ನಿಮ್ಮ ರೆಗ್ಯುಲರ್ ಪೇಪರ್ ನೋಟ್ಸ್ ಅಲ್ಲಿ ಇದೆ. ವೇರ್ ಲಾಂಗ್ ಬ್ಯಾಕ್ ದೇ ಯೂಸ್ ಟು ಆಸ್ಕ್ ದಟ್ ಫಾರ್ಮ್ಯಾಟ್, ಒಂದು ಫಾರ್ಮ್ಯಾಟ್ ಫಾರ್ 10 marks ಸಡನ್ ಆಗಿ ಏನು. ಸೊ AOC 1 ಅಲ್ಲಿ ವಾಟ್ ಇಸ್ ದ ನೇಮ್ ಆಫ್ ದ ಸಬ್ಸಿಡರಿ, ವಾಟ್ ಇಸ್ ದ ಪರ್ಸೆಂಟೇಜ್ ಯು ಹೋಲ್ಡ್, ಮೇಜರ್ ಐಟಮ್ಸ್, ಫಿಕ್ಸ್ಡ್ ಅಸೆಟ್ ಎಷ್ಟಿದೆ, ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಎಷ್ಟಿದೆ, ಶೇರ್ ಕ್ಯಾಪಿಟಲ್ ಎಷ್ಟಿದೆ, ಅದನ್ನು ನೋಟ್ ಮಾಡ್ಕೊಳ್ಳಿ. ದಟ್ ಇಸ್ AOC 1. ಆಲ್ ಆಫ್ ಯು ಗೋ ಥ್ರೂ ಇಟ್ ಒನ್ ಫಾರ್ಮ್ಯಾಟ್. ಬೈಹಾರ್ಟ್ ಮಾಡೋದು ಬೇಡ, ಜಸ್ಟ್ ಗ್ಲಾನ್ಸ್ ಮಾಡಿ. ರೈಟ್, ನೆಕ್ಸ್ಟ್. ಸೊ consolidated balance sheet includes all this. Consolidation is a must in India as of now. ಎಲ್ಲ BSP and ಇದೆ ಎಲ್ಲ ಸೇಮ್. Notes to account based on the materiality of the group, assuming one holding and there are 100 subsidiary. Can there be 100 subsidy now? Yes. ಚೈನ್ ಹೋಲ್ಡಿಂಗ್ ಗೆ ಮಾತ್ರ ರಿಸ್ಟ್ರಿಕ್ಷನ್ ಇರೋದು. ಓಕೆ, ನಿಮ್ ಮಗನಿಗೆ ಮಗ ಆಗೋರಿಗೆ ನೀವಿರಿ, ಅದಾದ್ಮೇಲೆ ಬೇಡ ಅಂತಾರೆ, ಅದಾದ್ಮೇಲೆ ಅವ್ರು ನೋಡ್ಕೋತಾರೆ. ಚೈನ್ ನೆನ್ಪಿಟ್ಕೊಳ್ಳಿ, ನಿಮ್ ಮಗ ಆಗೋರಿ, ಆ ಮಗನಿಗೆ ಮಗ ಆಗೋರಿಗೆ ಎಷ್ಟು ವರ್ಷ ಇರೋದು? ಹೋಗ್ರ, ದಟ್ ಇಸ್ ವಾಟ್ ಚೈನ್ ಹೋಲ್ಡಿಂಗ್. ಬೇಡ, ನಿಮ್ಗೆ ಎಷ್ಟು ಮಕ್ಕಳು ಬೇಕಾದ್ರೆ ಆಗ್ಬೋದು. ಅಶೋಕ್, ನಂದು ಈಗ ಕೇಳಲ್ಲ ಸರ್, ಯೂನಿಯನ್ ಬ್ಯಾಂಕ್ ಆಫ್ ಇಂಡಿಯಾದ ಎಷ್ಟು ಬ್ರಾಂಚ್ ಓಪನ್ ಮಾಡಿದ್ವಿ ನಾವು ಅಲ್ವೇನ್ರಿ? ಸೊ ಕ್ಲಾಸಿಕ್ ಎಕ್ಸಾಂಪಲ್ ನೋಡಿ, ಅವ್ರದ್ದು ಯೂನಿಯನ್ ಬ್ಯಾಂಕ್ ಆಫ್ ಇಂಡಿಯಾ ಓದಲೆಲ್ಲ ಓಪನ್ ಮಾಡ್ತಾರೆ ಅವರು, ಏನೋ ಬ್ರಾಂಚ್. ದಟ್ ಇಸ್ ಪಾಸಿಬಲ್. ಓಕೆ, ಸೊ ಅವರು ಸಬ್ಸಿಡಿ I don't think we can have more than 2. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? ರೈಟ್. Horizontally many hour, how many hour?
Yes.
Only vertically only 2. Excellent. I am very happy. So then it applies to India's 110. ಯಾರಿಗೆ ಪೇರೆಂಟ್ ಇರಬೇಕು, ಸಬ್ಸಿಡಿ ಇರಬೇಕು, there is a concept of control definition is same. By heart ಮಾಡ್ಕೊಳ್ಳಿ, very important. Yeah. Then stories ಇದೆ, ಇದರ ರಿಪಿಟೇಷನ್, ಆ ಸ್ಟೆಪ್ಸ್ ಎಕ್ಸ್ಟ್ರೀಮ್ಲಿ ಇಂಪಾರ್ಟೆಂಟ್ ಸ್ಟೆಪ್ಸ್. ಲ್ಯಾನ್ಸ್ ಮಾಡಿ ವಾಟ್ ಐ ಸೆಡ್. ಗೊತ್ತಿದೆ ಅಂತ ಅನ್ಕೊಂಡಿದ್ದೀನಿ ಎಲ್ರಿಗೂ. ರೈಟ್. ಗುಡ್ ವಿಲ್ ಕ್ಯಾಲ್ಕುಲೇಷನ್ ಅಗೇನ್ ಸ್ಟೆಪ್ಸ್ ಇದು ಡಿಟೇಲ್ಡ್ ನೋಟ್ಸ್ ವಾಪಸ್ ಕೊಟ್ಟಿದ್ದೀನಿ ನಾನು ಇಂಟೆನ್ಷನಲಿ. ಯಾಕಂದ್ರೆ ಐ ವುಡ್ ಕಂಡೆನ್ಸ್ ಫರ್ದರ್, ಬಟ್ ನೀವು ಇನ್ನೂ ಕಂಡೆನ್ಸ್ ಮಾಡಿದ್ರೆ ಕಷ್ಟ ಆಗ್ಬಿಡುತ್ತೆ. ಅದಕ್ಕೋಸ್ಕರ ಇಲ್ಲಿ ಒಂದು 100 pages ನೋಟ್ಸ್. ರಿವಿಷನ್ ಅಷ್ಟು ಇಲ್ಲ ಅಂದ್ರೆ ಮತ್ತೆ ಹಿಂಗೆ ಅಲ್ವಾ? ಸೇಮ್ ನೋಟ್ಸ್ ಇನಿಷಿಯಲ್ ಬ್ಯಾಚ್ ಅಲ್ಲಿ ಕಾಪಿ ಪೇಸ್ಟ್ ಆಗ್ತದೆ ಕ್ವಶನ್, ಅದಕ್ಕೆ ಐ ಡೋಂಟ್ ವಾಂಟ್ ಟು ಚೇಂಜ್. ಗುಡ್ ವಿಲ್ ಒಂದು 3 ಕಲೆ ಇದೆ ನೋಟ್ಸ್. ಕನ್ಸಾರ್ಟ್ P&L account. Consolidated P&L account, line by line you have to add. Only revenue transaction you have to eliminate. ಅಷ್ಟೇ. Revenue transaction like dividend paid, sales purchase ಇದ್ರೆ ಅದನ್ನು ಮೈನಸ್ ಮಾಡ್ಕೊಳ್ಳಿ. Chain holding. Can there be a chain holding? Answer is yes, 2 subsidiary. So chain holding ಅಲ್ಲಿ ಏನ್ ಮಾಡಬೇಕು? 2 times questions have been asked again. Important. Okay. So ಅದು ಉಷಾ ನಿಶಾ ಮತ್ತೆ ಸಂಧ್ಯಾ ನೆನಪಿದ್ಯಾ? UNS. Okay, right. So first, it is like a BODMAS concept. Brackets of division, multiplication, addition, subtraction. Least subsidiary first you have to analyze. Then comes to higher subsidiary, then parent. Meaning, so X, A1 ಕೆಳಗೆ A2 ಇದ್ರೆ first A2 ನೋಡ್ಕೋಬೇಕು. Then A1. A2 ಇಂದ A1 ಬರುತ್ತೆ, A1 ಇಂದ parent ಗೆ ಬರುತ್ತೆ. That is the approach you are supposed. Same steps. And always go by India's effective control. H Limited holds in S1 80%. S1 holds in S Limited 60%. So you should consider H2, S2 is 80 plus 60, 48%. 48% subsidiary na? Maybe. Because it is effective control what I look at it. Substance over form what I look at it. That's why you have to go by that. Artha aitendro? Fine. Then everything else is same. Usha Nisha Sandhya problem ಮಾಡಿ ಎಲ್ಲರೂ. ಯಾರಾದ್ರೂ ಮಾಡಿ. Can there be different reporting date? Normally no, but in some special cases it can be, but not more than 6 months. Yeah. In such a case, what to do? Either prepare the balance sheet for both on 31st March itself, or take the different reporting date balance sheet, material changes and impact ಮಾಡ್ಕೊಂಡು redraft the balance sheet and do the things. Acquisition and disposal by stage. New scheme is still now they are not asked, but go through. I have done one question in the regular class. If there is a sale, so simple. I had 80% till 28th February, Ashok, and 20% I sold on 10th March. Close your eyes, 31st March, 60-40, full stop. What happened in between? Bad gap. Whereas if it is the acquisition, for each acquisition, additional capital profit you have to identify. Refer that regular class material. One problem, glance body. New scheme historic Kedila. Disclosure requirement, story, okay. So what is the subsidy company, percentage hold, etc. Then the definition of control only says which can be excluded. Next, 111 and 112. 111 is joint venture. ಅದು ಮಿಸ್ ಆಗಿದೆ ಗೊತ್ತಿಲ್ಲ, ನೋಡ್ಬೇಕಂತೆ ನೋಡ ಮತ್ತೆ ಇಲ್ಲದ್ರೆ ಮತ್ತೆ ವಾಪಸ್ ಬರ್ತೀನಿ. 111 is joint arrangements. There are 3 kinds of joint arrangements. One is jointly controlled asset, jointly controlled operation, jointly controlled entity. Jointly controlled entity comes in India's 27. Okay. Whereas jointly controlled asset, for example, Mangalore, ಅದು ಮಿಸ್ ಆಗಿದೆ, ಗ್ರೀಶ್ ಆಡ್ ಮಾಡಬೇಕು ನೆನಪಾಡೋ. Mangalore to Kudremukh, there is iron ore. Myself and Sharanya, we are holding 60-40. I hold 60% sure. We have a joint control. None of them are a DC factor. Both of us together are jointly controlling it. So that is called jointly controlled asset. Next, Sirisha and Swapna are operating mining activity in Kolar, jointly controlled operations. So we go by proportionate consolidation approach. Then, but if it is not, I'll dictate some notes for all of you. So India's 110 goes by total consolidation approach. Mera baap ka mala, everything you add, then NCI you show separately. Whereas joint arrangements only proportional consolidation. My balance sheet, I take 60% of the asset, 60% of the liability, 60% of revenue, 60%. Her balance sheet, she will take proportionally 40%. Arthak area. One special point here is, okay, when there's a transaction between the ventures, I had purchased a building for 100 lakh personally. I put it into joint venture for 200 lakh and then subsequently it is sold. When I sell it to joint venture, 100 lakh worth of asset sold at 200 lakh, profit is 100 lakh. I should recognize 100 lakh into other venturers share 40 lakh because 60 lakh is the profit which I make by selling to myself, which I cannot. I marry myself and I have 3 kids. Nonsense. Cannot happen. Arthak area. So, individually, I have an asset of 100 lakh. Beautiful example in my notes with the journal entry. I sell it to joint venture. Joint venture, my share is 60%.
Yes.
When I sell it to Saranya, I can make a profit. When I sell it to myself, I can make a profit here. So that's why, am I fast? You're able to catch? Reasonably?
Yes.
Revision, okay, na? So 100 lakh into 40%, I should recognize. Okay, that is a joint arrangement. 112 disclosure requirement of all 110, 111. The disclosure requirement same. What is the percentage you held? What is the accounting for the story query? Goodwill as to capital query. Next, very important 113. 100 series mugisbittu break code. 113 fair value and substance are 2 important forms. 113 ke naan hedide idle 3 related anta. Yenappa? 3 related. Title alle fair value measurement. Next, fair value means OMM. Illella barutte. OMM. Orderly transaction between market participant as a measurement date. Then not applicable, I'll go through Madi. Okay. It is price received to sell or paid to settle a liability. Valuation technique is MIC. Again, 3. Market value approach, income approach, cost approach. Market, if it is available in the market, income and the future cash flow converted to today's value, cost approach. Important. Fair value hierarchy. So, intermediate, Divya Deepa. They are twins. Divya and Deepa are identical. Absolutely same. Aman and Shravan Aman Shetty and Shravan Shetty. They are also twins, but they are not identical. Okay. So Divya Deepa are identical twins. They come at level 1. Whereas Aman and Shravan, they are similar, but they are not identical. Come to the second category. Whereas Sharanya and Bhumika are totally different. That means that you have to go by level 3. Arthak idea. So the comparison purpose, how we have to manage. So fair value measurement, 3 words, Sinija. Then OMM, 3 words. Then fair value. Techniques anta kelidre you should go by illu class alli idira ನೆನಪಿಡಿ ಇಂಟರ್ಚೇಂಜ್ ಮಾಡ್ಕೊಳ್ಳಿ ವ್ಯಾಲ್ಯೂ ಟೆಕ್ನಿಕ್ ಮತ್ತೆ ಎಕ್ಸಾಮ್ ಅಲ್ಲಿ ಎರಡು ಬರಬೇಡಿ ಟೆಕ್ನಿಕ್ ಬರ್ರಿ ಲೆವೆಲ್ 1 ಲೆವೆಲ್ 2 ಬರ್ರಿ ಯಾವುದೋ ಒಂದು ಆನ್ಸರ್ ಫಿಟ್ ಆಗುತ್ತೆ ಟೆಕ್ನಿಕ್ ಇಸ್ ಮೈಕಲ್ ಟೆಕ್ನಿಕ್ ಇರಬೇಕಲ್ವಾ ಮೈಕಲ್ ಟೆಕ್ನಿಕ್ ಇರಬೇಕು ಅದಕ್ಕೋಸ್ಕರ ಓಕೆ ನೆಕ್ಸ್ಟ್ ಫೇರ್ ವ್ಯಾಲ್ಯೂ ಹೈರಾರ್ಕಿ level 1 is identical, level 2 is similar, level 3 is unobservable where Beetle car cannot be compared with the Volkswagen. I hope you recall that. ನಿಮಗೆ ರಿವಿಷನ್ ವಿಷನ್ ತರ ಆಗ್ತಾ ಇಲ್ಲ, ರೆಗ್ಯುಲರ್ ಕ್ಲಾಸ್ ತರ ಆಗ್ತಾ ಇಲ್ಲ. Thanks to me. Next fair values. 113 says how to measure, when to measure, respective standard points. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? Right. Next CG ನಲ್ಲೂ ಫಾಲೋ ಮಾಡಬೇಕು. Next 114 ಏನೋ deferred. Deferred regulated, they're not there in the syllabus. 115, one more extremely important standard. Yeah. Revenue from contract with the customer. First you have to understand there's a contract, then there are some customers, from there is where you get the revenue. Okay. For revenue from contract with the customer, core principle is there should be an accrual method of accounting. Then the Sale of Goods Act and for a consideration you have to consider. What is revenue? Revenue is an income arising in the ordinary course of business. Income is very important definition, which increases the asset or decreases liability in the ordinary course of business other than contribution by equity participant. Extremely important definition. Revenue is an income. That's why in part 2, revenue from operation, other income, total income. total revenue alla. They have changed it to total income now. So illi revenue is an income. Income is a revenue alla. Artha agta idya? Revenue is an income. Increase of the asset or decrease of the liability other than the equity participants. Okay, and which arise in the ordinary code. Very important definition. I'm stressing on this. Next, other the examples alla ide go through madi. Okay, right. Story. Revenue should be recognized only when it is in the ordinary activity, where there is a contract and where the customer who is ready to pay a consideration. Crucial conditions, Vodama, for recognizing revenue. And the regular class I used to tell, sir, 115 pan bida you sold 50 paisa, you recognize? It is understood that is applied. Copper condition. So it is simple. Individually you can do. How do you allocate the price for pan and beetle net? Nonsense. That all concept will not be there. Okay. Materiality you have to apply. 5 conditions. If Sharanya is tired, others can read. Anybody wants. If anybody else want to read, also read.
The core principle is based on COPER. Identify the contract with customers. Identify separate performance obligation in the contract. Determine transaction price, fair value, note A. Allocate the transaction price to separate performance obligations for standalone transactions, note B. Recognize revenue when it satisfies performance obligations. Measurement of performance satisfaction progressively. Recognize revenue.
Copper, extremely important. Copper conditions. ಕೋಪ ಮಾಡ್ಕೊಳ್ಳಂಗಿಲ್ಲ, ಏನೇ ಆದ್ರೂ ಪರವಾಗಿಲ್ಲ ಸರ್, ಕೋಪ ಮಾಡಂಗಿಲ್ಲ. ಓಕೆ, ಯಾವುದು ಕಾಂಟ್ರಾಕ್ಟ್ ವಿತ್ ದ ಕಸ್ಟಮರ್ ಐಡೆಂಟಿಫೈ ಮಾಡಬೇಕು, ಪರ್ಫಾರ್ಮೆನ್ಸ್ ಆಬ್ಲಿಗೇಷನ್ ಇರಬೇಕು, allocate the price. ಇದರ ಬಗ್ಗೆ ಕ್ವಶನ್ ಕೇಳವರೆ, how many times they ask the question. Then price as well allocate, then recognize the revenue subject to the what you call satisfaction of the condition. Okay, allocation of the price. Allocation of the price, if it is directly possible, go by that. Is important again. If it is not possible, you have to go by ACR, short form ಬರ್ಕೊಳ್ಳಿ. The short form ಬರೆಯಮರಿ. If not, use ACR, adjusted market approach, cost plus margin approach. ಯಾರು ಇಲ್ಲ ಅಂದ್ರೆ ಹಳೆಗಂಡನ ಪಾದ. Yeah. Next, stage of completion. Either you can go by input method, cost divided by total expected cost, or the output method, 2 floors out of 3 floors. 5 conditions of the revenue. Adanne story kujidi. Can there be a modification of the contract? Suppose if it results in a separate contract, then you have to identify separate contract. Else you have to consider it as a part of the same catch-up agreement. Adike catch-up agreement on the question of is recent. Additionally, extra amount what you are paying, it's like a catch-up agreement. Painting ಮಾಡಕ್ಕೆ ಹೇಳಿದ್ರೆ, painting ಮಾಡಿದ್ಮೇಲೆ something else emulsion paint ಹಾಕಬೇಕಾಯ್ತು, extra you do. It's a catch-up agreement. Whereas building extra ಮಾಡಕ್ಕೆ ಹೇಳಿದ್ರೆ, it will be a separate contract altogether. I hope you are understanding. Catch-up agreement ನೋಡಿ ಇಲ್ಲಿದೆ. ನಿಮ್ಮ ಕ್ವೆಶ್ಚನ್ ಅಲ್ಲಿ ಬಂದಿದೆ, December 21 ಇರಬೇಕು ಮೋಸ್ಟ್ಲಿ, ಅಥವಾ July ನೋಡೋಣ. Multiple agreement, okay. Transaction price ಬಗ್ಗೆ story ಇದೆ, warranty guarantee ನೋಡ್ಕೊಳ್ಳಿ. Warranty is for repairs, guarantee is for replacement. Correct alva? Yeah. Next, very important, the transaction what you talk about. Illru idira class alli?
Yes,
sir.
It may also consist of significant finance component. Loan by customer to entity where you received the advance, common sense use money. As I'm selling the goods to Bhumika somewhere in 30th June 2023, but she has to give me advance right now. There is an advance. That means loan by the customer. Interest may be there. Interest what? Otherwise, actually, I would have charged 120 lakh, but for her I charge only 100 lakh. 20 lakh is the interest what I am foregoing. Ulta. So I sell it to Shilpa now, and she gives the money after 3 years. That means I would have normally I sell it 120, but I would have charged 150. 30 lakh is the finance component. You have to segregate and write. Artha aita? This regular class will ಮಾಡಿದೀವಿ problem. So I hope if you are not done, if any of my new friends are listening, you have to take out the CS2 material and do it as well. ACR ಅದರ same repetition ಇದೆ. Control ಬಗ್ಗೆ definition ಇದೆ. Contract costing ditto AS7 almost same. Okay. Percentage completion method and future operating loss also has to be considered. Okay. ಇದೆಲ್ಲ ಬೇಡ ಬಿಡಿ. Repurchase agreement. Okay. Repurchase agreement is extremely important. Okay. Where you sell the asset with the condition or obligation that you take. Forward option and call option. Class
yes,
Yes,
forward
sir.
option is an obligation to repurchase. Call option is entity has a right to repurchase. So FC for entity as an obligation. In this case, customer has a limited control. Whereas put option is entity the obligation repurchase at the customer's request. So if that is the case, it goes as a Ind AS 116 lease accounting. Put option goes as a what do you call lease accounting. Let's say sale and lease back. Sale and lease back. Shetty sir is the owner. Next, Sharanya is a employee. Shetty sir is the employee. Sharanya is the employer. I have a big car. I sell it to her, no profit. Or even if there's a profit, not taxable because it's a personal effect. Then she leases it back. She is a lessor. I am the lessee. So income tax she can get the benefit because circular number 2/2001. For all practical purpose, accounting has to be done based on the operating lease or finance lease. From the lessor's point of view, lessee point of view, there is no such concept. Next, one more extremely important concept is called service concession agreement. Boat, bolt, extremely important. ನಿಮ್ಮ regular class problem ಇದೆ solve ಮಾಡಿದ್ವಿ. ಬಿಲಾಪುರ, ಕಾನ್ಪುರ, ನಾಗ್ಪುರ್ ಪ್ರಾಜೆಕ್ಟ್ ಕೋಎನ್ ಅಂತ ಏನೋ ಮಾಡಿದ್ವಿ. Build, operate and transfer. So I am a toll road constructor, L&T. I build it, then operate for some year, then transfer to the government. Atava build, own, operate and transfer. So I build, own it for reasonable period, operate. Atava I don't want to operate it. I build, own, give it to third party for lease and then transfer. Okay. So revenue recognition, how do you do it? That Kolhapur Nagpur Express Highway one problem ಇತ್ತು ನೋಡ್ಕೊಳ್ಳಿ ಅಥವಾ ಏನು ಬಿಜೆಪಿನ ಏನಂತಲ್ಲಿ Bilwara Jabalpura project on question. Okay, that question which you did in the class, please go through. Extremely important. Disclosure requirement normal. The last standard before the break. Since you are responding well, answering well, you are showing interest, I am also going exhausting. Paragilla, non exhaustive paragilla. So, ilan 9 o'clock wind up on a program. Thanks to your good response and whatever. (116) compulsory question because the latest standard available to you. From the lessor's point of view, AS-19 and lease same. There is a concept of operating lease, there is a concept of finance lease. Shetty sir, Shamiana, Bhumika is getting married. Example, the next day, chicken Madhya plan February 30th next year, Mana. 30th, 29th next year.
Sir, okay.
ಅದು ಯೋಚನೆ ಮಾಡ್ತಾರೆ ಪರವಾಗಿಲ್ಲ ನಾಟ್ ಬ್ಯಾಡ್ ನೆಕ್ಸ್ಟ್ ಇಯರ್ ಲೀಪ್ ಇಯರ್ ಇಲ್ಲ ಅಂತ ಗೊತ್ತಾಯ್ತು ಹುಡುಗಿಗೆ ರೈಟ್ ಸೊ ಏನ್ ಲೀಪ್ ಇಯರ್ ಶ್ರೀಶಾ ನೆಕ್ಸ್ಟ್ ಇಯರ್ ಇಲ್ಲ ಲೀಪ್ ಇಯರ್ ಇಲ್ಲ ಬೇಡ ಸೊ ಶೆಟ್ಟಿ ಸರ್ ಶಾಮಿಯಾನ ಭೂಮಿಕಾಸ್ ಮ್ಯಾರೇಜ್ 3 days ಶೆಟ್ಟಿ ಸರ್ ಇಸ್ ದ ಓನರ್ lesser fixed asset for me, PPE for me, depreciation for me. In my book, lease rental is income. In our book, lease rental is expense. Full stop. Next, Sanjay, Tata Motors. Tata Motors sell car to him, 12 lakh into 5 installment. So that is a lease, 12 lakh into 5 over 5 years. So 60 lakh. Plus there is a residual value decided. Tata Motors says it's 5 lakh. Sanjay says only 4 lakh. So lesser's point of view, visualize. In the case of lesser book ಅಲ್ಲಿ ಮಾತ್ರ ಆಪರೇಟಿಂಗ್ ಲೀಸ್ ಫೈನಾನ್ಸ್ ಲೀಸ್ ಬರೋದು. ಆಪರೇಟಿಂಗ್ ಲೀಸ್ ಇಸ್ ಚಿಲ್ಲರ್, ಎಲ್ರಿಗೂ ಅರ್ಥ ಆಯ್ತು ಅಂತ ಅಂದ್ಕೊಂಡಿದ್ದೀನಿ. ಫಿನಾನ್ಸ್ ಲೀಸ್ ಅಂದ್ರೆ ಇನ್ ದ ಬುಕ್ ಲೆಸ್ಸರ್ ಇಟ್ ಇಸ್ ಸೇಲ್. ಹೌ ಮಚ್ ಇಟ್ ಇಸ್ ಸೇಲ್? ಎಂಟೈರ್ ಅಮೌಂಟ್ ವಾಟ್ ಐ ಆಮ್ ಎಕ್ಸ್ಪೆಕ್ಟ್ ರಿಸೀವ್ ಫ್ರಮ್ ಸಂಜಯ್ ಇನ್ ಟುಡೇಸ್ ವ್ಯಾಲ್ಯೂ. Amount what I expect receive Yatishwar is a gross investment. 12 lakh into 5, 60 lakh plus guaranteed residual value 4 lakh, unguaranteed residual value 1 lakh, 65 lakh converted to today's value. So it comes to something around 50 lakh. This is the receivable. So total amount receivable from Sanjay is 65 lakh. To sales 50 lakh. Balance 15 lakh. I am collecting extra unearned finance income. Yenapa? Taken to finance is interest of the finance income is always on time proportion. Take it to the P&L account on the reducing balance approach. Artha agta idea? Take it to the P&L account on the reducing balance approach. So lesser point of view, there is operating lease and finance lease. Lessee's point of view, there is no such concept. It is only ROUA, right of use asset. Whether it is Shamiana, whether it is a car, I am using the assets, I am not become the owner. So right of use asset, very, very important. So you'll be recognized at the first lease liability is to the final body. What is the minimum amount which I agree to? Apart from that, so minimum lease liability, I am acquiring an asset. I'm listening? Acquiring an asset. actually reverse working ಅಂತ regular class ಅಲ್ಲಿ ಹೇಳಿದೆ. Assuming I am purchasing an asset for 100 lakh, 20 lakh I have paid it as an advance, then 80 lakh is the creditors, then another 10 lakh registration charges. Total cost will become 110 lakh. If they are not given this, lease asset is equal to lease liability, 80 lakh, 20 lakh is the pre. Then other incidental direct cost, one extra item is decommissioning cost tomorrow at value. If you just add all this, minus any incentives of the government grant received, minus model, that is the ROU asset. Then PJ recent tag model regular class students. Then
Last class.
Yes, sir.
Sapna video stuck again, right? So that's the ROU asset, right? And the definition of lease is important. Lease is ಅಥವಾ lease contains. Lease is ಅಥವಾ lease contract contains a lease. That is extremely important. Okay, right? So the story where it is not applicable, which is covered by other standards, not applicable. That's better story. Is important. Lessee elects to apply. Okay, elects not to apply. Is important. Is important. Not to apply Bhumika. Short-term lease, bad mege 2 months, 3 months, halagoytanta. Athava which is a slow value, you may not have to bother. Okay, fine. Next, identifying the lease in the contract. So you purchase the AC, then there may be some lease related to some other component. How do you identify? Okay, so you need to ensure that lease is a separate transaction and it's independent. It is a highly independent transaction. Fair enough. Standard is in the books of lesser. There's the concept of operating and finance lease. Let's see, there's no such concept. It's only ROE. Okay, ROE, new concept ROE and sari madam regular notes sari hoಗಬೇಕು lease liability. Okay, right. Finance lease ಹೇಳಿದೆ. Lesser book ಅಲ್ಲಿ ನೋಡ್ಕೊಳ್ಳಿ. Let's see book is important. ಇದು ಓದಮ್ಮ. ROUA ಇಲ್ಲಿಂದ ಓದಮ್ಮ.
Measuring of right of use of asset, ROUA is equal to lease liability plus initial direct cost of lessee plus prepayments plus decommissioning cost minus incentives received.
So this lease liability, whatever you have, okay, how do you consider? It is the present value of lease payment plus present value of expected payment at the end. That is nothing but a guaranteed residual value.
Residual.
Okay, yeah. Adana add ಮಾಡಿದ್ರೆ once lease liability ಬರುತ್ತೆ plus other expense add ಮಾಡ್ತಾರೆ. ಮತ್ತೆ ಸ್ಟೋರಿ. ಓಕೆ, ಲೀಸ್ ಮಾಡಿಫಿಕೇಶನ್ ಬಗ್ಗೆ ಕೇಳಬಹುದು. ಮಾಡಿಫಿಕೇಶನ್ ಅಥವಾ ಡಿಸ್ಕೌಂಟ್ ರೇಟ್, ಇಂಟ್ರೆಸ್ಟ್ ರೇಟ್ ಇಂಪ್ಲಿಸಿಟಿ ಇದ್ರೆ ಅದನ್ನೇ ತಗೊಳ್ಳಿ. ಇದು ಇಂಪಾರ್ಟೆಂಟ್ ಅಗೇನ್. ಅದು ಇಲ್ಲ ಅಂದ್ರೆ ಯು ಹ್ಯಾವ್ ಟು ಗೋ ಬೈ ಇನ್ಕ್ರಿಮೆಂಟಲ್ ಬಾರೋಯಿಂಗ್ ರೇಟ್. ಇಂಟ್ರೆಸ್ಟ್ ರೇಟ್ ಇಂಪ್ಲಿಸಿಟ್ ರೇಟ್ ಇಂದ ಡೆಫಿನಿಷನ್ ಕೊಟ್ಟವರೆ. ಇಟ್ ಇಸ್ ಬೇಸಿಕಲಿ ಲೈಕ್ IRR. ಓಕೆ, ವೇರ್ ಪ್ರೆಸೆಂಟ್ ವ್ಯಾಲ್ಯೂ ಆಫ್ ಲೀಸ್ ಪೇಮೆಂಟ್ ಅಂಡ್ ಅನ್ಗ್ಯಾರಂಟೆಡ್ ರೆಸಿಡ್ ವ್ಯಾಲ್ಯೂ ಈಕ್ವಲ್ಸ್ ಫೇರ್ ವ್ಯಾಲ್ಯೂ ಪ್ಲಸ್ ಇನಿಷಿಯಲ್ ಡೈರೆಕ್ಟ್ ಕಾಸ್ಟ್. ಓಕೆ, ಇದನ್ನ ಬೈ ಹಾರ್ಟ್ ಮಾಡೋದು ಇಂಪಾರ್ಟೆಂಟ್. ಲೀಸ್ ಮಾಡಿಫಿಕೇಶನ್. Now, I have taken a lease of a building for 10 years. After 6 years, if I wanted it to be extended for another 8 years, what should you do? All the present value at the beginning is to 6th year in the 8th year is to differential amount, a compulsory question again, recent class al madidane nanu, differential amount anna lease asset ge debit ಆಗಬೇಕು, lease liability ge credit ಮಾಡಬೇಕು. ಆ present value ಮಾಡ್ಕೊಂಡು ಮಾಡಬೇಕು. ಕೇಳಿಸ್ಕೊಂಡ್ರಾ? recent class ಅಲ್ಲಿ. ಯಾಕೆ ರಿವಿಷನ್ ಕ್ಲಾಸ್ ಅಲ್ಲಿ ಇರಲ್ಲ ಕೆಲವರಿಗೆ.
Yes.
Sublease andre I took it from Bhumika, then I give to Sharanya. That's called sublease. Okay, accounting is similar. ಇದು ಸ್ವಲ್ಪ ಎಕ್ಸ್ಟ್ರಾ ಸ್ಟೋರಿ ಕೊಟ್ಟಿದ್ದೀನಿ, ಬೇಕಾದವರು ಗೋ ಥ್ರೂ ಮಾಡಬಹುದು. ತುಂಬಾ ಜಾಸ್ತಿ ಇದೆ ಸ್ಟೋರಿ. ಸಾಕು. I hope you are reasonably able to understand.
Yes.
Yes,
No.
sir.
So you are able to recall 90%. Great. Okay, ಇದನ್ನ ಹಂಗೆ reproduce ಮಾಡಿ at least something what you are able to, that it is the exam. 8:55 we meet. 9 we'll meet. Take a good break. Okay, 9 o'clock we meet. 13 minutes. Are you back?
Yes, sir.
Yes, sir. So ready now? Okay. So for the benefit of our new viewers, we just started the next batch, and 2 days back. Anyone they want to join, they can join. Subject wise, pen drive wise coaching may not work out as far as CA education is concerned. Even after repeated intimation, some students are not understanding. maybe after 1 or 2 years of cycle, they'll come back, okay, with the right approach. So then some of the students would have discontinued earlier for whatever reason. They are golden opportunity sitting at home and attending the online live classes. And they have attended the class at CAPS earlier and they are discontinued maybe because of the family and other commitment. Their fees remains at 30,100. For others, still it is lesser, only 42,500 for general public. Traditional old joke. I don't know, recently I told or not. With due respect, 7 Sardajis came to Bangalore. They caught an auto from Majestic to they are supposed to come to South End Circle. One auto, how they are sitting, don't worry, they're there found. And what is the auto charges? When they got down, it showed 28 rupees. Olden days, not now. And Sardajis looked at each other and they said, we want to go for a Dutch system. Tell the share of each person. Auto driver, with due respect, Bangalore auto drivers, looked at the Sardajis and said, each one of you give 13 rupees. How much? 13. So, Papa Sardajis, nice people, they gave 13 rupees and went off. After that, they had a doubt. 13 into 7 is it 28? Papa, they were not so good at maths. So they had one expert who is also Sardaj. He was expert in maths. They went to him and asked, boss, see, we are 7 of us. Total was 28. 13 into 7 is it 28? He said, Maihuna, why do you bother? Okay, I'll calculate. So he said, first let me go by division. Okay. So 28. 7 is a symbol, the traditional division. So 7 ones are 7. The difference is 21. 7 threes are the type fast. So 21. 7 threes are 21. Oh, first plus. What you paid is perfect. Division perfect. Then they said, okay, okay, let us check with the multiplication also. So let me check. What is the 13 into what? Ashok? 7. 13 into 7 ಮಾಡುವಾಗ Excel is ಮಾಡಬಹುದು. 7 3s ಎಷ್ಟು?
21.
7 1s ಎಷ್ಟು?
7.
21 plus 7 ಎಷ್ಟು? 28. By that maths also he said that it is 28. Then he said, let me go by subtraction. Then subtraction on the Sirisha is expert only in subtraction. He gave 7 people number 1 2 3 4 5 6 7. Total kitna da Sirisha? No cheating, correct ಮಾಡ್ತಾ ಇದೀನಿ. 28 minus 1 ಎಷ್ಟು?
27.
7 minus 2
25.
25.
minus 3
22.
22.
2 minus 4 18 minus 5 ಸ್ವಲ್ಪ ಕಷ್ಟ ಆಗ್ತದೆ. 13 minus 6
7.
7 minus 7 0. Wow, balle you paid. Okay, subtraction expert also said perfect. Then finally the BAP of all addition. So they said, okay, let us write. So for saving time, I'll write once or twice. Okay, 13 they kept on writing 7 times. Shall we start? 3 6 9 12 15 18 21 23 24 25 26 27 28. So 21 ಆಯ್ತಲ್ಲ, ಮತ್ತೆ 22 23 24 25 26 27 28. By whatever mathematics it comes to 28. Whatever way you answer, whether the India's 110 or 103, somewhere do the goodwill calculation correct. Okay, na? That's important. At the end of the day, the value should be implied. Let us move on with the India's normal numbers. 100 series are done. So now they are reasonably easy, okay, compared to the 100 series. So India's one presentation of financial statement is nothing but the schedule 3 what we discussed at the beginning. Okay, same thing, balance sheet, P&L, whatever, everything has been discussed same way. Then the going concern, fair representation, accrual, all those things. Okay, I'll not waste my time on that. So traditional accounting system, okay, structure, content of the balance sheet. India's 2 is about inventory. Inventories are assets held for sale in the ordinary course of business or in the production or sales of material, etc. So held for sale is nothing but finished goods, work in progress, raw material. So look at the definition. Inventory definition, finished goods, WIP, raw material. Other expand held for sale is finished good, Yatishwar. In the process is called product, work in progress. Raw material is stores and consumables. Other definition. Definition hange bareveko. Finished goods, WIP, raw material. Next, India's 2 AS to almost everybody same. Inventory is valued at cost or NRV, whichever is less. Raw material is normally valued at cost. However, if there's a write down of raw material as well as finished good to the NRV, then even raw material has to be valued at a NRV. NRV is equal to estimate selling price minus estimate selling expense minus estimate cost of completion. It's almost AS to India's to all same with it. Cost formula, Govinda jeans pant. So green, yellow, different. You have to go by specific identification method. Otherwise, if it is general, if it is not, it is normally interchangeable. Ashish pant, Shashank pant, then Konda pant. Fee for weighted average method you can follow. Disclosure requirement, whatever you follow. Overhead is extremely important. Odama, someone read.
No. Treatment of
Yeah.
factory overheads. 2 arrow mark. Variable overheads based on actual production. Fixed overheads.
It is always actual product. It varies in proportionately. Alva. Next.
Fixed
Import.
overheads. Further 2 arrow marks. Actual production is greater than or equal to budgeted production. Absorption based on actual production. Or else, if the budget based, or else it is based on budgeted production.
So, if the output is more than the budgeted, variable or fixed is same. Whereas output is lesser than the budgeted, variable is based on the actual, whereas fixed overhead is based on the budgeted production. Understanding? Note down this somewhere. 2-3 special points of India's 2. Otherwise, it is very easy. India's 2, cost or NRV, whichever is less. Fair value, less cost to sell. Cost or NRV, whichever is less. And they can sell now. Okay. Cost or NRV, whichever is less. Next, number 2. Raw material normally at cost. Then the special point. And you remind the question, you remind LBMs. Remember, next, then the table. Cost or NRV, whichever is less. Next, raw material normally valued at cost. Dash, right? But when finished goods is valued at NRV. Raw material also brought down to NRV. And the NRV higher in the valuation, always at cost. Brought down to NRV. Next, third point. Factory overhead. Administration overhead. Factory overhead, which is related to production. Administration overhead related to production. Factory overhead absorption. 2 RMS. When actual output is greater than budgeted output, budgeted or normal. When actual output is greater than budgeted output, below that, absorb both variable and fixed based on actual output. Right side. Else fixed overhead to be absorbed based on budget production. Fixed overhead matra. Correct. Fixed overhead to be absorbed based on budgeted production. Next. India 7 cash flow statement. Cash flow statement is all about representing your balance sheet and P&L. Okay, in under 3 activities: operating activity, investing activity, financing activity. Financing activity, any cash flow related to change in size and composition of owner's equity and borrowings. Investing activity means cash flow arising from acquisition and disposal of long-term assets, that is fixed asset, and investments other than cash flow. Operating activities, the principal revenue producing activity, and other than investing and financing activity. Even though operating is the first, the definition should be understood after investing and financing. So the traditional balance sheet Vishma, the balance sheet traditional balance sheet okay, insert body, okay. So other we are, so it is a representation of the cash flow statement. It's not a cash budget. It is reporting of cash flows. Reporting of operating cash flows. Here are the method is there. One is called direct method, one is called indirect method. Extra item concept number illa. Okay, fine. Next. So what is cash flow statement? It is an inflow and outflow of cash and cash equivalent. Cash means cash in hand bank balances. Cash equivalent, short term, highly liquid investment subject to insignificant risk of change in value. So cash flows are classified into operating, investing, and financing, what I generally discussed. Okay, fine. Now India's is on question money recent time. 7 with India's 21. Exchange fluctuation. How do you present them? Beautiful question for 5 hours. Income tax paid. Vodama, Deepa. She want to read on the Vodi. 13th point.
Income tax can appear under any of the activities. DDT, financing, capital gain tax on the land sold, investing, all other assets, say income tax, operating.
Yeah, all the income tax will be what you call operating activity. Yeah. Reporting of operating cash flow. Operating cash flow matra cash flow statement. Direct method, receipts and revenue. Indirect method, start with net profit and do the non-operating asset adjustment. Yeah. And then the story note kodi, that's fine. So direct approach, indirect approach, difference. Cash flow statement, operating activity matra. Receipts from sales, payment suppliers. Then income is paid. Then investing, financing normal way. Though any increase or decrease, you write. Opening balance of cash and equivalent. Then finally it should match with the closing balance. Whereas under indirect method, only for operating at net profit as per P&L account, all non-operating, non-cash items you have to adjust. Then decrease in current asset add, increase in current liability also add, because they are opposite items. Cash and bank in Tolangilla, exact opposite items is the other items. Okay, that is the cash flow statement. Yeah. India's 8 accounting policies ಬಗ್ಗೆ detailed discussion ಇದೆ. Changes in accounting estimate ಮಾತಾಡ್ತಾರೆ, then errors. So it basically deals with the elaboratively changes in accounting policies and accounting policy, accounting estimate. Accounting policy means the principles which are followed in accounting system. Any change in accounting policy has to be given retrospective effect. Any change in accounting estimate has to be given prospective effect. However, if there is a specific standard saying otherwise, follow the same. Classic example, India 16 and India 38. Okay. So PPE, cost model to revaluation model, the change in accounting policy, you still have to do the prospective effect because that says, whereas SLM to WDV, estimate life change, it is the estimate, it has to go with prospective. Add bada yeah. Changes to RMRs as per a specific standard, as per specific standard, follow the same. Example, India 16/38. Wherever I say 16, 38 to Sri Shetty sir the uta agilla 10:30 ನಂತರ ಊಟ ಮಾಡ್ತೀವಿ ಅಂತ 16/38. ಮಪ್ಪಮ್ಮನಿಗೆ ಶೆಟ್ಟಿ ಸರ್ ಊಟ ಮಾಡೋ ತಿಂದಿಗೆ ನೀವು ತಿಂದಿರ ಇಲ್ಲ ಅದನ್ನೇ ಟೆನ್ಷನ್ ಅವರಿಗೆ. ಹಂಗಂದ್ರೆ 16/38 ಕೆಲವರು ಹಂಗೆ ಪ್ಲೇಟ್ ತಗೊಂಡ್ಬಂದು ತಿಂದು ಆಗೋಯ್ತು ಅಷ್ಟು ಬೇಗ. 16/38 ಬರೀ ಕಾಸ್ಟ್ ಮಾಡೆಲ್ ಟು ರಿವ್ಯಾಲ್ಯೂಯೇಷನ್ ಮಾಡೆಲ್ ಇದೇನಿದೆ ಮನಸ. That is a change in accounting policy. Hold on. Next. Alle SLM to WDV. Ashok / estimated life bar scrap change. And the depreciation ಬೇಕಾಗುತ್ತೆ ಸಪ್ನಾ. Estimate life bar scrap change is change in accounting estimate. Below that, green ink, but both has to be given prospective effect as specifically given in the standards. Correct, Adipa? DVK as specifically given in the standard. Right side. Else follow India 8. Specific ಕೊಟ್ಟಿಲ್ಲ ಏನು ಮಾಡಬೇಕು ಸುನಿಜ follow ಭೂಮಿಕನ
India's
Yes 8 2 RMRs. Change in accounting policy retro savari rapid rashmi ಜೊತೆಗೆ retro effect right side change in accounting estimate
perspective.
prospective change in accounting policy ಏನು ಸರ್ ನನಗೆ ಮೂಡ್ ಬಂತದ ಚೇಂಜ್ ಮಾಡೋದಾ only when there are 3 reasons SSM statute change standard change and the management has a better reasons and entire syllabus alli wherever there is a deviation extremely important whether the account standard deviation or standard policy deviation anything deviation you have to follow 3+1 approach nature of deviation disclose ಮಾಡಬೇಕು amount of deviation disclose ಮಾಡಬೇಕು reason for deviation disclose ಮಾಡಬೇಕು if the amount cannot be disclosed this was interchange ಮಾಡಿ ಎರಡು first second third amount of deviation cannot be ascertained you have to mention that we cannot ascertain the amount. Yeah. Accounting policies I said principles estimate prospective effect errors andre odi Deepa.
Errors. Prior period errors are omissions from and misstatements in one or more prior period financials arising from the failure to use or misuse of reliable information. 2 RMRs was available when financial statements were approved for issue could reasonably be expected and taken into account while preparation and presentation of financial statement.
So it covers not only the errors but also covers the fraud. Either they are already existing at the time of financial statements are approved or we could reasonably estimate that also should be done. So accounting to changes in accounting estimate prospective policy I said what retrospective effect prior period items with retrospective effect sorry okay with retrospective effect so wherever possible you have to go back to that such period and do it whereas if it is not possible then you can only corresponding period which is available you can do it ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ next depreciation ಬಗ್ಗೆ ನಾವು ಕವರ್ ಮಾಡೋದು ಸೇಮ್ that's okay repetition retrospective application RA ಮತ್ತೆ RR these are two important principles of India's AS file ಇರಲಿಲ್ಲ what are they ಓದಿ
Retrospective 2 RMR applications means applying a new accounting policy as if that policy had always been applied FIFO followed till 2017 with WAP
weighted average price sorry
with retrospective application means apply weighted average policy for earlier period. Restatements.
This is called application. As if it has followed from the day one, you have to restate all the statements. That's apply for all the earlier period. Next.
Restatements is correcting the recognitions, measurements, and disclosure of errors as if prior period errors had never occurred. Purchase bill omitted in 2017. It is a prior period item. If identified in 2019, reinstate financial statement from 2017 as if error has not occurred.
Okay. So fine. Revaluation and reading now. Disclosure. Then start. India's 10. What is the title of India's 10? Kodaya? Events after reporting date, not subsequent event. Subsequent event is 560. SA 560. So 31st March, the financial statements are closed. That is the year end, and they are approved, let us say, on 30th June. In between 31st March to 30th June, whatever the event happened, they are called India's 10. They may be adjusting event or non-adjusting event. Adjusting event means conditions existing as on the balance sheet date, but we got to know it later. Make an adjustment. For example, 20th March, you made a sale. 25th March, their customer was insolvent. You got to know only on 10th of April. Make a provision for bad debt on 31st March. Whereas you made a sale on 10th April only, how can you go back and make an entry on 31st March? Because it's a non-adjusting event. Disclosure only if it is a material. Proposed dividend is no more a what you call Ind AS 10 item now. It is has to be accounted only the next year when it is approved in the AGM. Otherwise, story. Ind AS 12, one more beautiful standard, important standard, has an impact on every other standard. The accounting income is 100 lakh. Taxation income is 300 lakh. You're able to listen? All of you. Sapna, sorry, Sirisha, please explain what I'm ಮಾಡಿದಾಗ ಸ್ವಲ್ಪ ಒಳ್ಳೆ ಆಕ್ಸಿಜನ್ ಒಳಗೆ ಹೋದಾಗ ಬ್ರೈನ್ ಹೇಳುತ್ತೆ ಶೆಟ್ಟಿ ಸರ್ ನೋಡು ಅಷ್ಟು ಎನರ್ಜೆಟಿಕ್ ಆಗ್ತಾರೆ ನೀನ್ ಸ್ವಲ್ಪ ನಗ್ಬೇಕು ಅಂತ ಒಂದು ಐಡಿಯಾ ಕೊಡುತ್ತೆ ಬ್ರೈನ್ ಗಿವ್ ಸಿಗ್ನಲ್ ಹೇಗೆ ನಾನು ಕವರ್ ಮಾಡ್ಕೊಂಡಿದ್ದೆ ಅವಳ ಹೆಸರು ಇರ್ಲಿ. ಸೊ ನಾವ್ ಟಾಕ್ ಗೊತ್ತಾಯ್ತಾ ಅದು ನಿಮ್ಗೆ ಶರಣ್ಯ ಎಲ್ಲ ಹೇಳ್ಕೊಟ್ಟಿರ್ತಾರೆ ಬೇಡದ್ದೆಲ್ಲ ಇರ್ಲಿ. ಸೊ ವೆನ್ ಯು ಟಾಕ್ ಅಬೌಟ್ Ind AS 12, accounting income is 100 lakh, taxable income is 120 lakh. Difference 2 RMs. Girlfriend's ice cream expense divided to P&L. Never allowed in income tax. Permanent difference. Never discussed in Ind AS 12. Badbagya. Timing temporary difference. Okay. In AS 22 we use the word timing difference. In AS 12 we use the word temporary difference. So depreciation. Accounts and income tax over a period of time it should be 100%. Subject to that 5% scrap value operated. Next, bonus. I debited to P&L account today accrual, but income tax says it's not paid within the due date. It is disallowed. Okay. But next year when I paid is allowed. 40A, 1A. This year 30% disallowed. Next year 30% allowed. All these differences arising for the time period. So it arises in this year as an impact of getting reversed in the subsequent period. They are called temporary differences. The temporary differences can be 2 RMs. Either taxable temporary difference, TTD, ಅಥವಾ deductible temporary difference. Very good, Sirisha. Okay, not suddenly taxable temporary difference or deductible temporary differences. You are an account subject. Be loyal to account subject. Okay, so start with accounts. Accounts carrying amount. Okay, 100 lakh. Tax base is 80 lakh. Book value in the it's because in India we not only cover assets, we cover liabilities also. So accounts carrying amount is 100 lakh. Tax base income tax prakara is 80 lakh. 100 debit, asset is a debit balance, minus 80 lakh debit. 100 minus 80, 20 should show a debit balance. So debit balance will lead to deferred tax liability. There is a taxable temporary difference. After one more explanation I can give you. 100 lakh is the WDV in accounts. 80 lakh is the WDV in income tax. So that means in the future you can get less income tax depreciation. If less income depreciation means you have to pay more tax in the future, deferred tax liability. Innonsala heltini. So first easy approach is assets maatra nodkoli. Assets as per accounts carrying amount at which is carried 100 lakh. Tax base accounts income tax ali WDV 80 lakh. 100 minus 80 positive or negative?
Positive.
Positive. Asset account to show the debit balance. So debit balance in a difference lead to deferred tax liability. Plus ulta adre deferred tax asset. So concept artha agilla. Okay. Accounts are WDV 100, income tax WDV 80. That means in the future income tax you cannot get more depreciation. You have to pay more tax. Since you have to pay more tax, it's a deferred tax liability. Deferred tax liability. Deepa, accounts only 100 lakh is WDV. Income tax only 80 lakh. That means income tax you will not get more depreciation tomorrow. You have to pay more tax. That's why deferred tax liability. So ulta case. Negative bandbitre, then you have to go for deferred tax asset. 100 lakh is accounts. Income tax is 150 lakh. 100 minus 150, you get a negative balance. That's a credit balance. You have to create a deferred tax asset. Exact negative symbol is markondu liability ge ಮಾಡಿ. Listen, make your life simple. Asset get debitor. Liability adre, you assuming there is a liability debentures. 100 lakh is the carrying amount, which is the bracket, minus fair value is 120 lakh. 120 lakh. So as per the tax base, it is 120 lakh. So 100 minus 120, you get to minus into minus plus sagate, plus 20. That means here we are getting a debit balance with a deferred tax liability. ಡೆಬಿಟ್ ಬ್ಯಾಲೆನ್ಸ್ ಡಿಫರೆನ್ಸ್ ಬಂದ್ರೆ ಡೆಬಿಟ್ ಟ್ಯಾಕ್ಸ್ ಲಯಬಿಲಿಟಿ ಕ್ರೆಡಿಟ್ ಬ್ಯಾಲೆನ್ಸ್ ಬರಬೇಕು. ಬಿಕಾಸ್ ದಿಸ್ ಇಸ್ ಡೆಬಿಟ್, ದಟ್ ಶುಡ್ ಬಿ ಕ್ರೆಡಿಟ್. ಕ್ರೆಡಿಟ್ ಬ್ಯಾಲೆನ್ಸ್ ಡಿಫರೆನ್ಸ್ ಬಂದ್ರೆ ಯು ಕ್ರೆಡಿಟ್ ಡೆಫರ್ಡ್ ಟ್ಯಾಕ್ಸ್ ಅಸೆಟ್. ಅರ್ಥ ಆಯ್ತಾ? ಫೈನ್. ವೆರಿ ಇಂಪಾರ್ಟೆಂಟ್, ಎಮಾಲ್ಗಮೇಷನ್ ವಿರುದ್ಧ ಸಂಬಂಧ ಇದೆ 103. ಬಿಸ್ನೆಸ್ ಕಾಂಬಿನೇಷನ್ ಮಾಡ್ತೀವಿ, ಎಕ್ಸ್ಟ್ರೀಮ್ಲಿ ಇಂಪಾರ್ಟೆಂಟ್ ಇದು, ಎಕ್ಸ್ಟ್ರೀಮ್ ಇಂಪಾರ್ಟೆಂಟ್. ಬಿಸ್ನೆಸ್ ಕಾಂಬಿನೇಷನ್ ಮಾಡುವಾಗ ಸೊ ಬಾಯ್ ಫ್ರೆಂಡ್ ಬರಗುತ್ತೆ, ಬಾಯ್ ಫ್ರೆಂಡ್ ಆಗೋದಿಲ್ಲ. ಬಾಯ್ ಫ್ರೆಂಡ್ ವಿಲ್ ಬಿಕಮ್ ಗರ್ಲ್ ಫ್ರೆಂಡ್ ಅಂದ್ರೆ ಅರ್ಥ ಏನು? ಐ acquired the asset building in B Limited is 100 lakh book value. Isto book value. I record at fair value 150 lakh. So accounting carrying amount will be 150 lakh. Once you go for a fair value model, the fair value will become a carrying amount which is correct. Whereas income tax, if there is no further information given, we presume that accounting carrying amount and income tax carrying amount both are same. So that means carrying amount of accounts will become income tax base and fair value will become carrying amount. ಈ ಕ್ಲಾಸ್ ಅಲ್ಲಿ ತುಂಬಾ ಎಕ್ಸ್ಪ್ಲೇನ್ ಮಾಡಿದೆ, ಇದನ್ನು ಎಲ್ಲರೂ ಬರ್ಕೊಳ್ಳಿ. India is 12. Difference between accounting income and taxable income. To our hours, TTD, taxable temporary difference. Carrying amount in accounts 60 lakh. Tax base or WDV, say of an asset 40 lakh. 60 minus 40 is equal to 20 lakh. Asset other debit balance. 20 lakh debit balance, which leads to credit item called DTL. This debit other credit other. Artha agta idea elrigo?
Yes, sir.
Double completing agodu. Artha aita? Right side DTD, deductible temporary difference, opposite. Next, completely below that. For asset, use plus sign. For liabilities, use negative sign, which is the bracket. But all mathematics hangye ಮಾಡಿ ಅದೇ ತರ ಬರುತ್ತೆ. ಅರ್ಥ ಆಯ್ತಾ? Next special point. Business combination. Number 1. No DTA for goodwill. Goodwill ಗೆ DTA ಮಾಡಂಗಿಲ್ಲ. Goodwill ಬಗ್ಗೆ ನೆನಪು ಪಾಯಿಂಟ್ ಕೊಡ್ತೀನಿ ಎಂಡ್ ಅಲ್ಲಿ ರಿಮೈಂಡ್ ಮಾಡಿ ಬರ್ಕೋಬಿಡಿ. ನೀವು ರಿಮೈಂಡ್ ಮಾಡೋವಾಗ ಅಷ್ಟೇ, ನಾನು ಮಾಡ್ಕೊಂಡಿರ್ತೀನಿ. ನೆಕ್ಸ್ಟ್ ಪಾಯಿಂಟ್ ನಂಬರ್ 2. X Limited acquired Y Limited. Say building book value ಅಥವಾ carrying amount ಇರುತ್ತೆ. Building BV or carrying amount 100 lakh. Building book value or carrying amount 100 lakh. Fair value 150 lakh. Two RMRs. Carrying amount in accounts is equal to 150 lakh. Right? A fair value recognized. Sirisha, very good. Carrying amount in accounts is equal to 150 lakh. Right side. Tax base is presumed to be carrying amount of 100 lakh. Chitrana ಮಾಡ್ಕೊಬಿಡಿ. Accounts ಮತ್ತು income no difference ಅಂತ ಅನ್ಕೊಳ್ಳೋದು ಅಷ್ಟೇ. Accounts ಅಲ್ಲಿ ಏನು carrying amount ಇತ್ತು ಅದೇ tax base. Carrying amount 100 lakh. Below that, below the right side, one more point we can add. What is that? Term revaluation unheard in income tax. Fair value concept illa. The term fair value by revaluation unheard in income tax. Alvendro. After the tax base is equal to carrying amount. Value change madakala. Everybody understood, Baba? Yeah. So left side carrying amount is to 150, right side is to 100. So very correct and right. TTD, taxable temporary difference, correct? Is equal to 50 lakh. P&L account debit to DTL 50 lakh into say 30%, 15 lakh. 50 lakh is the difference. You are supposed to create a DTA, DTL based on the applicable tax rate on that year. सबको समझ में आ गया बाबा? Yeah, that is the main gist. What tell us? Yeah. So the story code, the depreciation difference of the note code is important. Taxable temporary difference, debit balance in the financial statement, deductible and the trade balance, assetable liability, ulta treatment code. Creation of DTL entries P&L to DTL, debit side. DTA creation is DTA to P&L. DTL you have to create always, sir. Then the DTL you create always. DTA you check, go for prudence. If you got a certainty about the future taxable income, then what you create. I given a beautiful connection of permanent difference and temporary difference, sir. Not there in the India's our understanding. Okay. One more point is originating time difference and originating time difference and responding time difference. So initial period is important again. Initial period, income tax depreciation will be higher. So whereas subsequent income depreciation will be lower. Income depreciation is normally higher compared to the accounting depreciation. That's why. So WDV in accounts will be more. Whereas if they give a question like this, WDV in accounts, 300 lakh, and WDV in income tax is 140 lakh. That means you have claimed more depreciation in income tax. So originating time difference. Ulta, 43B case, bonus payable. Accounts only bonus payable is nil. Income tax only bonus payable is allowed as a reduction in the next year. That means it is a responding time difference. First year the disallowed, the next year the reverse model. So responding whatever entry you have passed earlier, you have reversed the same. It again India is a but concept is applicable even now. Okay. So DTA apply immediately. Sorry, DTL. DTA you have to apply the prudence. Future taxable income. I said advance tax you pay only when there is income. If there is no income, why will you pay advance tax? Okay. Interest code. So is applicable to domestic tax, foreign tax, withholding tax. Tax expense is equal to current tax plus or minus deferred tax. Okay. DTA, DTL are always non-current asset. We have discussed already. DTL should not be initial recognition of goodwill. India is 12 prohibits the same. Presentation display. Can you do the net of current tax and current tax is current liability? Idu bere. Idu current tax is idu deferred tax is.
Current tax asset with current tax liability if and only if entity has legally enforceable right to set off and entity intends to settle on a net basis.
So if they want to settle, then you do it. That is basically advanced tax and provision for tax. Whereas DTA, DTL, first point is same. Second point is
DTA and DTL relates to income tax levied by the same taxation authority.
Japanese income tax law, I cannot set up against Indian income tax law. That is not possible. Okay. I load it. Then story for assets carrying amount, whereas tax with positive debit balance, liability as a ulta. Okay. Start. India 16, one of the most beautiful one. Property, plant and equipment. Compulsory question again. Okay. First word is tangible items. Then held for use in the production of supply of goods, rental to others, administrative purpose. If you remember, inventory. Inventory definition. Definition to 2 marks. Left side. Inventory. Finished goods, work in progress, raw material. That's an expand model. There is a simple way to remember. Right side, PPE, property, plant and equipment. 2 marks. First part of it, first plant, matte property, matte equipment. Definition. Torstin. Right side, and second part, expected to be used for more than one period. Expected to be used for more than one period. Property, plant and equipment. First part here, plant work, which is used in the manufacturing sector. Property and basically rental to others. Then equipment is for administrative purpose. My meaning Ashok. So property, plant and equipment. Plant is manufacturing purpose. Property is for rental to others. Other administrative purpose is equipment. Expected to be used for more than one accounting period. Okay, na? Is too beautiful like FR. I don't think you'll be able to visualize in any other way. Next, PPE can recognize. This is a common condition. All asset in barbeku. FEB matte CMR. Adon bari one point. For all asset recognition, consider 2 RMRs. FEB right side CMR. Future economic benefit barbeku. Cost can be measured reliably. So even at final level, they ask question about cost consists of cost of procurement. Idella by heart ಮಾಡಬೇಕು. Site preparation, installation, testing, etc. Construction include cost of destruction, decommissioning cost at a present value. Future demolition cost to be considered present value. Okay, fine. So almost identical to AS10. Okay, the story ನೋಡ್ಕೊಳ್ಳಿ ಅಲ್ಲಿ ಕೊಟ್ಟಿದ್ದನ್ನೇ ವಾಪಸ್ ರಿಪೀಟ್ ಮಾಡಿದೀನಿ. Okay, initial measurement is always at a cost model. Subsequently, you can go with cost model or fair value. Fair value should be done once in 3 to 5 years for the class of assets of the yellow. Next, very beautiful and important confusing chart. PPE excludes reading color. Wasting asset illa, biological asset illa, other assets covered specific standard. Biological assets alli bearer plants include agutte, but excludes products from the bearer parts. Includes PPE used for developing all these things. The regular class in detail at madidve. Just to recall, PPE does not include livestock, etc. biological asset, but it includes bearer plant. Bearer plant or PPE include. But the output fruits of bearer plant should not be included. But assets used, tractor, tiller, etc. for all these biological assets should be considered the PPE. Then it will call it important chart. Extremely beautiful and important. Is it a class?
Yes, sir.
Yes, sir.
And plant, living animal and plant. Okay, fine. Then revaluation model, simple. Upward, take you to revaluation surplus. Downward, debit to parent account. Upward, downward, upward. Whatever you have done earlier, the reverse body to the extent possible. One special point here is first upward model, 100 lakh to 150 lakh. Revaluation surplus straight. Now down, subsequently, if there is 80 lakh downward model. So what should you do? Revaluation surplus 50 lakh debit pada kala. Because revaluation surplus, you would have debited depreciation over the years. Balance available may be only 30 lakh. So you debit revaluation surplus only 30 lakh. Are you able to recall the example?
Yes.
Yeah, revaluation surplus
Yes.
department. 100 lakh, simple example. 100 lakh to 120 lakh. So 20 lakh is revaluation surplus. So depreciation is 10%. After 4 years, assuming the downward revaluation is 30 lakh. How much revaluation surplus I can debit? Not 20 lakh. Because 20 lakh ಮೇಲೆ depreciation charge ಮಾಡ್ತಾ ಇತ್ತು. ಬರೀ ಎಲ್ಲರೂ ದೀಪ ಸರ್ಪ್ರೈಸ್ ಆಗಿದ್ದಾರೆ. ಬರೀ ಅಪ್ವರ್ಡ್ ಅಂದ್ರೆ ಏನಮ್ಮ ದೀಪ? revaluation surplus. ಕನ್ಫ್ಯೂಷನ್ ಇಲ್ಲ. ಡೌನ್ವರ್ಡ್ P&L. ಅಪ್ವರ್ಡ್ ಡೌನ್ವರ್ಡ್ ಕನ್ಫ್ಯೂಷನ್. ಡೌನ್ವರ್ಡ್ ಅಪ್ವರ್ಡ್ ಕನ್ಫ್ಯೂಷನ್ ಇಲ್ಲ. ಬರೀ ಬಿಲ್ಡಿಂಗ್ 100 lakh ಕಾಸ್ಟ್. ಆಲ್ವೇಸ್ ಬಿಲ್ಡಿಂಗ್ ಎಕ್ಸಾಂಪಲ್ ತಗೊಳ್ಳಿ. ಯಾಕಂದ್ರೆ ಅಪ್ವರ್ಡ್ ಆಗೋದು ನಾರ್ಮಲಿ ಬಿಲ್ಡಿಂಗ್, ಲ್ಯಾಂಡ್ ಯೂಸ್ ಇಲ್ಲ. ಬಿಲ್ಡಿಂಗ್ 100 lakh, revalued to 120. Building to revaluation surplus 70 lakh. Depreciation 10 years. Next, depreciation entry. Depreciation account debit. Bar P&L account debit 10 lakh. Revaluation surplus account debit 2 lakh. Depreciation 10 lakh debit ಆಗುತ್ತೆ. ದೀಪ ನಿಮಗೆ ಎಷ್ಟು ಹೇಳ್ತಾರೆ ನೀವು ಕಾನ್ಸಂಟ್ರೇಟ್ ಮಾಡಬೇಕು. ಡಿಪ್ರಿಸಿಯೇಷನ್ ಅಕೌಂಟ್ ಡೆಬಿಟ್ 10 lakh. ರಿವಾಲ್ಯೂಷನ್ ಸರ್ಪ್ಲಸ್ ಅವ್ರು ಮತ್ತೆ ಹೇಳಿ ಎರಡು ವಿಷಯ ನಿಮಗೋಸ್ಕರ ನಾನು ಹೇಳ್ತಾರಲ್ವಾ. ರಿವಾಲ್ಯೂಷನ್ ಸರ್ಪ್ಲಸ್ ಅಕೌಂಟ್ 2 lakh. ಯಾಕಂದ್ರೆ ಆ 12 lakh ಅಲ್ಲಿ 10 lakh should go to the P&L. 2 lakh should be debited to what? Bhumika, revaluation surplus 2 lakh. ಸುಸ್ತಾಯ್ತೇನೆ ಟು accumulated depreciation. ಅದಕ್ಕೆ ನಾನು ಹೇಳಿ CPT ನೀವು ಮದುವೆ ಮಾಡಿಸ್ಬೇಡ, ನೀವು ಕೇಳಿಲ್ಲ ನಾನು ಏನು ಮಾಡಿ. ಟು ರಿವಾಲ್ಯೂಷನ್ ಟು accumulate depreciation. Accumulated depreciation correct. ಅದು ಪ್ಲಾಂಟ್ ಬಿಲ್ಡಿಂಗ್ ಅಕೌಂಟ್. accumulated depreciation right. ಎಷ್ಟು 12 lakh. ಸೊ ಡಿಪ್ರಿಸಿಯೇಷನ್ 12 lakh ಇರುತ್ತೆ. ಬಟ್ ಎಲ್ಲೋಗುತ್ತೆ 10 lakh P&L ಹೋಗುತ್ತೆ, 2 lakh revaluation surplus ಹೋಗುತ್ತೆ. ಅರ್ಥ ಆಯ್ತಾ?
Yes.
After 4 years, sorry, at the okay, after 4 years, 3 RMRs. Building WDV 120 lakh minus 12 lakh into 4. ಯಾಕಂದ್ರೆ accumulated depreciation ಬರಲೇಬೇಕಲ್ಲ ಅಲ್ಲಿಗೆ. 100 lakh minus 120 lakh minus 12 lakh into 4. ಎಷ್ಟು 78 68 120 minus 48 ಅಲ್ವಾ? ಎಷ್ಟು 72
Yes.
ಬರ್ಕೊಡಿ ಯಾರಾದ್ರು ಯಾರು ಮಾಡ್ತಾರೆ 100 minus 50 ಎಷ್ಟು 120 minus 50 70 ಅಲ್ವಾ 50 ಬದಲು 72 ನೆಕ್ಸ್ಟ್ ಸೆಕೆಂಡ್ ಆರಮ್ಮ ಏನದು ರಿವಾಲ್ಯೂಷನ್ ಸರ್ಪ್ಲಸ್ 20 lakh minus 8 lakh ಗೊತ್ತೇನಪ್ಪ ಎರಡು ಆರು ಸಾಕು ರಿವಾಲ್ಯೂಷನ್ ಸರ್ಪ್ಲಸ್ 20 minus 2 lakh into 4 ಆಯ್ತಲ್ಲಪ್ಪ ಎಷ್ಟು 8 lakh 20 lakh minus 8 lakh is equal to 12 lakh. Understood? Next. Next time it is revalued at 30 lakh. Entry revaluation surplus account debit 12 lakh. Okay, you know the 12 lakh only. This is what I meant, 12 lakh. Next, P&L account debit, balance sheet figure.
30 lakh.
30 lakh. 30 lakh. To building account, 42 lakh. 72 minus 30. Artha devrige. 72 minus 30, 40 lakh. Next line. Therefore, carrying amount whenever there is a fair value. Revaluation of the fair value bandaga, carrying amount whenever there is a fair value is equal to fair value. Like a revaluation is equal to ಎಷ್ಟು 30 lakh. You'll read the class alley.
Yes, sir.
Depreciation for balance. How many years?
6 years.
Balance 6 years is equal to depreciation for balance 6 years. 30 lakh divided by 6 is equal to 5 lakh.
5 lakh.
To be debited to minus of P&L.
P&L.
Understood, Baba?
Yes, sir.
Special point, Deepa. Okay, now if you want, you can, family obligation. Right. Right. This is the example. Go to my depreciation is the factor influencing basically cost, estimate, scrap, and life. Then depreciation is a permanent reduction in the value. Formula is cost by the estimate, scrap divided by life. There are 3 methods suggested by India: SLM, WDV, and units of production. They are proportionate to the units. Then component method of depreciation is basically for huge manufacturing plants, aircraft. Depending upon the different component, how many years it lives, you can charge the depreciation. When that residual value is greater than or equal to carrying amount, or when the asset is set aside, okay, retired from active use. Can you give an example of one standard for this? Retired from active use.
India's 105.
Not 5. Non-current asset held for sale. Yeah. So this is called cessation. The disclosure, original cost, what you do in your office, the full story queries. Next, India's 19 employee benefits. Okay. Basically, there are 2 plus 2 benefits. Long-term benefit, the benefit which falls more than 12 months. Short-term benefit which are less than 12 months. Okay. Apart from the termination benefits and retrenchment benefits. Short-term benefits, post-employment benefit, long-term benefit, termination benefit. Short-term benefit like salary account debit to cash account. Whereas termination benefit also you recognize immediately. Whereas long-term and post, there are 2 approaches for this. Okay. Either it can be defined contribution, chart defined contribution plan or defined benefit plan. Defined contribution plan where whatever is your contribution, you just pay and forget it. Okay. You don't have any more responsibility as an employer. PF is a classic example. Sharanya is my employee. I contribute 12%. She contributed. I forget. After 3 months, after 30 years, she retires. I don't have any other obligation. So, like any other salary account to bank account. Defined benefit plan is dangerous, where obligation depends on the length of the service. Classic example is the gratuity plan. Gratuity plan. So, Bhumika is my employee. She worked for 4 years and quits. No gratuity to pay. Whereas Srinija worked for 5 years, 1 month. From day 1, I had to pay for 5 years and 1 month. It is not just for 1 month. So how do I know they will be there? That's why we take the help of Yama's younger brother called actuarial valuation. And 7 steps, Saptapadi step ಮಾಡಬಿಟ್ಟು, okay. So you need to account for the same. Actual valuation ತಗೋಬಿಟ್ಟು, ಅದಕ್ಕೆ fair value of the plan is set, fair value of the plan, they will give all the data. You reinstate it based on the actual valuation. in a differential amount you have to take it to P&L account. There are 7-step approach as far as employee benefits are concerned. Okay, a contribution plan, benefit plan ಬಗ್ಗೆ story ಇದೆ ನೋಡಿ, ಸಪ್ತಪದಿ step ನಾವೇ ಕಾಯಿನ್ ಮಾಡಿದ್ವಿ, old notes ಅದು ಹಂಗೆ retrain ಮಾಡಿದ್ವಿ. Okay, beautiful concept. India's 20, some couple of standard. I hope you have energy. Can we continue?
Yes,
Muksana,
Yes, sir.
Yes, sir.
India's 20 is almost like India's 12. Earlier they had something, then again they changed it. India's 12. So ಇಲ್ಲಿ capital approach ಅಂತ concept ಇಲ್ಲ. India's ಅಲ್ಲಿ capital approach concept ಇಲ್ಲ. Everything has to be taken to P&L account. Okay, capital approach concept ಇಲ್ಲ. ಕೇಳಿಸ್ಕೊತಾ ಇದ್ದೀರಾ? Grant received for purchase of a land, you have taken to capital is around to AS 12, but here it should be taken to income. So in addition to that, some concession loan ಬಗ್ಗೆ discussion ಇದೆ. When should I recognize the government grant? When there is a reasonable assurance that all the conditions are satisfied and a grant will be received. So if it is a revenue grant, everybody's class?
Yes, sir.
Yes, sir.
Yes.
Revenue grant, take it to P&L account, either directly or as an indirect income or reduction from the expenses. Capital grant, if it is a monetary grant, okay, reduce. Okay, so yeah, this is the most important chart. Revenue grant, take it to P&L account. Okay, capital grant adre, if it is related to the depreciable asset, reduce from the cost of the asset, or it can also be maintained as a deferred revenue grant. Whereas if it is a non-depreciable asset, it should be considered the deferred revenue grant and take it to the P&L account. Okay, other individual story there. Then loans, when you receive the loan from the government, forgivable loans are given to the grant. Atava, government gives a loan and they will waive off, like agricultural loan, take it to the grant. Atava, government gives a loan at a nil rate, at a concessional rate. Okay, normal market rate is, let's say 10%, but the government is giving a 2%. Differential 8% should be recognized as the government grant. Srisha Kantinbeda. Artha aita? Adu fixed asset ಬಗ್ಗೆ accounting same like AS12 ಇದೆ, go through ಮಾಡ್ಬೋದು. Right. Capital approach, income approach. I said we have only income approach, capital approach illa. Refund of the government grant is an extraordinary item under ES5, but ಇಲ್ಲಿ there is no such concept. Okay, ಇಲ್ಲಿ no such concept. Extraordinary item illa. Whatever the treatment you have given earlier, refund of government grant ಇದೆ, exact reverse ಮಾಡಬೇಕು and prospective ಕೊಡಬೇಕು. Let's say 100 lakh is the cost of the asset. Government give a subsidy of 40 lakh. What is WDV? 60 lakh. Depreciation, let's say 10 years, 6 lakh, 6 lakh, 6 lakh. So after 3 years, when the WDV is 60 minus 18, 42 lakh, you are not satisfied with the condition, you have to give back the government grant, 40. So 42 plus 40, 82 lakh divided by 7 more years depreciation. Are you understanding, go back? So whatever the government grant refunded, it should be it's exact reverse treatment you have to give it. Okay, exact reverse treatment you have to give it. Right. Accounting policy analysis, story ಕೊಟ್ಟಿದ್ದೀನಿ, accounting entry ನೋಡಿ. Next, again, AS21, India's 21 is similar to AS11. Only one thing is three currencies. So functional currency is the currency of the primary economic environment in which the entity operates. Foreign currencies other than the functional currency. Now, apart from functional currency, for some reason, you may have presentation currency, which will be different from the functional currency. Right. So now, how do I account for the same? Accounting on the date of transaction, take the rate on such date, whereas operations, if it is a monetary items, take the rate on the reporting date. Monetary items are all liquid items. So inventory is not liquid, it is illiquid, that is non-monetary. Debtors, cash and bank are called monetary item. On 31st March, what the rate is applicable, applied. Whereas if it is the non-monetary items, non-monetary items, take the rate on the date of the transaction, like a fixed asset. Or if you have done a revaluation, on that day revaluation, take it. Any exchange difference normally taken to P&L account. If it is a foreign operation related, if it is kept in FCTR, foreign currency translation reserve. Two special points here is ASCO, India-SCO. ASL, there are only two currencies. Here there is one more currency called functional currency. One more point is, assuming you had only integral and non-integral operation, there is no such classification. Foreign operation is there, but integral non-integration operation classify ಮಾಡಲಿಲ್ಲ. Non-integral operation ಅಲ್ಲಿ FCTR ಬರ್ತಾ ಇತ್ತು. ಅದು AS ಅಲ್ಲಿ you could not have transferred to P&L until it is completely disposed of. Here, assuming 30% stake you have, FCTR created 30 lakh. 5% you disposed of. Proportionate amount you are transferred to P&L account. Today's class ಅಲ್ಲಿ items that will be reclassified to P&L ಅಂತ ಹೇಳಿದಲ್ವಾ, P&L ಅಲ್ಲಿ OC ಅಲ್ಲಿ. So this one, Whenever you dispose of the investment, you have to reclassify to the P&L account. Otherwise, it is reasonable. India is 23 borrowing cost. Okay, borrowing cost incidental to acquisition, construction, and production of a qualifying asset till it is ready to use has to be capitalized. What is borrowing cost? IFE, interest cost, finance cost incurred under the finance fees, and exchange difference. Extremely important exchange difference concept. So, Indian loan, had you taken Indian loan, okay, first we'll go by foreign loan. You have taken $10,000, $1 lakh loan you have taken. Now, when you take loan in dollar, there is a what you call hidden cost called the exchange difference. So, $10,000 you would have paid only 5%, but exchange difference will come. So, assuming 50,000 is the interest cost what you're paying, plus exchange difference is 60,000. Total on the debit left side is 1,10,000. Hold on. Do the notional calculation. Had you borrowed in Indian currency by taking the opening rate, what would have been the cost? Let's assume it would have come to only 1 lakh. Left side, normal interest plus exchange difference. The class part, the problem, 1,10,000. Whereas, had I borrowed in India, it's 1 lakh. 1,10,000 or 1 lakh, whichever is less. Only 1 lakh has to be considered the borrowing cost. 10,000 has to be transferred to P&L account. Arthak idea. Like by taking what? India is 21. India is 21. Reconciliation purpose. Qualifying asset means an asset which takes substantial period of time. So borrowing, if you have specifically borrowed a loan, the actual rate has to be capitalized. Generalized rate, you have to go by weighted average cost of capital. India is 24. Couple of standards now in 10-15 minutes. Related party is a pure disclosure standard. You have to identify 3 things. Who is the related party? Either control based or significant influence based or key managerial person. So Sirisha's husband, so Sirisha controls. So there's a control based relationship. So Sirisha's boyfriend, she influences, significant influence. Control based relationship, disclosure is a must, whether or not there's a transaction during the year. Whereas significant influence, disclosure only when there is a transaction during the period. Understanding? Next, related party. Then what is the related party transaction? Who is not a related party? Now, myself and Sirisha both are having an account with Union Bank of India. So, are we related party? No. Everybody, for provider of the finance, government control, etc., it cannot. Okay. So, whether or not there is a control based, the disclosure is a must. When there is a significant influence, only when there is a transaction. Whereas the government related transactions, confidentiality the government may give a relaxation. So, who is related party in the oath code is extremely important. Person, theoretical, pure theory question. Okay, yeah. Earning per share, one more extremely important, beautiful standard. Whatever the profit you earn, whether it's a true indicator, last year 100 lakh, this year 300 lakh, 3 times I made. This time we have pumped in 500 crore extra money. That's why profit may not be a true indicator. That's why I go by EPS. EPS on the face of the P&L. Basic EPS is equal to Patesh divided by weighted average number of shares. Patesh is profit after tax minus preference dividend only of the current year. Sorry, if it is cumulative, compulsorily deduct whether they declared or not. If it is non-cumulative, deduct only if it is a declared. Deduct only if it is declared. Patesh divided by weighted average based on the number of months or days. Bonus shares, don't consider the date. It is as if issued at the beginning of the last year, whereas for everything else, number of months, days, etc., you have to give the weightage. Next, restatement of EPS under current year, okay, 100 lakh divided by 10 lakh. 10 rupees 10 is the EPS. Last year, profit was 20 lakh, divided by 10 lakh, 2 rupees EPS. So now current year EPS, but last year EPS, if there is no change in the denominator, it is comparable. Whereas this year, if you have made a 1:1 bonus issue, last year profit and you have to restate based on the current year number. That is called restatement. It can be for bonus issue, it can be right issue. Pre-right divided by post-right. Theoretical X-right valence on problem ಇದೆ ಮಾಡಿಸಿದ್ವಿ. Holding company, subsidy company ಒಂದು problem class ಅಲ್ಲಿ ಮಾಡಿಸಿದ್ದೆ ಅಥವಾ those YouTube viewers ನಿಮ್ಮ ICI material ಒಂದು consolidation problem ಇದೆ. Beautiful question. Example ಬರುತ್ತೆ. Extremely important question. Holding company, subsidy company ಇದು I'm sorry, basic EPS, diluted EPS. ಕೇಳಿಸ್ಕೊತಾ ಇದ್ದೀರಾ? Fine. Diluted EPS ಅಂದ್ರೆ ಏನು? I was eating 4 idlis. Sirisha comes and she does. Then what I do? I share that what do you call profit with her. That is called dilution. It can happen for three reasons. So diluted EPS is formula same. Options. Numerator normally don't change. Denominator number of shares increase. Debentures. Numerator you have to add by net tax of interest. 100 lakh 10% interest itto. 10 lakh was the interest. I have to add back 7 lakh. Why? 30% the tax which is I am saving it. Whereas preference shares, if I am converting into equity share, add back the entire dividend and denominator increase by the number of shares. Whenever you do it in diluted EPS, if there are multiple things, not one or two questions, they are given only one or two. Multiple item quarter class, every topic I have covered there. So you have to prepare a table. First table can be in any order. It can be in any order. See where the EPS is getting diluted substantially. Increasing order. Table 2 nalli you have to write in the same ranking order. So assuming first it is 5 rupees per EPS, basic EPS, come down to 4.3, come down to 3.8, then again go back to 4.1. When it increases again, it is called anti-dilutive. The last reduction should be stopped. Benefit problem ado, Sapna? Okay. And the consolidation problem. That's extremely important. Disclosure ಬಗ್ಗೆ ಅತ್ಸಲ ಬರ್ಕೊಂಡಿದ್ದೀನಿ. Continuing, discontinued and total ತೋರಿಸಬೇಕು. Next, interim financial reporting. Same financial reporting of the year. If you do it for a less than a year, that's called interim financial reporting. Okay, it can be either the comprehensive one or condensed one. Condensed one is what is suggested, where you give for 3 months, 4 months, whatever. There are two views for presentation. It can be a discrete view or integral view. Each period is considered as an independent period. That's called discrete view. Whereas the entire year is considered 1 year, and then divided by 3, divided by 4 if you do. That's called integral view. Income tax, a commonly asked question, is always based on total year. Okay, divided by 3 months or 4 months. It's called weighted average tax computation as far as income tax is concerned. Okay, easy small standard. Yeah. One more beautiful standard, which has an impact everywhere. Impairment. Kara. Nandini, Nagarjuna, Sari, Tini, full one day party, kidney, one day open. The Kara continuous. You know better. Nandini Nagarjuna Timbeda, but Tumba Kara Timbed. Mate, Chetis are able to come on with them. Alvendra, right. So danger, anger is 1 liter shorter than danger. So if you eat Kara, one day body impact. Adekoskara, India's statistics is Kara. What's Kara? Carrying amount. Carrying amount
and recoverable
Value minus depreciation.
Deepa, you're answering very well, but still you'll improvement beko. Carrying amount, carrying amount is equal to carrying amount. Class
Yes, so
original cost minus accumulated depreciation minus accumulated impairment, accumulated depreciation bar amortization. Intangible. Accumulated depreciation bar amortization minus accumulated impairment is finished. So carrying amount of the building is 100. Recoverable amount today how much I can recover? 2 RMRs. Net selling price, that is sale value minus cost of sale, or value in use. That's what I can convert into today's value, whichever is higher. And you have to go in the same order. Carrying amount 100 lakh. Go with the selling price, because selling price is easily determinable. To future cash flow, net selling price, assuming carrying amount is 100 lakh. Selling price is 120 lakh. Stop, no impairment. So carrying amount is 100 lakh. Net selling price 90 lakh. Then only you have to go for value in use. Because if the net selling price is 120 lakh, why should I go for? Because 120 lakh or 0, which is higher is 120. 100 ginta just right. So carrying amount 100. So net selling price minus cost of sale, that is net selling price is 90. Value in use 95. Whichever is higher is 95. 100 is greater than 95. Remove greater than symbol. 100 minus 95 is equal to impairment loss. So when A greater than REA, CA minus REA is equal to impairment loss, which has to be debited to parent account. You have to do it for individual asset. If not for a CGU, cash generating unit, you have to do for cash generating unit. ಅಲ್ಲಿ ಗುಡ್ವಿಲ್ ಇದ್ರೆ ಫಸ್ಟ್ ಅದನ್ನ ಎತ್ತಾಕ್ಬೇಕು. ರಿಮೂವ್ ದ ಗುಡ್ವಿಲ್ ಫಸ್ಟ್, ದೆನ್ ಅದರ್ assets fair value, whatever the carrying amount they have, in that ratio you have to apportion the same. They can ask external indicator and internal indicator. Goodwill ಗೆ ನಾವು ಇಂಪೇರ್ಮೆಂಟ್ ಮಾಡಿದ್ರೆ ಅದನ್ನ ರಿವರ್ಸ್ ಮಾಡಂಗಿಲ್ಲ. ಅದನ್ನ ರಿವರ್ಸ್ ಆಗ್ತಾ ಇದೆಯಾ? ಫೈನ್. Depreciation is for PPE, amortization is for intangible, revaluation is for both, then impairment is for any asset which is mainly downward. Okay, so carrying amount or recoverable amount, notably carrying amount formula, recoverable fair value less cost to sell or value in use, whichever is higher. So then CA minus RA is the impairment. Indicator ನೋಡ್ಕೊಳ್ಳಿ. ಫಸ್ಟ್ ಗುಡ್ವಿಲ್ ಮಾಡಬೇಕು, then other assets. Goodwill cannot be reversed ಅಂತ ಬಡ್ಕೊಂಡಿದ್ದೀನಿ. Others in the same ratio you do it. And again, ಇಲ್ಲೊಂದು ಸ್ಪೆಷಲ್ ಮ್ಯಾಥಮೆಟಿಕಲ್ ಫಾರ್ಮುಲಾ ಬರುತ್ತೆ. Assuming that the reversal of impairment, normal depreciation, had you charged without any impairment earlier, the depreciation has to be charged. ಇನ್ನೊಂದ್ಸಲ ಹೇಳ. ಅಂಡ್ ನಿಮ್ಗೆ ನಿದ್ದೆ ಬರುತ್ತೆ, ಲೇಟ್ ಆಗುತ್ತೆ, ನಾನು ಸ್ವಲ್ಪ ಅರ್ಜೆಂಟ್ ಮಾಡ್ತಾರೆ, ನನಗೇನು ತೊಂದರೆ ಇಲ್ಲ. ಓಕೆ, ನಾವು ಓಲ್ ಲೈಟ್ ಬೇಕಾದ್ರೆ ಮಾಡ್ತೀವಿ. ಸೊ ಅಯ್ಯೋ ಶಿರೀಶ್ ಅವರೇ ಎಂತ ಮಾಡೋದು? 100 lakh is the cost of the asset, impaired and written down to 80 lakh. So 20 lakh is debited to P&L. ಅರ್ಥ ಆಯ್ತಾ ದೇವರು? ನೆಕ್ಸ್ಟ್ 80 lakh is the depreciation ಮಾಡ್ಕೊಂಡು ಹೋಗ್ತೀವಿ. Then subsequently the recoverable amount is 30 lakh. ಎಷ್ಟಮ್ಮ?
30 lakh.
30 lakh. So now what they say, so again we have to reduce it, no problem. Now ulta, when the carrying amount is 50 lakh, recoverable amount is 95 lakh. Can I bring back 45 lakh? Answer no. Had I not the first impairment, not done impairment, I would have charged depreciation on 100 lakh tane, but you cannot charge depreciation 80 lakh tane. So as if you have charged depreciation 100 lakh madbittu, what would have been the allurige matra you can bring it up, maybe 75 lakh. It cannot be brought up more than that. ಅದಕ್ಕೆ ಪ್ರಾಬ್ಲಮ್ ರೆಗ್ಯುಲರ್ ಕ್ಲಾಸ್ ಅಲ್ಲಿ ಮಾಡಿದೆ, ಈ ನೋಟ್ಸ್ ಅಲ್ಲೂ ಇದೆ. ಕೇಳಿಸ್ಕೊತಾ ಇದ್ದೀರಾ? ಅಟ್ ಲೀಸ್ಟ್ ಕಾನ್ಸೆಪ್ಟ್ ಯು ಆರ್ ಏಬಲ್ ಟು ಹಿಯರ್?
Yes, sir.
Yes, sir. Sir.
ಬೇಗ ಬೇಗ ಅರ್ಥ ಆಗುತ್ತೆ. ದೀಪ ಲಾಸ್ಟ್ ಇರ್ತೇವೆ, ರೈಟ್? ನೋಡಿ, ಅದೇ ಇದು ರಿವರ್ಸಲ್ ಕಾನ್ಸೆಪ್ಟ್. ಇದು ಬ್ಯೂಟಿಫುಲ್ ಕ್ವಶನ್ ಇದು. ಪ್ಲೀಸ್ ಡೂ ಇಟ್. ಯಾ, India is 37. Okay, provisions, contingent liabilities and contingent assets. Very simple and small. Provisions are is basically it's a liability of a uncertain timing and amount. Sharanya is my employee, 1 lakh fixed. It's an expense. So repairs for the TV, how many TVs will come back? I don't know. TVs will come back. How many will come back? I don't know. That's why it's the liability of the uncertain timing or amount. What is the liability? Present obligation, which involves outflow of economic resources. OA, nammade poe anta. You know, liability is what? OA, present obligation, outflow of economic resources. Whereas one of the condition is not satisfied here, it will become a contingent liability. Athava, if it is a possible obligation, also it will become a contingent liability. Kelskota idira? This standard very, very important. This is first para, very crucial. Relating exception, related executory contract apply agala, but onerous contract apply agate. Onerous contracts are basically loss-making contract. Executory contract andre neither of the parties have done anything, ಅಥವಾ both the parties have done equal. ಏನೋ ಈಗ ಸಂಜಯ್ ಮತ್ತೆ ಅವ್ನ ಹುಡುಗಿ ಇಬ್ರು ಐ ಲೈಕ್ ಯು ಹೇಳೋರು ಅಷ್ಟೇ, ಅಲ್ಲಿ ಸ್ಟಾಪ್ ಆಗಿದೆ. ಅದಕ್ಕಿಂತ ಮುಂದೆ ಹೋಗಿಲ್ಲ, ಯಾಕಂದ್ರೆ ಶೆಟ್ಟಿ ಸರ್ ನೋಡಿದ್ರು ಉಗಿದು ಬಿಟ್ಟು ಕಳಿಸ್ಬಿಟ್ರು. ಸೊ ದಟ್ ಇಸ್ ಕಾಲ್ಡ್ ಎಕ್ಸಿಕ್ಯೂಟಿವ್. ಎಕ್ಸಿಕ್ಯೂಟ್ ಮಾಡ್ತಾ ಇದ್ರು, ಅಲ್ಲಿ ಎಕ್ಸಿಕ್ಯೂಟ್ ಆಗೋಯ್ತು. ಏನೋ ಗೊತ್ತಲ್ಲ ಎಕ್ಸಿಕ್ಯೂಟಿವ್. ಅಥವಾ ಸೊ ಸಂಜಯ್ ನೋಡ್ತಾ ಇದ್ದ ಆ ಹುಡುಗಿನ ಇವ್ರು ಏನ್ ಹಾಯ್ ಬಾಯ್ ಹೇಳೇ ಇಲ್ಲ ಅವ್ರು. ಓಕೆನಾ? ಸೊ ದಟ್ಸ್ ಕಾಲ್ಡ್ ಎಕ್ಸಿಕ್ಯೂಟರಿ. ಮಾಡಬೇಕಾಗಿತ್ತು, ಕರ್ನಾ ಹೈ, ಎಕ್ಸಿಕ್ಯೂಟರಿ ಕರ್ನಾ ಹೈ. ನನ್ ಆಫ್ ದ ಪಾರ್ಟೀಸ್ ಹ್ಯಾವ್ ಡನ್ ಎನಿಥಿಂಗ್ ಆರ್ ಬೋತ್ ದ ಪಾರ್ಟೀಸ್ ಹ್ಯಾವ್ ಡನ್ ಐ ಲೈಕ್ ಯು ಅಂತ ಹೇಳುವಾಗ ಶೆಟ್ಟಿ ಸರ್ ಸಿಕ್ಬಿಟ್ರು. ಯಾಕೋ ಅಂತ ಹೇಳಿಕೊಂಡು ಓಡ್ಕೊಂಡ್ ಬಂದಪ್ಪ, ಒಳ್ಳೆ ಹುಡುಗ ಅವ್ರು. ಅರ್ಥ ಆಯ್ತಾ? ಸೊ ದಿಸ್ ಕಾಲ್ಡ್ ಎಕ್ಸಿಕ್ಯೂಟರಿ. ಏನೋ ಶರಣ್ಯ ಹೇಳ್ತಾರೆ ನನ್ಗೆ ಸಿಗ್ಬೇಕಾಗಿದ್ವಿ ಅಂತ. ಓನರ್ಸ್ ಕಾಂಟ್ರಾಕ್ಟ್ ಲಾಸ್, ಇಟ್ ಇಸ್ ಲಾಸ್ ಮೇಕಿಂಗ್ ಕಾಂಟ್ರಾಕ್ಟ್ ಅಪ್ಲೈ ಆಗುತ್ತೆ. ಎಕ್ಸಿಕ್ಯೂಟರಿ ಬರ್ಕೊಳ್ಳಿ ಯಾವ್ದು ಕಡೆ. India 37 NA ಫಾರ್ ಎಕ್ಸಿಕ್ಯೂಟರಿ ಕಾಂಟ್ರಾಕ್ಟ್. ದೀಪ ಬರೇ ಒಂದು ಅರ್ಧ ಗಂಟೆ. ದೀಪ ಅರ್ಧ ಗಂಟೆ ನೋಡಿ. ಅವಳು ನೋಡಿ, ಅವಳು ನಿನ್ಗೇನ್ ಕಿಸೆಕ್ಕಿದೆ? ನಮ್ಗೆ ಬೆಳಿಗ್ಗೆ ನಾಳೆ 7 ಗಂಟೆ ಕ್ಲಾಸ್, ನಿನ್ಗೇನ್ ಕಿಸೆಕ್ಕಿದೆ ಶರಣ್ಯ? ಅವಳು ಕಣ್ಣು ನೋಡಿ, ಮಲಗಕ್ಕಿದ್ಯಾ? ನೆಕ್ಸ್ಟ್ ಏನದು? 9 o'clock ಅಂದ್ಕೊಂಡೆ. ಇಟ್ಸ್ ಅಮೇಸಿಂಗ್, ಇಟ್ಸ್ ಗುಡ್, ಐ ಆಮ್ ಹ್ಯಾಪಿ. ನೀವು ಹ್ಯಾಪಿ? ಫಸ್ಟ್ ಐ ಶುಡ್ ಬಿ ಹ್ಯಾಪಿ ಅಲ್ವಾ? ನೆಕ್ಸ್ಟ್ ಏನಪ್ಪ ಅದು? Executory, not every executory, but applies to onerous contract. Onerous contract is also executory. onerous ಅಂದ್ರೆ ಒಣಸತ್ತು ಮಾರಾಯ. ಏನೋ onerous? Onerous contract ಅಂದ್ರೆ loss, where you expect a loss. Loss ಗೆ provision ಮಾಡಬೇಕು. Next. So obligating evating ಅಂದ್ರೆ ಏನು? Arises from the contract and no realistic alternative. ಹೇಳಿದ್ವಲ್ಲ ಕ್ಲಾಸ್ ಅಲ್ಲಿ ಆಶೀಶ್, ಗರ್ಲ್ ಫ್ರೆಂಡ್ ರೂಪವತಿ ಗುಣವತಿ ಎಲ್ಲ ವರ್ಕ್ ಆಗಲ್ಲ, ಡ್ಯಾಶ್ ವತಿ ಆದ್ರೆ ಆಗ್ಲೇಬೇಕು ಮದುವೆ ಅಂತ ಅಲ್ವಾ? ಅದು ದಟ್ ಇಸ್ ಕಾಲ್ಡ್ ಆಬ್ಲಿಗೇಟಿಂಗ್ ಇವೆಂಟ್. ಈ ಡಸಂಟ್ ಹ್ಯಾವ್ ಅನ್ ಆಪ್ಷನ್ ಬಟ್ ಟು ಮ್ಯಾರಿ ಹರ್ ಬಿಕಾಸ್ ದಿಸ್ ಈಸ್ ಡ್ಯಾಶ್ ವತಿ ಅಂತ. ಗೊತ್ತಾಯ್ತಲ್ವಾ? ಅದೆಲ್ಲ ಬೇಗ ಅದೆಲ್ಲ ನೆನಪಿರುತ್ತೆ ನನ್ನ ಮಕ್ಕಳಿಗೆ. ಸೊ ಕಂಟಿಂಜೆಂಟ್ ಇಸ್ ವಾಟ್? ಇಟ್ ಇಸ್ ಅ ಲಯಬಿಲಿಟಿ ವಿಚ್ ಇಸ್ ಎ ಪಾಸಿಬಲ್ ಆಬ್ಲಿಗೇಷನ್, ಅಥವಾ ಇಟ್ ಇಸ್ ಎ ಪ್ರೆಸೆಂಟ್ ಆಬ್ಲಿಗೇಷನ್ ಬಟ್ ನಾಟ್ ಸ್ಯಾಟಿಸ್ಫೈಯಿಂಗ್ ದಿಸ್. ದಟ್ ಇಸ್ ಕಾಲ್ಡ್ ಕಂಟಿಂಜೆಂಟ್ ಇವೆಂಟ್. ಅಸೆಟ್ಗೆ ಮತ್ತು ಲಯಬಿಲಿಟಿ ಡಿಫರೆನ್ಸ್ ಇಷ್ಟೇ. ಇಲ್ಲಿ ಖಾಲಿ ಪಾಸಿಬಲ್ ಅಸೆಟ್ ಹಾಕಿ, ಇಲ್ಲಿ ಪಾಸಿಬಲ್ ಆಬ್ಲಿಗೇಷನ್ ಹಾಕಿ. ಕೇಳಿಸ್ಕೊತಾ ಇದ್ದೀರಾ? ಅರೈಸಿಂಗ್ ಫ್ರಮ್ ದ ಪಾಸ್ಟ್ ಇವೆಂಟ್, occurrence or non-occurrence of the unfortunate based on the uncertain future events. Okay, so not wholly within the control of the management. Contingent provisions, you have to make a provision within the P&L, whereas contingent liability we should just disclose. Contingent asset normally it is ignored. However, if there is a possibility, then we have to make a point. It's a percentage only. Virtual is important. Virtually certain, it is no more a what you called contingent. Recognize it as a provision, whereas if it is asset, recognize it as an asset. More than 95%. Supreme Court has, Honorable Supreme Court has given a decision. You are going to win the case, 100 crore. Pass, receivable anta. 50 to 50. Idu virtually certain. 95. Idu bad madeko. Probable ಆದರೆ 50 to 95%. Contingent liability provision ಮಾಡಬೇಕು. Contingent asset ಅನ್ನು disclose ಮಾಡಿ. If it is 5 to 50%, contingent liability ಅನ್ನು disclose ಮಾಡಿ. Contingent asset ಯಾರೋ ನೀನು ಅಂತ ಬಿಟ್ಬಿಡಿ. Don't have to bother. ರಿಮೋಟ್ ಅಂದ್ರೆ ಬೋತ್ ಕೇಸ್ ಇಗ್ನೋರ್ ಇಟ್. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? ರೈಟ್. ನೆಕ್ಸ್ಟ್, ಫ್ಯೂಚರ್ ಆಪರೇಟಿಂಗ್ ಲಾಸ್. ಇಂಡಿಯಾಸ್ 115 ಕನ್ಸ್ಟ್ರಕ್ಷನ್ ಕಾಂಟ್ರಾಕ್ಟ್ ಮಾಡಬೇಕು. ಇಲ್ಲಿ ಮಾಡಂಗಿಲ್ಲ ಅನ್ಲೆಸ್ ಇಟ್ ಇಸ್ ಎ ಓನರಸ್ ಕಾಂಟ್ರಾಕ್ಟ್. ಲಾಸ್ ಮೇಕಿಂಗ್ ಕಾಂಟ್ರಾಕ್ಟ್ ಗೆ ಪ್ರೊವಿಷನ್ ಮಾಡಬೇಕು. ಯಾ, ಲೆವೀಸ್ ಅಂತ ಒಂದು ಪಾಯಿಂಟ್ ಇದೆ. ಲೆವೀಸ್ ಅಂದ್ರೆ ಇನ್ ದ ಲೈಸೆನ್ಸ್ ಫೀಸ್ ಎಕ್ಸೆಟ್ರಾ ಇಟ್ ಹಸ್ ಪೇಡ್ ಟು ದ ಗವರ್ನಮೆಂಟ್ ಫಾರ್ ವಿಚ್ ಯು ಹ್ಯಾವ್ ಟು ಮೇಕ್ ಎ ಪ್ರೊವಿಷನ್. India 28, ditto India 16. Only difference is it is a without physical substance. Wherever similar. Okay. Asset is defined, is resource controlled by the entrance based on the past event. Then monetary, non-monetary, same. Monetary andre which can be convertible into fixed or determined amount of money, which is basically cash, bank, debtors, etc. Creditors barathade liability. Intangible asset is INP, identifiable, non-monetary, without physical substance. Okay. Next, goodwill ಬಗ್ಗೆ ಎಲ್ಲ ಹೇಳಾಗಿದೆ. Accounting principles. Yeah. So research cost is always charged to P&L. Development cost is capitalized if traffic condition is satisfied. So there are 6 conditions which are to be recognized. Fair enough. And amortization method, either you can go by SLM or you can go by future expected cash flow method. You can do it. All other points are similar to India's. Traffic is India's 16. Traffic quantity dischargeable shape. India's 40. Investment property means land, building, or both, by the owner or lessee under ROUA. So it has to be recognized. It is investment property means LBP held for rentals or capital appreciation. It is always measured at cost. Revaluation is prohibited. However, fair value has to be disclosed within the financials. It is one of the PPE, but recognized under India's 40. India's 40. ಇದರ ಬಗ್ಗೆ question ಕೇಳೋರೆ. Last one, India's 41. Agricultural activity. Agricultural activity, other definition of biological asset, bearer plant, etc. Biological asset is valued at a fair value less cost to sell. Less cost to sell. Last 2 more small concepts. Okay. Integrated reporting is the reporting of how company thinks and does the business. Okay. There are 6 capitals here: IFM, HSN. So you have to present in a report. Okay. 6 items. Intellectual property, financial capital, etc. disclose ಮಾಡಬೇಕು. And integrated reporting ಅಲ್ಲಿ there are 8 items that to be presented. What is the overview of the entity? What is the ಇಲ್ಲಿ ಇದರ ಕ್ಲಾಸ್ ಅಲ್ಲಿ? Yeah.
Yes.
So objectives, overruns ಇಲ್ಲಿ ಇದೆ ನೋಡಿ. ಸೈಡ್ ಇದೆಲ್ಲ ಇದು ಗೂಬೆ, SPPR ಗೂಬೆ ಅಲ್ಲ. I know. So ಅದನ್ನ disclose ಮಾಡಬೇಕು 5 marks. Okay. It is not mandatory. SEBI has suggested top 500 companies to follow it on voluntary basis from 2017-18. CSR, 135 of the companies act deals with the same. Every company, including a foreign company. Profit, I told you to remember like this. Profit above crores. Turnover about 1,000 crore. Net worth above 500 crore. This you can go phase 1. This you can connect it to ಯಾವುದು ಇಂಡಿಯಾಸ್ ಇದು 500 crore ನೆಟ್ವರ್ಕ್ ನೆನಪಿದೆಯಾ? ಅಲ್ಲ profit above 5 crores, turnover above 1000 crore and above, and net worth 500 crore above, and they have to compulsory
Transfer
2% of the net profit what they earned the various CSR activities. Schedule 7 of the companies had gives various activities where you can do it like
the activity.
poverty, education, gender equality, etc. Income tax ಅಲ್ಲಿ CSR expenditure is not allowed under section 37(1). However, earlier sections ಅಲ್ಲಿ ಮಾಡಬಹುದು. It can be implemented through section 8 companies, CAPS foundation ತರ F foundations italics ಮಾಡಮ್ಮ F registered
Trust.
ಮಾಡಬಹುದು. ಗೊತ್ತಾಯ್ತಾ? Fine.
Yes, sir.
ಎಲ್ಲ ಆದ್ಮೇಲೆ ಒಂದು ಬ್ಯೂಟಿ ಮಾಡ. ಇದು ಬ್ಯೂಟಿ. ರಪ್ ಅಂತ ಸರ್ಗ ತೋರಿಸ್ಬೇಡ ಅಂತ. ಇಷ್ಟೆಲ್ಲ ಸ್ಟ್ಯಾಂಡ್ ಕವರ್ ಮಾಡಿದ ಒಂದು 3.5 hours ಅಲ್ಲಿ. ಇದು ರಿವಿಷನ್ ನಾನು ಹೇಳಿದ್ರೆ ಐ ವಾಸ್ ಇನ್ಸ್ಪೈರ್ಡ್ ಬೈ ಮೈಸೆಲ್ಫ್ MSc ಸೈಕಾಲಜಿ. ಒಂದು ಸಬ್ಜೆಕ್ಟ್ ಕಾಂಪ್ಲಿಕೇಟ್ ಇತ್ತು, ಅದನ್ನ 6 times I read. So first time 200 pages, next 100 pages ಮಾಡಿ ಲಾಸ್ಟ್ ಗೆ 2 page everything is available there. That's all, everything what we read in ಅಲ್ಲಿ ನಮ್ದು ರೆಗ್ಯುಲರ್ ಮೀಟರ್ FR ಎಷ್ಟಿದೆ 567 pages ಇದೆ, ಇಲ್ಲೊಂದು 100 pages 150 pages ಇದೆ. ಅದನ್ನೇ ಈಗ 2 page ಅಲ್ಲಿ ಹೆಂಗೆ ಇದು ಮಾಡಬೇಕು. ಇದು ಮಾಡಿದ್ರೆ you will be one of the top rank holder. India's 101 first time adoption of India's effects are to be given in the opening balance of reserve surplus. Share based can be equity or cash. Business combination acquisition method is followed. Goodwill total or partial goodwill. Acquisition method and common control. Common control method alli it is always taken to capital reserve. Barikolama capital reserve barbeku. Next 105 non-current is held for sale. Recorded carrying amount of fair value less cost to sell. Discontinued operation has to be disclosed. Financial instrument disclosure. Operating segment is 10% criteria, 75% criteria, ಅಥವಾ what you call management choice ಅಂತ ಹಾಕಮ್ಮ. And also the concept of CODM. Okay. Financial liability instrument and compound instrument split ಮಾಡಬೇಕು. Consolidated financial statement 6 103 correction ಕೊಡಬೇಕು. Joint arrangement ಇದು ಮಿಸ್ ಆಗಿದೆ, ನೋಟ್ಸ್ ಅಲ್ಲಿ ಆಡ್ ಮಾಡಬೇಕು, ನೆನಪಾಡ ಬೀಚ್ ನಾಳೆ. Jointly owned asset and jointly owned operations. You have to go by proportionate consolidation approach. ಇದು ನೋಟ್ಸ್ ಅಲ್ಲಿ ನೀವು ಆಡ್ ಮಾಡ್ಕೊಳ್ಳಿ. Proportionate consolidation approach. Disclosure time pass. Fair value ಎಲ್ಲ 3 related. OMM, then techniques are MIC, then levels hierarchy are level 1, level 2, level 3. Identical, similar and others. Then 115 copper conditions. 116 lesser only operating with finance lease ಇದೆ, where less in only ROEA. It has to be recognized at a present value of the ಅದು ಸರಿ ಮಾಡಮ್ಮ, ಇದು ತಪ್ಪಿದೆ. ಇದು ರೆಕಗ್ನೈಸ್ at lease liability plus ಅದನ್ನ ಇತ್ತಲ್ಲ ಏನೋ prepayment plus initial direct cost minus whatever. What is lease liability? Present value of the minimum lease payment. Okay. This is 116 last time. 117 is there insurance, but is not notified for you. Presentation of financial statement. Schedule 3, division 2 applicable. Going concern accrual consistency or fundamental accounting assumption. Inventory is valued at cost or NRV, whichever is less. Raw material is normally valued at cost only. Cash flows have to be classified under operating, investing, and financing. India 8. Accounting policies, retrospective effect. If there is a change, estimate prospective effect. Then errors have to be brought to opening balance of the reserves. India's 10. Adjusting and non-adjusting. Adjusting, you have to go back and pass the entry on 31st March. Non-adjusting, just disclosure if required. Okay, next, other ignore. India's 12. Taxable temporary difference in the debit balance, where the deductible temporary difference is the opposite. PPE, tangible assets, value at cost or fair value model, depreciation also discussed. Employee benefit, short term, long term. Long term, if it is a defined contribution, account like salary. Defined benefit scheme and Saptapadi 7 steps. India's 20 revenue grant to P&L, capital grant, reduce on the cost of the asset of the deferred revenue grant, then forgivable loans etc. also consider the grant. No capital approach. India's 21 functional currency, presentation currency and foreign currency, basically profit in any exchange difference taken to P&L account. Borrowing cost, incidental to qualifying as a ready to use has to be capitalized. Related party disclosure, control on them must significant influence on them only when there is a related party transaction. 27 ಇದು ಕರೆಕ್ಷನ್ ಮಾಡವ ಸೆಪರೇಟ್ ಫಿನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್. ಓಕೆ, ಅದು ಕನ್ಸಲ್ಟೇಷನ್ ಜೊತೆಗೆ ಬರುತ್ತೆ. ಸೊ ಇದು ಇಲ್ಲಿ ಬರೋದು ಬೇಡ. ಸೆಪರೇಟ್ ಫಿನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್, ದ ವರ್ಡ್ ಯೂಸ್ ಇಸ್ ವೆನ್ ದೇರ್ ಇಸ್ ಎ ಕನ್ಸಲ್ಟೇಷನ್. ಸೊ ಇಫ್ ದೇರ್ ಇಸ್ ನೋ ಹೋಲ್ಡಿಂಗ್ ಸಬ್ಸಿಡಿ, ಇಟ್ ಇಸ್ ಕಾಲ್ಡ್ IFS, individual financial statement. Where there is a holding subsidiary, separate financial statement, individually they are called separate financial statement. Investment in equities, ಇದು ಮಿಸ್ ಆಗಿತ್ತು. Investment in associates. Associates have to be recognized always by equity method. Equity method is nothing but a partner's capital. Myself and Sapna are partners in a partnership firm. In the partnership balance sheet, capital is shown on what is the capital balance shown is shown as an investment in my book. That's called equity method. Nenpidiya idu 2-3 point miss agide. Grishma tomorrow remind this. Yeah, ಬೇಕಾರೆ ಅಪ್ಡೇಟ್ ಮಾಡಿ ಕಳ್ಸೋಣ. ನೆಕ್ಸ್ಟ್ ಏನಾಯ್ತು 29 ಎಲ್ಲ ಹಾಳಾಗೋಯ್ತು. ಇಲ್ಲ ಸಿಲೆಬಸ್ ಇಲ್ಲ. 32 presentation again, disclosure. 33 basic and diluted EPS for continuing, discontinued and total operation. 34 is IFRS, complete or condensed approach with the discrete and integral view. 36 CARA, CA greater than RA, CA minus RA transfer to P&L account, goodwill no reversal. Then provision, contingent liability, contingent asset. Provision is OA anta. Contingent liability is present obligation not satisfying other conditions or the possible obligation. Asset is possible asset. 38 is intangible asset. INP. 40 is investment property. LBP always valued at cost model. Fair value is disclosed. And 41 is agriculture. Biological asset is valued at a fair value less cost to sell. Very reduction. Goodwill. Compulsory law. Compulsory law. One by one. Recognize only when it is acquired. Number 2, sorry, comma, comma, that too after accounting for any other identifiable intangible. All over here, any other identifiable intangible. Next, point number 2. No goodwill, no impairment, no amortization. Goodwill, no amortization. First one. No amortization. Next, goodwill only impairment. Next, no reversal of. Idella baribekama alli end keಳಗೆ. No reversal of impairment of goodwill. Next, no deferred tax on goodwill arising in business combination. Istu point correct register ಮಾಡ್ಕೊಳ್ಳಿ. No, deferred tax for goodwill arising on what? Business combination. 103. And now no depreciation. Income tax allu illa, ellu illa. Next, box hackers. If you give me on the 5 to 10 minutes, I want to just go through on July 20, 10:30 ಒಳಗೆ ಮುಗಿಸ್ತೀನಿ. ಕೊಡ್ತೀರಾ 10 minutes? ಕೊಡಲ್ವಾ? ಪರವಾಗಿಲ್ಲ, ನಾನು ಕೊಡ್ತೀನಿ. ಕೊಡಲ್ಲ ಅಂದ್ರೆ ನಾನೇನು ಮಾಡೋಣ? ನಾನು ಡಿಸೆಂಬರ್ 21 ಅಲ್ಲಿ ಅದರಲ್ಲಿ ಇದೆ, ಆ ಗ್ರೂಪ್ ಅಲ್ಲಿ ಇದೆ. ಬಟ್ ಜುಲೈ 21 ಎಸ್ಪೆಷಲಿ ಮೈ ಮೇ ಫ್ರೆಂಡ್ಸ್ಗೋಸ್ಕರ ಜುಲೈ 21 ಒಮ್ಮೆ ಜಸ್ಟ್ ತೋರಿಸ್ಬಿಡ್ತೀನಿ. ವಾಟ್ ಇಸ್ ದ ಕೈಂಡ್ ಆಫ್ ಕ್ವಶನ್? You seen it multiple time. The only reason why I want to go for again and again is 100 is the paper. I only teach DT. I will never assure anybody 100. Okay. FR 100 ಬರಬೇಕು. That's why repeatedly sync ಮಾಡ್ಕೊಡೋದನ್ನ. Okay. And by God's grace, ನನಗೆ ಗೊತ್ತಿರೋ ಪ್ರಕಾರ you will not get FR so well anywhere else in the world. Okay. ಅಷ್ಟು ಕಾಂಪ್ರಹೆನ್ಸಿವ್ ಆಗಿ ಮಾಡಿದೀವಿ, ಎಸ್ಪೆಷಲಿ ನ್ಯೂ ಸ್ಟ್ಯಾಂಡರ್ಡ್ IFR ಅಷ್ಟು ಸಿಂಪಲ್ ಆಗಿದೆ. ಅದರಲ್ಲಿ 100 ಟ್ರೈ ಮಾಡಿ. ಓಕೆ. DT ನಲ್ಲಿ 90 ಬಂದ್ರು ದೇವ್ರು ಬಿಡಿ, ಯಾರೋ ನಿಮ್ ಟೀಚರ್ ಅಲ್ಲೇ ಭೂಮಿಕಾ, ಯಾರು ದೇವರಾಗೋದು ಬೇಡ ಸದ್ಯಕ್ಕೆ, ಇಲ್ಲೇ ಇರೋದು. ದೇವರಾದ್ರೆ ಕಷ್ಟ ಆಗುತ್ತೆ. ಸೊ ಫಸ್ಟ್ ಕ್ವಶನ್ ಇಸ್ ಎ ಕನ್ಸಾಲಿಡೇಷನ್ ಕ್ವಶನ್. ದ ರೆಗ್ಯುಲರ್ಲಿ ಡನ್ ಕ್ಲಾಸ್ ಅಲ್ಲಿ ಮಾಡಿದ ಕ್ವಶನ್ ಇದೆ. ಇಲ್ಲಿ ಸ್ಪೆಷಲ್ ಪಾಯಿಂಟ್ ಟು ಬಿ ನೋಟೆಡ್ ಇಸ್ ದೇ ಸೆಡ್ ನಾನ್ ಕಂಟ್ರೋಲಿಂಗ್ ಇಸ್ ಮೆಜರ್ಡ್ ಎಟ್ ಫೇರ್ ವ್ಯಾಲ್ಯೂ. Fair value is based on the quoted price and they are given. That means you have to go by total goodwill approach. 6+2 steps. Artha aita? Just telling you what are the kind of questions ಇದೆ ಅಂತ. So ಇಲ್ಲಿ ಆನ್ಸರ್ ನೋಡೋಣ. ನೀವು ನಿದ್ದೆ ಮಾಡೋದು ಬೇಡ ಬೆಳಿಗ್ಗೆ. ಓಕೆ. ಸ್ವಲ್ಪ ಎಕ್ಸ್ಟ್ರಾ ಎಲಾಬರೇಟ್ ಮಾಡಬೇಕಾಯ್ತು, ಬಟ್ ಟೈಮ್ ಇಲ್ಲ. ಯು ಜಸ್ಟ್ ಡೋಂಟ್ ಗೋ ಬೈ ದಿಸ್ ಕೈಂಡ್ ಆಫ್ ಟೇಬಲ್, ಗೋ ಬೈ ಚಾರ್ಟ್ ಅಪ್ರೋಚ್ ವಾಟ್ ಐ ಪ್ರೆಸೆಂಟೆಡ್. ಸೇಮ್ ಆನ್ಸರ್ ಬರುತ್ತೆ. ಅಂಡ್ ಇಫ್ ದೇರ್ ಇಸ್ ಎ ಮಲ್ಟಿಪಲ್ ಹೋಲ್ಡಿಂಗ್ ನೋಡಿ, ಇಫೆಕ್ಟಿವ್ ಕಂಟ್ರೋಲ್ 85 and 60 ಅದರದ್ದು ಪರ್ಸೆಂಟೇಜ್ ಮಾಡಿಬಿಟ್ಟು ಮಾಡಬೇಕು. 51% ಇದೆ ಚೈನ್ ಹೋಲ್ಡಿಂಗ್ ತರ. ಕೇಳಿಸ್ಕೊತಾ ಇದ್ದೀರಾ? Is it visible, Baba? All of you? Swapna? Yeah.
Yes.
10% is non-controlling interest. Malt ಕುಡಿಯೋಣ. ಮಾಲ್ಟ್ ಕೊಡುತ್ತೆ. ಬ್ಯಾಂಗ್ಳೂರ್ ಮಾಲ್ಟ್ ಚೆನ್ನಾಗಿ ಸಿಗಲ್ಲ. ಬಾದಾಮ್ ಮಿಲ್ಕ್. ಓಕೆ. ನೆಕ್ಸ್ಟ್ ಸೆಕೆಂಡ್ ಕ್ವಶನ್ ಈಸ್ ಅಬೌಟ್ ಆಪರೇಟಿಂಗ್ ಸೈಕಲ್ ಬಗ್ಗೆ. ಓಕೆ. Is it such an easy question? They have only said operating cycle is 15 months. That means anything which is convertible, receivable in cash, within I went through the question. ಅದಕ್ಕೆ ನಾನು just visualize ಮಾಡೋದು ನಾಳೆ ಬೇಕಾದ್ರೆ ಮಾಡಿದಾನೆ. Less than 15 months ಆದ್ರೆ it is going to be current. More than 15 non current. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? ಅದರ ಬಗ್ಗೆ ಕರೆಂಟ್ ನಾನ್ ಕರೆಂಟ್ ಡಿಸ್ಕಷನ್. ಓಕೆ, ನೆಕ್ಸ್ಟ್ ಇದು ಕ್ವಶನ್ ಕ್ಲಾಸ್ ಅಲ್ಲಿ ಮಾಡಿದ್ದು. ಡಿಟ್ಟೋ ಕ್ವಶನ್ ಆಫ್ ವಾಟ್ PPE ಆನ್ಸರ್ ಹೋಗೋಣ, ಅಲ್ಲಿ ಗೊತ್ತಾಗ್ಬಿಡುತ್ತೆ. ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಪ್ರಾಪರ್ಟಿನ ಇಲ್ಲಂತೂ ಇಲ್ಲಿ. ಓಕೆ, ಸೊ the PP, whether it should be presented as a PP or what you call LBP. When an asset has been given it for earning rental or capital appreciation, it is a investment property, LBP. It should be measured only at a cost model. Revaluation prohibited. Fair value has to be disclosed. How many times I told you? All other assets come under PPE. PPE have to go by cost or revaluation model. Revaluation has to be done once in 3 to 5 years for the classes of assets. And nodi, look at the way definition of property. What is property? PP and ಅದರ ಬಗ್ಗೆ ಕೊಡಬೇಕು. ಯಾರು?
ನಾನು
ಈ ಕ್ವಶನ್ ಕ್ಲಾಸ್ ಅಲ್ಲಿ ಮಾಡಿದೀವಪ್ಪ ನಾವು. ಕ್ಲಾಸ್ ಅಲ್ಲಿ ಮಾಡಿದೀವಿ ಇದನ್ನ. ಓಕೆನಾ? ದೆನ್ ಇದು ಇಂಡಿಯಾಸ್ 115. ಇಂಡಿಯಾಸ್ 115 ಅಲ್ಲಿ ಹೌ ಡು ಯು allocate the price? Allocation and transfer. This question also we have done. Not same question, similar question, not same question. So the AC, if you remember, purchase price, installation charges and AMC. ನೆನಪಿದೆ ಕ್ಲಾಸ್ ಅಲ್ಲಿ ಮಾಡಿದ್ದು. ಅದೇ ಪ್ರಕಾರ ಟ್ರಾನ್ಸಾಕ್ಷನ್ ಪ್ರೈಸ್. ಸೊ ದೇರ್ ದ ನೆಕ್ಸ್ಟ್ ಕ್ವಶನ್ ವಾಟ್ ದೇ ಆಸ್ಕ್ಡ್. ಓಕೆ, ಪ್ರಾಕ್ಟೀಸ್ ಮಾಡಿ ಫ್ಲೋ ಬರೋದಿಲ್ಲ. ಪ್ರಾಕ್ಟೀಸ್ ಮಾಡಿಲ್ಲ ಅಂದ್ರೆ ಫ್ಲೋ ಬರೋದಿಲ್ಲ. ನೆಕ್ಸ್ಟ್ ಕ್ವಶನ್, ಇದ್ರದ್ದು ಯಾವುದು? P&L account. This is a beautiful question. Each one of you must do it. Okay, July 21. Okay, so July 21 question number 3. Beautiful question. This simple question. ಏನು ಫಿನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್ ಹೇಳ್ತಾ ಇದ್ದಂತಾನೆ, ಫಿನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್ಸ್ ಮಿಸ್ಟೇಕ್ ಇರುತ್ತೆ, ಅದನ್ನ ಕರೆಕ್ಷನ್ ಮಾಡಬೇಕು. ಇಲ್ಲಿ ಮಿಸ್ಟೇಕ್ ಕರೆಕ್ಷನ್ ಬದಲು ಪ್ರೆಸೆಂಟೇಷನ್ ಮಾಡೋರೆ. ಎಕ್ಸ್ಟ್ರೀಮ್ಲಿ ಬ್ಯೂಟಿಫುಲ್ ಕ್ವಶನ್. ಐ ಎಕ್ಸ್ಪೆಕ್ಟ್ ದಿಸ್ ಕ್ವಶನ್ ಡೆಫಿನೆಟ್ಲಿ ಇನ್ ಒನ್ ಆಫ್ ದ ನೆಕ್ಸ್ಟ್ 2-3 ಎಕ್ಸಾಮ್ಸ್ ಕಂಪಲ್ಸರಿ ಬರುತ್ತೆ ಕ್ವಶನ್. ಓಕೆ, ಅರ್ಲಿಯರ್ ಡೇಸ್ ಎಲ್ಲ ತಪ್ಪ. ಓಕೆ, ಇಲ್ಲಿ P&L ಎಲ್ಲ ಮಾಡಿದ್ರು ನಾರ್ಮಲ್. ನೋಡಿ, ಇದು ಬಯಾಲಜಿಕಲ್ ಅಸೆಟ್ ಇರೋ ಇನ್ಕಮ್, ಚೇಂಜ್ ಇನ್ ಫೇರ್ ವ್ಯಾಲ್ಯೂ ಆಫ್ ದ ಕೌ. ಸೊ ಇಫ್ ದೇರ್ ಇಸ್ ಎನಿ ಚೇಂಜ್ ಆಲ್ಸೋ ಇಟ್ ಇನ್ಕಮ್ ಅಂತ ರೆಕಗ್ನೈಸ್ ಮಾಡಬೇಕು. ಚೇಂಜ್ ಇನ್ ವ್ಯಾಲ್ಯೂ ಆಫ್ ದ ಕಾಫ್ಸ್ ಎಲ್ಲ ಮಾಡಿದ್ರು. ಫೇರ್ ವ್ಯಾಲ್ಯೂ ಆಫ್ ದ ಮಿಲ್ಕ್ ಇನ್ಕಮ್ ಮೈನಸ್ ಎಕ್ಸ್ಪೆನ್ಸ್ ಪ್ರಾಫಿಟ್. ಮತ್ತೆ ಚಿಕ್ಕದೊಂದು ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ ಮಾಡವ್ರೆ. ಸೊ ದೆನ್ ವರ್ಕಿಂಗ್ ನೋಟ್ಸ್ ಗೆ ಹ್ಯೂಜ್ ಮಾರ್ಕ್. ಲ್ಯಾಂಡ್ ಈಸ್ ನಾಟ್ ಕವರ್ಡ್ ಬೈ ಇಂಡಿಯಾಸ್ 41. The relevant side which apply in this example, land used for agriculture purpose is a PPE, but there is no depreciation on that. Gotta sir, they nimge
Non-depreciable assets.
Any cows is covered under India's 41. How do you marry the value the cows, Baba? Fair value
less cost.
Government grant, very important again. Okay, grant related agricultural activity. Nimma regular last batch notes nodi. Not subject to normal requirement of India's 20. Adu 41 alle cover agutte. So grant related to ಬರ್ಕೊಳ್ಳಿ ಬೇಕಾದ್ರೆ, grant related to agriculture is covered under India's 41 itself. It is not covered under what you call India's 20.
Sir, study material problem, sir.
Okay, brilliant.
Exactly, lifted from its study material.
Kind of questions will be repeated from there.
Yes,
Really,
sir.
but beautiful question alva.
Last question is in the set material.
Excellent. Milk. Okay. ಅದಕ್ಕೆ so July 21 ಬಂದಿದ್ದು. Then again impairment ಬಗ್ಗೆ ನೋಡಿ. Carrying amount, recoverable amount, one question has been asked. Impairment loss. Carrying balance, depreciation. Carrying amount is 150. Is recoverable is 120. 30 lakh will become the impairment loss. So the revised carrying amount is 40 lakh. ಅರ್ಥ ಆಗ್ತದೆ ದೇವರಿಗೆ?
Yes.
And you
Same problem we have done.
ಎಲ್ಲ ರಿಪಿಟೇಷನ್. ಅದಕ್ಕೆ FR ಔಟ್ ಆಫ್ ಔಟ್ ಬರಬೇಕು. ಲಾಸ್ಟ್ 4-5 ಕ್ವಶನ್ಸ್ ಮಾಡಿದ್ರೆ ಆಗೋಯ್ತು ಆಲ್ಮೋಸ್ಟ್. ದ ನೆಕ್ಸ್ಟ್ ಕ್ವಶನ್ ಇಸ್ ಇಂಡಿಯಾಸ್ ಯಾವುದು ಫಾರಿನ್ ಕರೆನ್ಸಿ. ಓಕೆ, so when you make a sale, you will be able to sales account. At the end of the period, you will be able to be reinstated by taking the closing rate. 60 rupees is the dollar beginning it. So next 61 idre 1 rupee has to be taken to the P&L account. Ellaru artha agta idya? Next consolidated. Next question number 4. India's 109 innu bandilva anta nodta idini. Mostly bantu nodi. 109 alli ಒಂದು ಟೇಬಲ್ ಮಾಡಬೇಕು. ನಾರ್ಮಲ್ ಪ್ರತಿ ಕ್ವಶನ್ ಇರುತ್ತೆ. ಇಂಟ್ರೆಸ್ಟ್ ಕ್ಯಾಲ್ಕುಲೇಷನ್, ಡಿಫರೆಂಟ್ ವೆರೈಟೀಸ್ ಆಫ್ ಕ್ವಶನ್ಸ್ ಇರುತ್ತೆ. ನೆಕ್ಸ್ಟ್ ಲೋನ್ ಎಂಟ್ರಿ ಮಾಡೋದು. ನಾರ್ಮಲ್ PUC ಎಂಟ್ರಿ. If you visualize your PUC entry also, you can pass these entries. Entries are easy, but SFM time value of money ನೋಡ್ಕೊಳ್ಳಿ. ನೆಕ್ಸ್ಟ್ either or ಅಂತ ಇರುತ್ತೆ. Either this question or that question. Okay, again one more requirement of India's financial liability disclosure ಬಗ್ಗೆ ಇದೆ ನೋಡ್ಕೊಳ್ಳಿ. ಮತ್ತೆ CSR ನೋಡಿ, ಈ ಕಡೆ ಚೂಡ್ ರಾಜಾ net worth greater than 500 crore. Then sales turnover greater than 5 crores. One of the conditions satisfied, you have to do the CSR. Other story ಬರಬೇಕು. ಕೇಳಿಸ್ಕೊತಾ ಇದೀರಾ?
Yes.
Next
Yes.
on EPS. Next question is on EPS. Just want to show you. So what is the profit that Patesh Made? Basic EPS number of diluted EPS andre. So tax impact of the debenture nodbeko, preference dividend. This is also very simple question, not complicated. Next note. Segment reporting presentation. Segment reporting. Others total. Adanna madbittu reconciliation. If sometimes they ask reconciliation. Disclosure require madbeko. Next. This is I think India's 116 ಅಲ್ಲಿ ROAC. Okay. So there ಯಾವುದು theory question on lease. Last question. That first question is on ದೇವರು ಕಾಪಾಡಬೇಕು ಏನಿದು ಫಿಕ್ಸ್ಡ್ ಓವರ್ಹೆಡ್ ಅನ್ನು how do ಇವತ್ತೆಲ್ಲ ಕೇಳ್ದಂಗಿದೆ ಸರ್ ನಿಮಗೆ how do you apportion inventory valuation ಗೆ fixed overhead should be apportioned based on actual
production.
Beauty of the CFL, they'll interconnect the standards. So India is 34 only. Each quarter only, how do you consider the same and disclose the same? Adra ಬಗ್ಗೆ story ಇದೆ. ಕೇಳಿಸ್ಕೊತಾ ಇದೀರಲ್ಲ? Thank you. Next, equity component and 109 again. Equity component and debt component. How do you segregate? Number of employees. Last one is I think recognition principle of India's business combination. Okay, how do you treat the business combination? Disclosure requirement of business combination. Okay, and last one nodi. So how do you compute the goodwill? So what consideration you have paid? Okay, consideration bid actually the ulta baridare road illi 1750 top al barabeku. They always present like this. 175 is the consideration plus total net asset is 2250. Differential amount is goodwill atha nimge minus barutte. ಕೇಳಿಸ್ಕೊತಾ ಇದೀರಾ? Follow minus.
Yes.
Purchase consideration 175 minus total asset 750 plus some intangible asset unidentified adana add madidre. So 2250 500 is the negative figure. Gain on bargain purchase which is ultimately transferred to capital reserve.
Capital.
Honestly, reasonably you know around 80-90%.
Yes, sir.
Yes, sir.
Enjoy the revision, Baba. How was
Yes.
it? Happy?
Yes.
Yes, sir. Entire FR.
What is the difference between you and me doing a revision? You andre as a teacher, you are non-great ಅಂತ ಹೇಳಿಲ್ಲ. I never said that. ನಿಮ್ಗೆ ಇಷ್ಟು ಕಾಡಕ್ಕೆ 3 days ಬೇಕಾಗ್ತಾ ಇತ್ತು. Because you sat with me, because of my legal compulsion, moral compulsion, constructive compulsion, ಹೆಂಗೋ ಕೂತ್ಕೊಂಡ್ರಿ. ಅದಕ್ಕೋಸ್ಕರ 4 hours ಅಲ್ಲಿ you could cover almost the entire FR. Almost reasonable. Speed at which you have done, in-depth is what you have done. I don't think you could have been able to cover by yourself by 3 days also. Artha aita? Enjoyed?
Yes,
So
Yes, sir.
I will say, I wasted 3 months anta. Regular class ಬರೆದು waste ಆಯ್ತು ಇಲ್ಲೇ.
Yes, sir. DT sir.
Division class only enough anta. Okay, so do it well, do well. Okay, so ಮಾಡಿ multiple time. You whenever is your exam, multiple time attend ಮಾಡ್ತಾ ಇರಿ whenever there is an opportunity. Don't be lazy, don't be influenced by some special breed ಇದೆ ಈಗ ಮಾರ್ಕೆಟ್ ಅಲ್ಲಿ. Some stupidly selfish nonsense breed ಇದೆ. ಅವರು ಹಾಳಾಗ್ತಾರೆ, ಬೇರೆಯವ್ರನ್ನ ಹಾಳು ಮಾಡ್ತಾರೆ. I'm just observing because our own students ಎಲ್ಲರೂ ಏನೋ ಆಗ್ತಾ ಇದೆ. You don't be influenced by that nonsense attitude. You will be focused, trust because ವೈಷ್ಣವಿ ಮೊನ್ನೆ ಪಾಸ್ ಔಟ್ ಸೆಷನ್ ಮೊನ್ನೆ ಇನಾಗ್ರೇಷನ್ ಸೆಷನ್ ಬಂದು ಹೇಳಿದ್ರಲ್ಲ ಸಂಡೇ ಏನಂತ. ಸೊ ನಮ್ಮ ಆಫೀಸಲ್ಲಿ ಬಂದವರೆಲ್ಲ ಕ್ಯಾಪ್ಷನ್ ಬಂದವರು ಫಸ್ಟ್ ಅಟೆಂಪ್ಟ್ ಅಂತ ಅಂದ್ರೆ ಬೇರೆಯವ್ರು ನಮ್ಗೆ ಗೊತ್ತಿಲ್ಲ, ಬಟ್ ಅವ್ರು ಹೇಳಿದ್ಮೇಲೆ ನಮ್ಗೆ ಗೊತ್ತಾಗತ್ತಲ್ವಾ, ಅದಕ್ಕೋಸ್ಕರ ಯು ಟ್ರಸ್ಟ್. ಓಕೆ, ಅಂದ್ರೆ ಎಲ್ಲರೂ ನಾನು ಫಸ್ಟ್ ಅಟೆಂಪ್ಟ್ ಹೇಳಿಲ್ಲ, ಬಟ್ ಕಂಪೇರ್ ಟು ಅದರ್ಸ್ ಅವರ್ ಪರ್ಸೆಂಟೇಜ್ ಇಸ್ ಆಲ್ವೇಸ್ ಹೈ, ratio is always high. Go ahead and enjoy. So I hope you enjoyed. So thank you very much. God bless you all. We'll meet on Thursday evening for costing.
Yes,
Thursday I will not be extending like this because I will not go too elaborative because the costing is too much through. You have to practice sums. Okay. FR like to your marks. Costing only unless you practice is waste. I go for conceptual knowledge. Maybe one question paper I will explain. Okay. So I may take around 2 to 3 hours. 3 hours something recording. You 3 hours ಕಿಂತ ಮೊದಲು ಬಿಟ್ರೆ ಖುಷಿ ಜಾಸ್ತಿ ಆದ್ರೆ ನೋಡಾಕರೆ. ಬಟ್ ಜನರಲಿ ಐ ಟೇಕ್ 3 hours for costing. That should be enough. DT next week ಅಲ್ಲಿ Monday Tuesday definitely not less than 7 to 8 hours. Okay. ನಿಮ್ಗೋಸ್ಕರ ಮಾಡೋದು ನಿಮ್ಗೆ ಬೇಕಾದ್ರೆ ನಾನು 2 hours ಮುಗಿಸ್ಬೋದು. That's okay. Left to you.